Welcome back to the Bitcoin Magazine News Desk. We are here at day 2 of Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Corva, Bitcoin journalist, joined by a legendary panel. To my left here, I have Hunter Albright, the Chief Revenue Officer at Salt Lending, as well as a man who needs no introduction, Peter McCormack, Chair of Real Bedford, as well as host of the Peter McCormack Show, and Christine Lee, crypto journalist extraordinaire. We have an action-packed day here at the event. We have Jack Mallers later on, Adam Back later on, a keynote from Saifedean Ammous, author of the Bitcoin Standard, who joined us here on the desk yesterday. But first, let's get down to business, talk a little bit about something we were just talking about off camera. Bitcoin conferences have surely changed over the years, the type of people who are coming to these conferences, right? Early on, we had far more of the cypherpunks, the libertarians, maybe the anarcho-capitalists. Now we have a lot more of an institutional side coming here, joining us at these events. Peter, we were talking about this earlier. Your thoughts?
Yeah, look, I think it's natural, but we've kind of lost our punk rock edge.
All right.
We were here. We were meant to get rich and go out and defeat the man, and we're now merging with the man. And we still live. I think we live in precarious times. We are not dealing with the issues of currency debasement, but we're working directly with the people who are debasing the currency.
Yeah, but this is what we've always talked about in this space, that we wanted mainstream adoption. We wanted more people using Bitcoin.
When you say we, who is we in your mind?
The community. The community. The community wanted folks to be using Bitcoin. They wanted global adoption. And so this is what it's looking like.
I think that's a fair point. Hunter, so if Bitcoin is to become ubiquitous, to be ingrained in every nook and cranny, every crack in society, is this the way it has to go at some point where the institution's destined to arrive here?
I do. I mean, I think we're seeing a shift from sort of early adopters that were passionate about the cause, passionate about sort of the broader movement with the technology.
Yep.
But and then I think the question goes, how do you sustain it over the long term, and how do you integrate it? I have seen, in terms of my experience with the conferences and also global exposure, I feel like it comes in, it starts with the movement, starts with some of the politics and sort of the cyberpunk sort of ethos, moves into, then I think you see day traders. Like, how do I make a quick buck quickly, because they see sort of the ups and downs and the interest in terms of building short-term wealth. For me, I think it's the people that have the long-term perspective, both from the infrastructure of the asset, of the technology, as well as the potential implications for everybody's wealth and just sort of financial outcome.
And Hunter, would you say you came from the world of traditional finance and you found your way to Bitcoin?
I did. I spent over 20 years running global credit card and loan portfolios, and so understand the convenience of retail finance, but also understand some of its weaknesses. And I think we were talking off camera early on about when you think about what Bitcoin brings from a sort of sovereign, sort of censorship-resistant ability to conduct commerce globally and have an asset, like that feels like more under threat in whatever country you're in, including the United States. And I think that may reignite some of the ethos about the fundamental why people came into Bitcoin to begin with.
I think there's a good segue there. Peter, you're living in currently in 1982, as we were joking, close to 1984 in the UK.
Soviet Republic of United Kingdom.
Soviet Republic of the United Kingdom. Things seem a little bit bleak from the outside. Please tell us what it's like from the inside, if you don't mind.
I mean, it probably looks worse on Twitter, but at the same time, it is terrible.
Okay.
We have terrible government after terrible government infringing on our liberties. They are arresting 30 people a day for speech. They are raising our taxes. They are destroying our economy. We are ruled by not just incompetence, but what I now think is just fundamentally evil, because there is no way you cannot understand that if you keep kicking the can down the road, you're debasing the currency. And it's the largest transfer of wealth that we have in our society, is from the poorest and the lower middle class up to the rich.
Yep.
And I'm out there, I'm arguing with people about this. I'm telling them, this is making me money. Like, I benefit from this. I'm an asset holder.
Yep.
But this is having a devastating impact. Businesses are closing down. People are losing their jobs. You go to a supermarket, you buy a bag of, you say groceries. It's like £50 is one bag. When my mum did the shopping, that was the whole trolley.
Right.
We are squeezing people in society. We're making them unhappy, and we're also taking away their future. And we're seeing a mass exodus of people from the UK now. Young people are going to Dubai because it's tax-free. They can buy a cheap house. Rich people are leaving. And I'm very nervous about the country we're going to have over the next few years. So, yeah, it's not great.
It's an interesting time. I think we're actually going to cut over to an ad break for just a second. Again, we're here starting things off with an all-star panel. Heading to an ad break. We'll be right back after this. Welcome back to the Bitcoin Magazine News Desk. We're here at the start of day 2 of Bitcoin Amsterdam 2025, presented by Treasury. And again, I'm Frank Corva, Bitcoin journalist, joined to my left, Hunter Albright from Salt Lending, Peter McCormack from the Peter McCormack Show, and Rial Bedford and Christine Lee, crypto journalist. We were just talking about Bitcoin being necessary to people all over the globe, maybe to people living under authoritarian regimes, to people in the UK, people facing currency debasement, wanting to be self-sovereign in some way. But let's touch into this concept of self-sovereignty. Peter, we were talking a little bit about this idea of, the 2017 class, the 2020 class, and this idea of being stewards for the next people who are coming into Bitcoin. Are we doing a good job of that right now? I'll start with Peter and come over to you, Hunter.
I don't always be negative, but no. I properly came into the space in around 2017, and Bitcoin had its version of the Iron Dome, which was technically and economically competent people who wouldn't let you get away with saying stupid shit. And there was a high level of technical debate. We had the block size wars, and there were stewards who would guide you through what was happening, what were the correct decisions. And that carried on to 2021. We had a new influx of people coming in again, technically, economically competent people. I don't feel like we've got that now at the moment. Some of the loudest and biggest voices in the space, I think their interest isn't aligned with what the original kind of libertarian ideas of fighting the man was. And so some of the technical debate has been lost. The technical debate doesn't seem to be so important now. If you're buying through an ETF, right, or if you're buying equities, maybe you don't even care about what Bitcoin is and why it's important. And I think that's why we've now got this kind of stupid Knots v. Core argument that's going on, because some of the technical arguments have been lost. And that's my fear for Bitcoin, is that the bigger it gets, the loudest voices might be getting their power through money rather than through competence. And so I think we need to somehow restore that Iron Dome of sensible people who are guiding people to understand why this technology came to exist, what it's for, what its purpose, how it works. That's my fear.
Yeah, you bring up the Knots argument that, back in 2016 or so, the Bitcoin community had an argument about the block size war. But you were saying off camera that seemed like a more logical argument in the community, whereas the Knots argument, this new potential hard fork, does not seem that way.
Soft fork, just to be technical correct.
Soft fork.
Sorry. Proposed soft
there
fork.
we go.
Well, look, back in 2017, you could understand both arguments for bigger blocks and smaller blocks. Obviously, the smaller blocks argument was the most important one because we wanted to maintain decentralization, and that was fine. But you could understand the arguments for bigger blocks. This argument, none of this makes any sense. The Knots people are retards. We should be ignoring them.
Here comes
spicy takes.
No, but they are. I mean, they've created drama, and I don't think it really is a technical argument. I think it is a power play. If you look at the people and the way they argue, they're like activists, like left-wing activists. They're harassing and group attacking people, but their arguments are completely retarded.
There's been a lot of ad hominem attacks, which are really sad to see, attacking people instead of attacking ideas, which is a shame. But Hunter, I want to come back to you. This idea, we were talking a little bit about this earlier, people not fully understanding Bitcoin, needing someone to sort of lead them into it, explain it to them. And I think you do a really good job of bridging this gap between understanding the Bitcoin ethos, but also understanding TradFi. So can you talk a little bit about your role and hopefully what other people in the space are doing?
And I got into Bitcoin through education. I'm an adjunct faculty member at the University of Colorado and got asked to teach the first course on Bitcoin back in 2017. And so really, I have a background as systems engineer, and so went deep in the tech. And as Peter was talking about, came in through understanding really the power of the decentralized architecture and the design in terms of what it enables, and the scarcity element, right? The self-sovereignty, censorship resistant. And I think what I see at conferences and more people talking about, they come into it because of what they look like, a quick buck in terms of something they can day trade, without understanding both Bitcoin as a asset class, hopefully to bridge the income gap that was referenced in terms of UK and I think more globally, but also the fundamental philosophies behind why we value the technology the way we value it. And how do you participate? I think we are only successful as an ecosystem if we have the level of participation, both in terms of education and stewardship of the technology, right? The technology is in our controls with the BIPs, being able to make recommendations about how the technology should change. Everybody does have a say in a vote how it can be evolved.
I mean, look, every time there is a war in Bitcoin, it's usually about power. It's just usually about power. And every time somebody has tried to take control of Bitcoin or take power for themselves, they've got chewed up and spat out. Because Bitcoin is an organic system, right?
And it doesn't belong to one person.
It doesn't belong to one person. So it's every single time it's failed. And this one will fail as well. And these people will be discarded and we'll move on. But what we have to do, we have to remember and identify who are the technically competent people and create that Iron Dome again and raise them up and make sure they're at the front of these conferences, on podcasts, and educating people of like the absolute basics of the technical infrastructure of Bitcoin and how it works and what it is we're trying to maintain and keep safe.
Yeah, absolutely. One of the things I'm curious, Christine, I think you wanted to jump in.
On that point of education, in the UK, they're focused on global identity. And so there seems to be a disconnect between the benefits of decentralization that a lot of government officials, maybe the public at large, don't understand. Where do you think that disconnect comes from, and how can that be resolved?
Well, sovereignty is more than just finance. I mean, you want sovereignty over your speech. We don't even have that in the UK at the moment.
Can I ask a quick question there?
Yeah.
Just to preface this, do you think everybody really wants it? Because I remember post 9/11 New York, where Patriot Act comes in, and everyone, just keep us safe. We're willing to give up some of our free speech. We're willing to give up some of our... Do you think everyone does really want sovereignty?
No, not everyone understands.
Okay.
And this comes down to education. I mean, our education system in the UK is mainly left. We spit most kids out of the school or the higher education system as left-wing activists because teachers, kind of the majority of teachers are left-wing. And that's, by the way, that's a complete failure of us to be objective. And there was a school group in the UK called Orion, and they manage 8 schools. They were teaching kids in their schools that the Reform, who are probably going to win the next election,
Nigel
are
Farage,
a fascist party, and that's bringing ideology into the schooling system. We shouldn't be doing that. Yeah. But it's a complete and utter failure also of conservatism. Like, if you're a libertarian, you're still kind of conservative. We have failed as conservatives because we have allowed cronyism to infect our governments.
Yep.
And if you allow cronyism, and all we're allowing is corruption and debasement. We allow debasement. You get kids who get an education who can't get a job, can't get on the housing ladder, and they're looking at the boomers who are having holidays, 5 holidays a year, and they're like, then they're buying into mandamis and the socialists. So, look, I think a lot of people, especially in the UK, they don't really understand freedom and liberty. They don't understand what they're giving up. They take safety, and then downstream they face the consequences of their freedom and liberty being taken away. And this is really important. Like, this sovereignty argument is more than just a financial sovereignty. It's sovereignty over you as an individual. I always look back at the Declaration of Independence, life, liberty, and the pursuit of happiness. If you read the Declaration of Independence, and if you go and read what the actual gripes that the colonies had with the king, they pretty match what we have with our government right now in the UK,
yeah.
and even some in the US. I mean, the fact that you kicked us out and the fact that you fought for liberty in your country and what you've allowed to come to exist is every single thing that they wrote about in the Federalist Papers is pretty much happening.
It's coming to life right now. Hunter, let's end on a positive note. Let's keep it optimistic as we head into day two. Your thoughts on where do we go from here? What advice maybe would you give to people out there who do want to be good stewards of Bitcoin and who want to make sure that they do teach people about this core tenet of Bitcoin, which is this idea of self-sovereignty?
Yeah, I mean, I think the first thing for me is educate people about why we value the asset and think it's a great asset class for sort of longevity. Secondly, encourage people to use it. I think getting people to put it on a wallet, spend it, transfer it is really important for people to understand that power. And then thirdly, I think bringing together some of the topics. It's important to understand how it creates, you have responsibility with the ownership. Okay. In terms of having it as an asset class, having it moving you from, I talk about it from helping people move from labor-based income to asset-based income.
Could you hold that thought till we come back? I just got word that we're about to go live on the main stage. If you don't mind, Hunter, sorry. But we will we'll come back to that when we come back live. Ladies and gentlemen, we are getting started here at day 2 of Bitcoin Amsterdam 2025. We're headed over to the Treasury stage to learn more about how miners access capital markets with Matt Williams and Nico Smid. Keep it tuned here all day. We'll be right back after this.
A protocol running silently, everlasting. It has no body, but it moves value across the earth. It has no voice, but it speaks in hashes. A language of pure mathematical truth. But pure information is weightless, a promise untethered from the world we can touch. A world we can trust. Years of neglect, rejection, and doubt created a storm too strong to defy, even by the most powerful giants.
My view is surging because there is a massive amount of manipulation. I think it's about
Bitcoin is a pure, Ponzi.
But for a storm to be harnessed, it needs an anchor. A bridge of trust built on old foundations in an entirely new world. A world where Bitcoin takes the spotlight, where the voice is returned to builders and financial democracy is empowered. This served as foundation of Treasury in its ambition to ignite the digital golden age. The market calls for an anchor, for a time and place to feel its unity, for physical manifestation of its ambition. The whispers become summons, a single point where the weightless finds its form. Here, the protocol finds its voice. Treasury finds its proof. Here, we are the code made manifest. Welcome to all who have gathered here, who have led the world to its digital golden age, who, against all odds, have never lost faith. Welcome to Bitcoin Amsterdam.
Bitcoiners. Did y'all get a good night's sleep last night? Amazing, because either way, this content we have for you today is going to give you some energy. Let's roll right into our first one, how miners access capital markets. For this panel, we have Matt Williams from Luxor Technology and Nico Smid from Digital Mining Solutions. Let's give them a very warm welcome.
All right, good morning everybody. I hope you had a great event yesterday, and I'm happy to see that the room is filling up, because I know that Amsterdam can be tempting and there were a lot of great side events. I'm Nico Smid, I'm the founder of Digital Mining Solutions, and we provide market intelligence and strategic advisory to miners. Whether small or big, we help them grow and establish in the industry. And today I'll be your host, and we'll talk about how miners can access capital markets. And the mining industry has been evolving a lot. It's not been too long, a bit more than a decade ago, that mining was really a niche hobby thing, and now we have a full-fledged industry. This year we crossed the 1 zettahash, which is a huge milestone for the network, because it was only about 5 years ago, a bit over 5 years ago, that the network crossed 100 exahashes for the first time. So crossing 1,000 exahashes or 1 zettahash, 10xing in a bit over 5 years is really impressive. And we've seen quite some growth over the past 3 years. So in 2023, 250 exahashes were added to the network. 24, over 290, and this year already over 300 exahashes were added. So it's very impressive to see where we've been growing to. And as the industry matures, miners need more sophisticated tools for financing, and that's what I would like to talk to you about with Matt today. We'll try to focus a bit on what kind of tools are available for private miners, because you can read online a lot about what the public miners do, how they leverage their equity and raise debt to finance their fleets. So today I want to focus on what kind of tools are available for private miners, and also include the financial markets that are developing surrounding hash rate. And who else can we invite for this topic than Matt, the head of derivatives at Luxor Technology. Welcome, Matt.
Thank you very much.
To kick off, Matt, maybe you can give a bit of a background of yourself. You've worked in the commodity sector, worked at CME in Chicago. So can you tell a bit more about your background and how this experience helps in developing the derivatives that you're having at Luxor today?
Yeah, thank you. So I've been in the commodities world pretty much my whole career. I started off as a natural gas trader in New York. Spent a number of years trading energy products, and then moved to Chicago and traded agriculture products. After that, I worked for the Chicago Mercantile Exchange, which is the largest commodity exchange in the world. And during my time there, I think you and I actually got into Bitcoin right around the same time. So in 2017, we had a corporate venture capital arm called CME Ventures. And our remit was investing in fintech technology, or financial technology. And at the time, that was all crypto. And so my boss came up to me one day and he said, all right, you got to go learn about Bitcoin, figure out what this is, because we're going to start making investments here. And I was very, very skeptical. I like to joke that I had the longest dissolving orange pill ever. It took me about 2 years to wrap my head around it. I was a trader. I believed in intrinsic value. Just couldn't wrap my head around Bitcoin. But I got it, 2 years later. And we launched Bitcoin Futures. So I was part of the team that launched Bitcoin Futures at CME. Spent 2 years at a regulator trying to teach the CFTC how to regulate crypto. It was the worst 2 years of my life. And then joined Luxor about 3.5 years ago.
All All right. Well, it's great to be studying Bitcoin on the bus's time. I think. A lot of people can experience that. So thank you for that introduction. There's many people that refer to hash rate as a commodity, and you having a background in commodities. Like, how do you see this? Does hash rate act as a commodity?
Yeah, I mean, I like to use the analogy. Going back to my experience in energy and agriculture. I view a hash rate as a commodity much in the same way as, a power plant produces megawatt hours or a farmer that buys seed and turns that into a bushel of corn. So I very much see a hash rate as a commodity. It's a quantifiable unit. 1 petahash is 1 petahash. There's supply and demand. It's a fungible asset. And obviously we've built markets around that are fully robust. So, I see it as a commodity. It produces Bitcoin, and yeah.
All right. Well, I already mentioned the incredible growth that we've been seeing, but I sometimes still feel that we're in early stages. If you look at the maturity of the industry, if you compare Bitcoin mining to other commodities, like where are we in the maturity curve?
That's an interesting question. I was giving this some thought this morning. If we're early, and I've been in the mining for 3.5 years, and it's felt like a lifetime, I don't know. I mean, I feel like we're actually fairly mature. Even in the 3.5 years since I joined, mining has evolved quite a bit. It used to be you could set up a mining operation anywhere. You didn't really worry about your power costs, your operational costs. This is couple halvings ago, so mining was super profitable, and with each subsequent halving that happens, it becomes harder and harder to mine profitably. So you have to evolve. So I think the maturity path of mining has evolved quite a bit just out of necessity. I think miners they have to be super conscious about what their costs are, what their power costs are, what machine costs are, because the margins are super thin and they're getting smaller. So I think it's actually evolved quite a bit, and we're seeing that both in the access that miners have to traditional markets now, and the way they're leveraging those markets.
All right. And historically, financing infrastructure like transformers, buying land, containers has been a bit more easier, let's say, than the ASIC hardware. Could you maybe explain why it has been difficult to finance ASIC hardware and maybe the changes that you're seeing in that perspective?
Yeah, so to give some historical context, we launched our financing product right after the crash in 2022. And at the time, miners had very little access to capital for growth. And when they got financing, it was almost predatory rates. They were getting like high teens, and that's even if they could get access to it. And the reason was traditional lenders had been burned pretty hard by that crash. Plus, Bitcoin volatility at the time was crazy. And, as I mentioned, miners' revenue, their margins are super thin. So it made sense that it was hard for them to access capital. But then, with the bull run, people have short memories. And so capital started flooding back in, and there was a huge impetus for growth in the space. And then, some creative instruments came, tooting my own horn, but we launched our lending product. Bitcoin-backed loans came into prominence, so it just flooded the market with access to capital, and we've seen historic growth because of it.
Uh-huh. You mentioned the volatility. Miners like to look at a metrics called hash price. I believe Luxembourg was even the one that came up with that metric. Hash price is the amount of revenue a miner can expect per petahash per day. And it's influenced by 4 factors, right? Bitcoin price, which hasn't been great, as I see on the sign there. Then block subsidies, transaction fees, and difficulty. And in previous halvings, we've seen hash price dropping after the halving because that subsidy got cut in half. but then recovering in about 200 days, I would say, and then spiking really towards the end of the bull market. After the 2024 halving, hash price has been behaving a bit different. It's been ranging between $40 and $60 per petahash, I would say. So that volatility is disappearing a bit. Do you think that a more stable hash price makes the space more investable? And do institutions perceive the risk of investing in mining differently now that hash price has been more stable?
Well, I'll take a step back. Like the volatility or the lack thereof that you're seeing somewhat is tied to transaction fees. We used to have a lot more volatility, especially after the halving. There was a ton of volatility just due to some of the stuff like ordinals that were being built on the Bitcoin network. That's kind of disappeared and dried up. So, that was a big driver of volatility for that. Obviously, Bitcoin price is a big driver of volatility for hash price, and that's been less volatile as well. To answer your question, does it make it more investable? I think it really depends on the investor's risk profile. Some people like the volatility.
Yeah.
If you're a hedge fund or a market maker, you probably want more volatility, so they're probably going to shy away. But institutional investors, for sure, it's more predictable, easier to model. So yeah, I would say that has driven a lot of our activity purely from the institutional side. But the degens and the gamblers of the world aren't very happy about it.
Yeah, I understand. And sure, we're missing those transaction fees. Those have been below the 1% of the total block reward.
We're going to need them at some point.
Yeah. You also mentioned the Bitcoin-backed lending. There's a lot of miners that have been holding on to their Bitcoin and putting them up as collateral to access liquidity or even finance their hardware. How do you see this evolving and influencing the financial options, let's say, in mining?
How do I see Bitcoin-backed loans evolving?
In the space. Yeah.
I gotta be honest. If you look at Bitcoin-backed loans in a vacuum, it's kind of weird to me that someone would put up 150 Bitcoin to borrow 100. But they do it because they're hodlers and they have the stack, and well, there's tax reasons as well. But I think the reason we're seeing so much of this is it's just easier for them. If you're sitting on a stack of Bitcoin and it's idle, you're not putting it to work, and you need to borrow against it, it's just easy to put it in a tri-party. You can still claim it on your balance sheet. So, it makes sense from a miner's perspective. You would never do that with fiat, which is what kind of blows my mind. But I think what's interesting and what's a good thing for miners is, with our product plus the Bitcoin-backed loans plus the other multitude of options that they have available, their cost of capital has been driven down quite a bit. So I mentioned when we first started, we were seeing cost of capital at like 15 to 18% for some miners, which is crazy. And now it's, in many cases, if it's Bitcoin denominated, you're seeing sub 8, sub 6. It's come in quite a bit, which has made it a lot easier for them to borrow.
That's a great development. I also understood that the amount of Bitcoin that's being offered is quite high, and the amount of dollars or stable coins available is lower, and that also drives down the interest price. I would like to move now to the derivative products that you offer. Luxor runs the largest hash rate forward marketplace. For those that don't know what a hash rate forward is, can you maybe explain what it is? Who are the buyers? Who are the sellers?
Yeah, so I apologize. It's early in the morning and you probably don't want to hear about derivatives the first thing when you come to this conference, but I'm going to try and make it interesting for you. Basically, what Luxor operates a hash rate derivatives market. And what that means is there's two main use cases for miners. One, they can lock in their revenue price anywhere from 1 month to 12 months in advance. And it's very much like a futures contract. So the analogy I would give, if you're a farmer and you're planting your seed now to grow corn, and you're worried about the volatility of corn price, you can say, I'm going to sell a future 12 months from now, lock in that price. So when you harvest that corn, you know exactly how much money you're going to make on it. That's exactly what we do in these markets. So as you mentioned before, we measure the revenue of a miner down to 1 petahash. So 1 petahash of hash rate has $1 or Bitcoin value that you can lock in advance. And so that's the main use case that we built these markets for. The secondary use case that we developed over the years is a financing tool. So basically, the way you should look at it is if you're a miner and you have, let's say you have 1 exahash of hash rate, you want to sell the future production of that, meaning like the Bitcoin that you would produce in the next 12 months and get that Bitcoin now, we facilitate that as well. So we basically give you an advance on your production up to 12 months. And so miners will, basically what they'll do is they'll sell that hash rate forward. We'll give them the equivalent value in Bitcoin now. They can use that to buy more machines to grow. They can use it to pay power bills. They can use it to fund a data center build out. And then what they do is they put that hash rate on our mining pool, and then they pay back daily through their mining rewards.
Yeah, very interesting. And the other day I participated in a workshop of yours, and you pulled up this slide in which you showed the trading volume, and it struck me that 2025 there's a huge spike in trading volume. You mentioned you launched during a bear market, but could you maybe elaborate why is that demand picking up and why are we seeing this this increasing volume in 2025?
I think it speaks to your question on where we're at in a maturity path for miners. So the first year and a half of my career at Luxor was just educating miners on what, most miners don't come from a traditional finance background. So we had to spend a lot of time educating them on what derivatives are, why they're useful, what hedging is, what the value is of that. And then over time, we've seen miners, start to hire people from traditional finance to manage Treasury, to manage their power costs. So I think the space is just evolving from an educational and experience level. And then also, just the pure demand for growth has necessitated these instruments. And so our lending product is that it probably equates to most of those numbers that you saw. We used to do very small trades that were like tens of thousands of dollars in notional value. Now we're doing tens of millions. And we used to have very small miners, and now we have all the way up to the biggest pubcos on our markets. So it's just been the growth of the space and the growth of our markets over time.
Yeah. Well, very impressive to hear those volumes.
Thank you.
So Luxor publishes a hash rate forward curve that shows the future hash price, what the market perceives as the future hash price. How accurate has this curve been? Is it too optimistic, too pessimistic, or just right?
I think it's been pretty accurate. So that curve that you're referencing, the forward curve in any market, and ours as well, is basically it shows where people are willing to buy a commodity and where they're willing to sell it. And the curve is basically the midpoint between those two. And so over time, you basically look at our markets, and we have people that show what they're willing to pay, next month or 12 months out. And so that's how that curve is generated. So we can say in November of 2026, we know where people are willing to buy hash price and where they're willing to sell it because they post these in our markets. Now, in order to do that effectively as a trader or an investor, you need to have projections on where difficulty is going to be, where Bitcoin price is going to be, and what transaction fees are going to do. And we actually provide a lot of this data to people for that modeling, and we do it ourselves as well. But to answer your question, I think it's actually been fairly accurate. We actually published a statistic the other day. Since the last halving, miners that have hedged since the last halving make 16% more revenue than those that didn't.
That's very interesting. Yeah, I think it's something that miners should look at, that this hash rate or hash forward curve. Because it's available on your website and you publish it in the newsletter, and even if you don't use the derivatives, I think it's interesting to just put next to your own forecasters, right?
Absolutely.
Another trend we've been seeing is that miners are pivoting to AI, HPC. which is very capital intensive as well, even more expensive to build out a data center for AI than for Bitcoin mining. So I was wondering, can miners that are pivoting also leverage or use the derivative products to finance those business lines?
Yeah, probably shouldn't say this at a Bitcoin conference, but yes, we are helping people transition out of Bitcoin into HPC. And it's basically the same mechanism. So let's say you're a miner and you just bought a bunch of ASICs for your data center, and you want to pivot in the next 3 years to HPC. Well, basically, we can facilitate you selling that hash rate forward, getting the Bitcoin now, using that Bitcoin to buy machines and build out your HPC data center, and then doing that over time over the 3 years. So basically, we can help people facilitate the end of life for their ASICs, sell that, the future rewards from that forward, and get the Bitcoin now to transition. And we're doing that for, I wouldn't say everyone's like pivoting out of HPC, they're just diversifying.
Yeah.
Some are fully transitioning, but a lot are just diversifying.
Yeah. But there's a lot of capacity that was reserved for mining going to AI, HPC. But I think it's not necessarily a threat. It's an opportunity for mining to become more decentralized as well. So I think that's a whole other panel discussion. But moving to the next question, we've seen tokenization of real-world assets popping up quite a bit for the last year. What kind of role do you see for tokenization of hash rate and ASICs?
In the 3.5 years that I've been doing this, I've seen probably a dozen attempts at tokenizing hash rate, and none were really successful. And I think the reason is it creates an unnecessary barrier to purchasing hash rate. I personally don't see the benefit in tokenizing hash rate. I think it's an unnecessary level of, I don't know, I just don't see the value. So I think the reason that we haven't seen mass adoption in tokenized hash rate is just, it's easier to just buy hash rate.
Gotcha. So for now it will be mostly stable coins that are on there.
Yeah, I don't know. That's my cynical viewpoint. Sorry.
Yeah. All right. Well, moving to the last question. If you want to finish this sentence for me, over the next 3 years, the biggest shift in Bitcoin mining will be?
I think you're already seeing it, and it'll be a continuation of this, but I think mining will shift to an energy-first, Bitcoin-second operation. We operate a lot in Texas, and what's interesting about mining, mining is a flexible load, meaning you can turn it on and off when it's economical, which is very different from AI HPC. HPC, you have to be on all the time and have redundancy as well. Mining's super interesting because if energy costs are low, you can turn it on, and as long as your energy costs are lower than your hash price, it's economical to mine. So you can mine when it's profitable and turn it off when it's not. And I think you'll see more and more grid infrastructures adopt a Texas or ERCOT-like mentality of flexible load. So I think you'll see mining will evolve into more energy. You're going to have to be an expert in power to be an effective miner, is my opinion. So you'll see larger scale companies like BP and Shell get into mining because they have cheap access to power and the expertise. And I think you'll see more and more adoption of that. And then I also think you'll see mining in areas where there's stranded energy, renewable energy. I just think it's going to evolve into more of an energy play than anything.
Yeah, I fully agree. I see that flexible load is such an important and unique feature that mining can offer if you compare it to AI HPC. So fully agree there. Well, I think we have 1 minute left, so I wanted to round up. I wanted to thank you, Matt, for all your insights. I appreciate it a lot. And I wanted to thank everybody here also for joining. I see that the room filled up quite a bit, so I appreciate that a lot. If you'd like to learn more about getting access to capital or learn more about the derivatives, Matt and I will be here. So feel free to approach us. And if you cannot find us today, you can always go to to the website of Luxor or Digital Mining Solutions, and we'll be happy to help you out. Thank you very much.
Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. We're kicking things off. We have a star-studded day ahead of us. We will have later on the main stage Adam Back, cypherpunk legend, as well as Jack Mallers, and everything will lead up to Saifedean Ammous presenting a keynote on why fiat is war and why Bitcoin is peace. But before that, let's get to our star-studded panel. To my left here, I'm Frank Corva, Bitcoin journalist, joined to my left by Hunter Albright, Chief Revenue Officer at Salt Lending, as well as the one and only Shinobi, technical editor at Bitcoin Magazine, and Christine Lee, crypto journalist extraordinaire. Hunter, we were just talking off camera about this concept that you've been thinking a lot about, this idea of, I think it's asset-based income versus or labor-based income. Please consider.
Yeah. I mean, I think the key problem that going around the world and talking to people about that are interested in Bitcoin, one of the key challenges they're facing is that they can't buy a house. They can't get into a first property ownership. And I think Bitcoin is a great vehicle for people to be looking at to start to build wealth. And one of the things I talk about is how they can go from thinking about labor-based income, like working hours to earn income, to acquiring assets such as Bitcoin to then earn income off the assets.
Okay.
And I think that's a real enabler for people thinking about how they can build wealth, but it does require them to take the responsibility to learn more about Bitcoin, learn more about the asset class, but also the financial literacy around how to manage it.
Appreciate that. I want to talk.
Wait, just want to add to that, because off camera we were talking about how you can create leverage off of that and you don't need that much necessarily to start with the Bitcoin lending.
I think and it's another topic we talked off camera. People have the misconception you have to buy a full Bitcoin. Right, I think we're not doing as much as we need to be doing around education to say you can get into it for as little as $10. Right, you can be buying small amounts, small numbers of Satoshis to start to understand how the asset works. And I think we were talking earlier about I encourage people to buy it, use it in small amounts, and then start to think about how you can leverage it, how you can borrow against it for liquidity. I really think Bitcoin, this is where Bitcoin for me is democratizing wealth building. It allows the strategies that the ultra-wealthy have been using for centuries in terms of borrowing against their real estate portfolios, their stock portfolios, to have an advantage of tax efficiency, to advantage of wealth building, and really deferring a lot of those costs while they get to use the capital now and really reinvest it. And I think that's something I'm really passionate about, trying to educate more people about, because Bitcoin can be a way of creating that financial independence and live around the world where, you know, if you're just earning income, you're really tied to where you live and the income and the laws of the country that you habitate in.
Appreciate that, Hunter. Shinobi, I want to go to you quick. I think we have about 30 seconds before we cut back to the main stage, but maybe some key things that Bitcoiners who are now coming into this space should really be keeping in mind. We're seeing a lot of financialization of Bitcoin, treasury companies, all this, but let's talk about a little bit about maybe 3 key points, maybe about the Bitcoin ethos that people should be keeping in mind.
Well, I mean, first of all, the entire purpose of this is to disintermediate yourself from all of these types of financial institutions and services. So first and foremost, like, you should be thinking about that and how to manage the risks entailed with that.
Self-sovereignty, holding your keys. Okay.
If you want to kind of go into the other financial ways that you can leverage or deploy or utilize your Bitcoin, that's a perfectly logical thing. But I think everybody should start first by just accumulating that small stack that they're not going to do that with, and kind of ease themselves into learning how to mitigate the risks that come with more advanced financial contracts or ways to deploy.
I apologize. I think we do have to jump back over, but that is important. First, get some Bitcoin, hold those private keys. All right, we're heading back to the Treasury stage. We'll be there for about a half hour. Stick with us. We'll be right back here at the live desk after this.
Because since 2017, we've been shifting from Bitcoin as magical internet money, peer-to-peer digital cash, to a store of value, an inflation hedge, digital gold. And that was massively successful. We've orange-pilled Wall Street. We've orange-pilled ETFs, BlackRock, Larry Fink. And even last year, Jerome Powell compared Bitcoin to gold. Bitcoin is like gold. And it's a good comparison. If we look at gold, there's a finite amount of gold in the ground. We can't really make more in an economic, feasible way. It's portable. I think 1 kilo of gold is worth around $150,000 or something in that price range. So I think here, in exactly this area, we can store all the gold that we've mined ever. Here it's like 22 meters by 22 by 22. Should fit. Gold is easily divisible. 1 gram of gold is still $150. I can give it to you, or to someone else. It's durable, it doesn't rust, it doesn't corrode. It keeps shining even after thousands of years. And it's fungible. You can melt gold. I can melt a gold bar and make a watch out of it, or I can melt a watch and make a gold bar out of it. And I can't trace what it was before. I can only trace that it's still gold. If we then look at Bitcoin, it's even better. Bitcoin is also scarce. It has also a finite amount, but we exactly know how much, 21 million. We also know when we reach the 21 million. We exactly know the supply scheme of Bitcoin. It's also even more portable than gold. Sure, a kilogram of gold is $150,000, but Bitcoin, we can send billions to the other side of the world. I don't even have to travel there. That's the beauty of a digital system. It's even more divisible. 1 gram, what's a gram? We need satoshis. We can go even further. We can go down to cents with Bitcoin. Bitcoin is also durable. Because it's digital, it doesn't rust, obviously. And it's fungible. So, what's the problem? If there was no problem, it would be a pretty short presentation, right? So I think we need to look at the system that actually guarantees that these properties stay these properties over time. You could call it the security system or the consensus mechanism, if you will. And with gold, it's passive. Gold security is on by default. And with Bitcoin, it's active. And I will explain to you what I mean by that. So gold is backed by Mother Nature, by the laws of nature, by physics itself. No one can change its melting point. No one can change its beautiful shining color. No one can change its density or the supply on Earth. I mean, we've been trying, but we can't. And no one can stop you from transaction or from transacting or doing transactions. Even if we want, we can't. On this image, you see alchemists trying to forge the philosopher's stone, which is a metal that you can combine with other metals, and then it becomes gold. We've been trying this for years. Yesterday, I saw the Winklevoss twins talking about asteroid mining. We've been trying, but until now, we can't make it happen. Bitcoin, on the other hand, is backed by the laws of man and math. So no one alone can change the supply of Bitcoin. And no one alone can stop you from transacting. But there's a slight difference here. So even if we want, we can't, changes to if we want, we can. And we've been trying, or maybe not we, but in 2017, the biggest companies in the industry tried to force a change on Bitcoin. And most of you will say, but Bart, that didn't happen, right? So if we want, we can. No, they didn't. But that's the point. It was an active process. It was active attack and defense. It was game theory. It was discussion with each other. So gold security is passive and physical. Bitcoin security is active and game theoretic. I think an image says more than 1,000 words. Behind me you see on the left gold bars somewhere in Fort Knox or another central bank, and on the right side you see Bitcoin miners. This just sits there for hundreds and hundreds of years and nothing changes basically. Sure, you have to secure it, but that's local. You don't have to secure it to support the network. With Bitcoin, there are electricity cords attached to all these miners. If you plug them out, there's nothing. It's an active process. It needs 24/7 energy to keep running. So Bitcoin's neutrality is an active emergent property that only exists if miners are sufficiently decentralized. So Bitcoin is digital gold if the game theory works, if mining is actually decentralized. So let's have a thought experiment. What happens if all the gold on Earth is mined? And some experts will say this could happen in 2050, 2075. It will happen at some point. Kind of simple. Miners will close their business. They will stop mining, sell their equipment, maybe go to recycling gold. And that's kind of it. Right? I can still sell you my gold. I can buy yours. We can still hold it. It probably even rises in value because the stock to flow actually becomes better. There's no supply anymore. So gold miners are producers. That's something important to understand. So what will happen if all Bitcoin is mined? And this will not happen in 2140. Sure, the last Satoshi maybe. But 97% of all Bitcoin will be mined in 2033. It's in 7 years or 6 years. So miners will close their business. No block reward means no profit. No new blocks are produced. And that means that you can sell or hold or buy new Bitcoin. You can't transact because there are no new blocks. Bitcoin miners are producers and maintainers of the network. They are the bookkeepers of the network. All right, but wait. I hear some of you thinking, this is not the whole story. You're cutting corners here. And that's right. Miners will still earn money. The block reward is subsidy and fee. But just as we heard in the panel before, At this point, the subsidy is 99% of the block reward. There are no fees. They also talked about the hash price. Stable. You could call it stable, yes, but if you look a bit further, it's going down. Miners earning less. The margins are getting thin. And that's not my opinion. I'm quoting the last panel with experts from the industry. So, okay, lower block rewards, less miners. But that won't stop new blocks from being produced, right? What about the difficulty adjustment? Every 2016 blocks, Bitcoin will adjust. And if the miners quit, Bitcoin will adjust. Tick-tock, next block, every 10 minutes. And that's true. But the difficulty adjustment is a mechanism for survival and not for security. It guarantees that Bitcoin survives, that there will be a next block. It guarantees that we can mine with one laptop if it's needed. But that also means that somebody with 2 laptops can attack the network. And that's something to remember. So, what will happen? A couple of scenarios in a world without block subsidy. Let's start with a positive one, the one that we all hope for. A fee miracle. Something will change. Maybe Michael Saylor and Larry Fink start to decide to actually use the blockchain instead of Coinbase custody, send their transactions, pay fees, and the miners can still mine profitably. So that's the other way around. Miners stay profitable without the subsidy. The security budget is large enough to incentivize honest mining. And honest mining means profit-driven mining. Miners that only care about money. They only care, and that's fine, they only care about the transaction that pays the most fees. It doesn't matter if that person is from Iran or Iraq or Russia or the United States or China or whatever. If you pay the fee and adhere to the consensus rules, you get into the block. Because it's the most profit-rational way to mine. And if you stop doing that, if there's no profit to be made, then it opens all kinds of doors and we lose the neutrality of Bitcoin. Another scenario, and I don't find this likely with the current state of Bitcoin and the institutional adoption, is that Bitcoin fails. Revenue falls, miners go offline, the hash rate decreases further, security decreases, FUD, people sell, the price drops further, revenue falls, and this goes on and on. Bitcoin becomes a niche. The difficulty adjustments make sure that Bitcoin is still alive, that there is a next block, but nobody's really using it and it can be attacked. Look at Bitcoin Cash, look at Ethereum Classic, look at Monero. If your hash rate drops low enough, you will get attacked at some point. And then the third one, corporate takeover. This is not a real quote from Larry Fink, but one I can imagine in a couple of years. Yeah, guys, turns out decentralization, censorship resistance, it was kind of inconvenient anyway. We were not really compliant anyway, so let's drop it. We will push the price of Bitcoin, compliant with regulation, a couple of small miners, or a small group of big miners actually, monopoly mining. But this means that the mining decentralization, censorship resistance, and permissionless nature of Bitcoin will drop. It will be good for our wallet, bad for freedom money. It's the New York agreement that I talked about earlier, 2.0. So I want to leave you guys with something. Bitcoin security requires perpetual work. And when the subsidy disappears, somebody must pay. And whoever pays, controls. So let's make sure that we, the actual users of Bitcoin, start paying those fees, that we are the one that pay. Because only when Bitcoin is used as peer-to-peer digital cash, it can actually become digital gold. Thank you for your time. Have a nice day.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin 2025, presented by Treasury. Vibes are high, though Bitcoin's price is dropping a little bit, but we're going to keep it optimistic on this all-star panel I have to my left. And again, I'm Frank Corva, Bitcoin journalist, joined by Mel Stickman, Director of Revenue Operations at BTC Inc., as well as Isaiah Austin, Social Media Coordinator for Bitcoin Magazine and the Bitcoin Conference, as well as Christine Lee, Crypto Journalist Extraordinaire. I'm coming over to Mel first. Mel, you're a big Amsterdam fan. You're a big fan of what you do. Tell us a little bit about what it's like to bring something like this together in a city like Amsterdam.
Something I love about having Bitcoin conference here in Amsterdam is that the people who either live here or are coming here are hungry to adopt Bitcoin.
Okay.
And it's small and humble, and it's only expanding from here.
Small and humble, 4,000, 5,000 people, I think, here. Again, managing something like that, the scope of it, how long does the planning take to get something like this together?
Years in the making.
Years in the making, ladies and gentlemen. All right, fair enough. Isaiah, you're doing the rounds here. Maybe kind of catching some stuff on the stages, seeing what we can post on social media. But something else to also consider, price of Bitcoin drop below 100,000. People tend to get a little bit salty at these moments. What are we doing to keep their spirits high via social media?
Yeah, well, Frank, I'm running around like a chicken with my head cut off here. There's tons of things to do, tons of video footage that we can catch all over the place. And tons of great speakers that are coming up. But I think what's important to remember is that, price, this is the 7th time this cycle that we've gone down by more than 20%.
Okay.
It's interesting. We have a very formal audience here compared to the United States. And I think people that, are used to risk on assets and dealing with these drops. And I think that this audience is prepared and understanding of where Bitcoin is ultimately going. And comfortable with it.
All right. Well, please, Christine.
What is the sentiment right now,
Great question.
Isaiah, pertaining to Bitcoin that you're seeing on the handle?
Yeah, absolutely. So I think it really differs from platform to platform. On LinkedIn, you're going to get more of like a formal audience, more people that are like, okay, well, this is a risk-on asset for us. Yeah, we're okay with it being volatile. Then on Instagram, we go down 5% and it's over.
Is that right?
It's over probably once every 2 weeks.
Interesting.
So we have to have a different strategy for talking to each audiences. I think the overarching strategy that we have to have is buy Bitcoin and hold for the long term. And if we have a different sentiment than those types of people who just want to see the price go up in a short-term period of time, will be upset over short-term periods because Bitcoin is volatile. It's a volatile asset.
And we got to manage those emotions via social media.
Exactly.
So, speaking of long-term, Mel, you studied here in Amsterdam.
Many moons ago.
I love that. We talked off camera a little bit about how it's kind of surreal for you to now be working for a company bringing you here. A little bit more on that, if you don't mind. What is it like to, again, be with such a big organization doing such important work here? Did you ever envision this when you were here? As you said, I think it was over a decade ago.
Yes, many moons.
Okay, so what is it like to be here, with that in mind, the fact that maybe you could have never imagined something like this?
When I think about dreams come true, I never in a million years thought I'd be working here, let alone orange pilling this entire region.
The masses.
Of the world.
Yeah.
And it's really powerful. And I think it's great to, see familiar places and a lot of new faces.
Yep.
And I think that old and new really resonates with me.
Okay. Isaiah, one of the things we haven't been doing enough, I've been told, is predictions. Have we seen the market top for this cycle? What do you think? And if we haven't, where are we going before the cycle is done?
Yeah, I don't know if you're familiar with the Pi cycle top indicator.
Okay.
That's been for me where I like to go as far as predicting the cycle. Not that it necessarily changes my strategy, buy and hold.
Yep.
But I think that, the Pi cycle top indicator is around 200,000 right now.
Okay.
That's where I would say that we probably top out this cycle.
Okay.
But again, it is a difficult situation, right? We are down under 100,000. I think some of us thought that we'd never see under 100,000 again, but we're here.
We are here. Isaiah, I don't mean to cut you off. I did get word that we do have to head back to the main stage to hear from none other than Brady Swenson, co-founder of Swan. He'll be talking about the cadence of civilization, Bitcoin, and time. I'm not even sure what that means, but I want to go find out. This is going to be a good one. We did have him on the desk talking about this, so we're headed over to the Treasury stage. We'll be right back after this.
All right. Hey, everybody. All right. Tick-tack, tick-tack, tick-tock, next block. So many of you have probably heard this phrase before. In fact, I know all of you have because Bart just said it in the previous presentation. So this started as the close to a tweet that I made on the occasion of Bitcoin's 600,000th block back in 2019. And over time, it became adopted by Bitcoiners as a meme to describe Bitcoin as an unstoppable force and to give a nod to its temporal nature. But there's more to this meme than it may seem. Every civilization has devised ways to capture time. We've built monuments to mark its passing, machines to measure it, and myths to explain it. From shadow to pendulum, from quartz to atoms, these innovations didn't just change how we keep time, they defined civilizations. To see how time shapes us now, let's return to when measuring the heavens became a way to manage the earth. The story of how humanity learned to keep time and how time in turn began to keep us. In Egypt, priests watched for the heliacal rise of Sirius just before dawn. It was the signal that the Nile's flood was near. Calendars fixed planting, taxes, and festivals to that star's return, turning sky watching into administration. Obelisks, shadow clocks, and nilometers tied heaven to river, ritual to routine. In Babylon, made time countable. Their base 60 way of counting gave us 24 hours, 60 minutes, and 60 seconds. Sundials and water clocks met tablets and contracts. Hours specified labor and deliveries and debts. Astronomer scribes kept logs and predictions, turning observation into schedules and obligations. Time entered the ledger, measured, divisible, enforceable. Monastic life ran on the rule book and the bell. Set times brought prayer, meals, and work into order. Early mechanical clocks, weights, and gears rang the hours. It marked the shift from nature's changing day to a mechanical, steady beat. A community kept in sync by sound while timekeeping organized daily life. And then navigation demanded a clock that could travel. The marine chronometer let ships hold a course across oceans. Greenwich gave a common reference for maps and schedules. In port, a new ritual appeared, the time ball, a great sphere hoisted high each day and dropped at the exact moment so that captains could set their chronometers by sight. In North America, towns once kept their own noons, setting their clocks by the sun's highest point in the sky. And this system resulted in a patchwork of over 144 different times, making coordinated travel and commerce nearly impossible. The advent of trains, which couldn't run safely or effectively with dozens of different times, forced a move to a standard time zone. The telegraph turned time into a signal, an electrical tick from the observatory's master clock, and wires carried noon across distance, so train stations synced to a shared beat, the start of truly networked time. Now this synchronization drove the entire modern world, as factory whistles carved days into shifts, punch clocks tracked minutes, and broadcast schedules taught nations to gather at once. Today, atomic clocks drive precision to the nanosecond, with GPS satellites and network time keeping phones, servers, and global commerce in perfect alignment. As historian Lewis Mumford noted, the clock, not the steam engine, was the key machine of modern civilization. New clocks don't just tell time, they fundamentally reorganize work, coordination, and the entire tempo of civilizations. Every leap in timekeeping has changed how we live. But today, for the first time, we have three fundamentally different clocks running our civilization. Natural time, the rhythm of earth and sky, the oldest clock written into the world itself, reflected in sundials and calendars. slow, cyclical, patient, the tempo of seasons and tides. Machine time, the rhythm of industry and computation. This emerged centuries ago and is measured by chronometers and atomic clocks, the whole range. The tempo is precise, but it accelerates with advancements in technology. The tempo of factories all the way to networks. And these two clocks have guided the modern world, one grounding us in nature, the other driving progress. Less than 2 decades ago, a curious new clock appeared. A clock that bridges nature and machine. Bitcoin time, a digital pulse secured by the fundamental laws of nature through proof of work. A sundial in cyberspace, approximate but incorruptible. Natural time keeps us human, machine time drives us forward, and Bitcoin time bridges the two. Together, these three clocks define our new temporal landscape, which in turn will shape how our civilization unfolds. For decades, the accelerating pulse of machine time has been the engine of fiat money system. Our entire global financial order, a system of instant, untethered digital creation, runs on machine time. They're a close philosophical match. A money system that must accelerate to survive, fused with a clock, a tempo that cannot stop accelerating. And why are they such an unstable combination? Because fiat money is untethered, it can be created from nothing, and machine time is fast. Its tempo enables this untethered monetary system to operate at a speed that is growing more and more disconnected with our natural time. And this unstable combination of fiat money and machine time introduces a deep source of quiet coercion as it actively erodes and overrides our slow-rooted human-scale time. So let's understand the lived reality of this quiet coercion. It compresses our future into the present. The engine of this compression is that unstable system. Your capital cannot rest. It's always chasing return, just to outpace its own erosion. This financial pressure creates cultural pressure. The business model of our modern information system, the 24-hour news cycle, the endless shorts feed, is attention harvesting for fiat revenue. These companies are on the same treadmill, forced to the same short-term quarterly targets. And machine time is the perfect engine for this chase. The same relentlessly accelerating algorithmic cadence that powers high-frequency trading is now used to harvest human attention. This is the untestable, the unstable feedback loop that has built the temporal rails pushing our civilization towards speed, reaction, and short-termism. When our entire financial and digital system runs on this unstable engine, instant becomes the default expectation. There's a deep psychological shift that affects everyone. It socializes impatience. The slow, steady, difficult work required by natural time, like saving, mastering a skill, building a family, pursuing a long-term project, belongs and starts to feel intolerable. This impatience isn't a personal failing, it's a mass cultural condition. It's the effect of this pervasive, quiet coercion. So this is the present that we find ourselves in the future that we are trying to avoid, a future where that unstable system keeps compressing our future and socializing our impatience and pulling us along on a relentlessly accelerating cadence, that quiet coercion consuming our natural time. This is where the genius of the third clock reveals itself. Bitcoin is not just an alternative money. It's the bridge to a human-scale cadence that persists within machine time. Satoshi had to solve the problems of machine time before he could solve the problems of digital money. In the Bitcoin white paper, Satoshi wrote that we propose a solution to the double spending problem using a peer-to-peer distributed timestamp server. In the original code, he left a comment that describes it in a more poetic and powerful way. He called it the time chain. And this time chain is brilliant. It maintains a immutable sequence of events required to make Bitcoin money work. But here's another moment of genius in the white paper. It's called the difficulty adjustment. Every 2016 blocks, about 2 weeks, the network measures its own speed. The clock is running too fast, the network makes the work harder to slow things down. If it's running too slow, it makes the work easier to speed things up a little bit. It provides a human anchor, a human scale anchor in the digital world. A steady cadence in a space that will only keep accelerating from us. And this is an act of reconciliation. This is the anchor that will allow natural time to coexist with machine time, which is precisely what allows us to reprice time itself. Now, Bitcoin reprices time by anchoring our economic calculations into a stable, provable clock in cyberspace. So in other words, Bitcoin the money. Bitcoin is the perfect fusion of time and money. In contrast to the fiat money and machine time combination, Bitcoin is a stable, temporal, and monetary system. It stretches our horizons by making tomorrow's purchasing power at least as real as today's. That shift doesn't command behavior, it invites it. It changes the incentive structure of our lives. The anxiety of now is replaced by the potential of later because you are anchored to a stable clock. This is the profound personal level change. A society running on the quiet coercion is a society of triage. A society running on Bitcoin is a society of ambition. One that has the stability to coexist with the accelerating pace of machine time. And Bitcoin creates margin. It restores the breathing room that quiet coercion destroys. It gives us a human anchor in the machine world. This is the freedom to reclaim depth, the freedom to choose mastery over metrics, to study something for 5 years without seeing your savings evaporate in the background. The freedom to hold a season for grief, for parenting, for creating without the tax of urgency. It's the power to say not yet. It's to the rush deadline, or to refuse the short-term extraction in favor of long-term craft. The freedom to say no is often just what you need to actually get freedom. The quiet coercion of that unstable system devalues what is slow by nature. Childhood, apprenticeship, topsoil, forests. Everything that requires patience are the first things sacrificed in a high time preference economy. Bitcoin flips the gradient. It makes slow things investable again. Bitcoin time protects the slow. It's a shield that guards the space and time for what is truly human to take root, allowing us to nurture our lives at a natural pace. The quiet coercion forces local economies to be extractive, to compete for restless capital that must be paid back now. It starves the commons. Bitcoin time allows capital to sit still, waiting for real, patient return. This makes the slow, trust-based structures like commons, cooperatives, and guilds viable again. Suddenly, the 18-year project that changes a town becomes fundable, not just the 18-week version to hit a quarterly budget. This is how a community stops surviving year to year and starts building for the century. The dominant incentive created by the quiet coercion is churn, to replace what could be repaired and chase the quarterly target. Bitcoin incentivizes durable goods, repairability, and long-term reputation to begin to outcompete that churn. Culture thickens. The slow weave of human life, festivals, art, music, story no longer needs to fit in the cracks left by commerce. Anchored by Bitcoin time, our culture can coexist within machine time, not be consumed by it. Traditions stop bending to retail calendars and start rooting themselves in place and meaning again. Artists can take decades to finish a work. Communities can sustain rituals without sponsorships. And celebrations can once more mark the seasons rather than the shopping cycles. Culture regains density, patience, and memory. And there's a subtler, deeper layer. Conscience requires time. To act ethically, you need a horizon spacious enough to allow you to care. Short horizons breed excusable neglect. Long horizons reawaken duty. Bitcoin won't build utopia, but it removes the quiet coercion that keeps us from even trying. We stand at a unique moment in history. We have a new clock, a clock that bridges machine and natural time, a new clock for a new civilization. TikTok, next block. Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, powered by Treasury. We're kicking off day 2. I'm Frank Corva, Bitcoin journalist, joined by none other than Michael Markle, the medium of exchange at BTC Inc. This is the man. When you come here and you want to buy some BTC Inc. gear, maybe some Nakamoto gear, this is the man you are handing over your dollars, euros, sats to. But let's talk a little bit about those sats. How many people come to you, Michael, and say, I'm here at this Bitcoin conference, I'm ready to spend my sats because Bitcoin is a medium of exchange, and I want to give you some sats in exchange for maybe that nice hoodie you're wearing right there. Is that a frequent occurrence at the merch desk over there?
Yep. I've always looked at our merch desk as a case study of what a hyper-Bitcoinized world will look like in the future. So first off, dude, I just want to say it's an honor to share the desk with you, man.
Oh, man, thank you, my man.
So,
honor to have you here. Yeah, but please tell me, what does that mean, a case study for what a hyper-Bitcoinized world looks like?
Sure. So I believe, no moon until medium of exchange.
Okay.
I think Bitcoin is money. Like, it's literally in the first sentence of the white paper, peer-to-peer cash.
Yep.
Don't even have to get that far into the white paper. So I believe if sats don't flow freely, we failed. And it's very refreshing right now because we're on this, I think it'll be a 30-year journey from stage 1 of Bitcoin to stage 4.
Okay.
And I think that journey will take about 30 years,
okay.
And we're 16 years in. And I think we are going from stage 2, the store of value, to stage 3, the medium of exchange. And it's very refreshing, and I've never been more bullish.
Okay.
And, yeah, just a good time to be in Bitcoin.
Appreciate that. We were talking a little bit off camera about the importance of what Block just did, right? 4 million Block merchants, they can now accept Bitcoin. And really cool stuff like even if the person paying for the object doesn't have it, they just have fiat, but also want it to be transferred to Bitcoin as part of the payment, they can do that. Really, really cool technology. Is this going to accelerate this idea of Bitcoin as a medium of exchange?
I think absolutely. Like, shout out to the entire Square team.
Big time.
When they demoed their product at our conference earlier this year in Nashville.
Yep.
That was truly their case study to pretty much be like, we need to roll this out by end of year. I'm actually really surprised that they did it. Like, you guys are absolutely crushing it. And yes, I 1,000% this is going to hyper Bitcoin us much faster than a lot of the previous conversation in Bitcoin.
Okay.
I know recently the conversation's really been dominated by the financialization of Bitcoin. And I love treasury companies. Anything.
It's part of the spectrum,
anything
right?
in Bitcoin is good.
Right.
But to me, that's almost another signal that we are now moving on to that next phase of it being money.
Yep.
And yeah, if you ask anybody, a common person or a normal person, their rebuttal that I can never respond. Well, I can't go pay gas with Bitcoin. And
right.
It's like, yeah.
Some of that's changing pretty quickly at this point. And just a quick thing, just to recap for the audience following at home, in Nashville this year, we set a Guinness World Record and what was the total amount of transactions that we had in Bitcoin for that?
It was 4,187.
The most Bitcoin transactions in one day. So, ladies and gentlemen, we're actually prepping to get back to the main stage, the Treasury stage. We're going to be hearing from Joe Lasnet, Dennis Van Beert, Simone, hard name to pronounce, I apologize, and Lucas Covanda. They'll be talking about bridging the gap between Bitcoin, banks, and regulation. Headed back to the Treasury stage. We'll be back here at the live desk after this.
Good morning, everyone. I'm very excited to be here today. We have a great panel, so this will assure us a great conversation about bridging the gap between banks, Bitcoin, and regulation. Please welcome our great panel members here today. First of all, we have Lucas Cavanda, Chief Economist at the Trinity Bank. We have Simon Lelyveld, a legend in the regulatory field, famously known for the DNB case that he won in 2021, which set the precedent for the crypto space in Europe. And Dennis van Beets, working at Van Lanschot Private Banking, specialized in wealth management. Welcome, everyone.
Good morning.
First of all, I want to talk about the fact that we all have a personal view here today. What is your personal perspective on bridging the gap as of today? Maybe, Dennis, can you tell me some more about this?
Yes, definitely. For us as a wealth manager, as a private bank, we have seen that our clients really want exposure to Bitcoin. And you can imagine that for a bank it's difficult because there's still a lot of people that don't understand Bitcoin. But purely the request from the clients makes it for us very clear to say that we have to facilitate them. So as one of the first private banks in the Netherlands, we start to give our clients access to the ETPs, which is of course a little bit boring, but it's, I think, the first step. And I think you have to start with the first step to advance and educate, because that's basically the whole thing.
Yes, definitely. I mean, the developments are still going. As you said, it takes many layers through the bank to get there where we are today. However, also from a regulatory perspective, Simon, a lot has changed over the last years. Can you maybe elaborate a little bit on your perspective there? Is it moving in the right direction, or should we steer it a lot?
Well, so if I take my starting point, it's 1996, eCash in Amsterdam, working at the Dutch Central Bank and having a look at what's happening here and checking out the security and whether that's okay. So that's where we're coming from. Central banks and banks have been adapting, have been understanding the technology. I've been working at the central bank, at ING, at fintechs, and at Bitonic, a crypto company. So I'm sort of the personal, my person has the bridge, or is the bridge in some sense, because when there's a case, a regulatory case, you need to understand the rules, but it's always about persons. So in the Netherlands, it's a small country, so you know each other. So it sounds big, of course, that you win a battle against the central bank, and it is big, but it's also personal. So there's a personal gap. You are with former colleagues on the other side, you have a disagreement, and you try to play that out properly using the rules of the game. And I think bridging the gap is very much not just a legal fight, but also a fight of personal understanding and respecting each other's views and viewpoints rather than fighting. And I think if we do that, banks can learn from Bitcoiners, Bitcoiners can learn from banks, and everyone can innovate. And my view as a compliance perspective is, of course, let's play by the ground rules, the constitutional human rights. Those are the foundation, and let's not be too intrusive when it's not necessary.
Yeah, exactly. And what about Lucas? Like, it's still very much in the beginning, I think, from your perspective. Perhaps you've written a lot about this development. Can you maybe share your views, maybe more from the Czech side of the market? I know there's like differentiation between regulation, even though there's a level playing field being introduced. Maybe I'm keen to hear your perspective on this.
Good morning. Good morning. Great to be here. And I'm from Czech Republic, as you said rightly. And the situation in Czech Republic is quite paradoxical because our national bank, our central bank, is more open to Bitcoin than our commercial banks, our traditional banks. So it's quite paradoxical situation, as I said before. And just yesterday, our central bank has announced that it would start a kind of testing portfolio with an investment in Bitcoin. It's around $1 million. But still, it's, I think, quite pioneering situation, something which is not very common amongst central banks. I think we are
we do not see many central banks that would include Bitcoin in their foreign exchange reserves, which is still not the case in the Czech Republic, but the governor of the Czech National Bank has also said that it's his plan to bring Bitcoin into foreign exchange reserves. So probably we would be the first country in the European Union to have this. Unfortunately, when it was firstly said that there is such a plan in our country, European Central Bank has warned us that it's not a good idea. So we as a Czechs are more open to Bitcoin in our reserves than for example, ECB. So this one interesting thing for my side. And second, as I said before, central bank in our country is more open to it than commercial banks, which is really something that I think contributes to the fact that we are lagging behind United States, because United States are more open on many levels to Bitcoin, ETFs, BlackRock, and so on, than we are. So we are too conservative.
But for example, do you provide bank accounts? Because as a founder of a Bitcoin company, so we're a Bitcoin company here in the Netherlands, I still have, in some of our entities, we don't have bank accounts. So this was always the problem that we face as a Bitcoin-only company, is like no one is willing to provide us bank accounts, and we need to go very far.
Yeah, the situation is perfectly the same with us in Czech Republic. We have all those many companies that really change the Bitcoin world. For example, we had in 2012 first mining pool in Prague. We had also the Satoshi Labs Trezor hardware wallet, like first in the world. But our banks, Czech banks, are really very suspicious about anything which is connected to Bitcoin. So you cannot have your own account when you are doing business, when Bitcoin is involved. Probably it will go better right now because of MiCA and other regulations, but the situation is still terrible, and I think it's common all around the European Union.
Like, there's now the scene is changing, so
yeah, I agree with you.
We're now beyond the point that there's only bank accounts needed for these companies. We're now looking at issuing Bitcoin-backed bonds and loans and more mortgage mixes. Maybe also for Simon, because I know that you're a specialist in the regulatory side of this. We've seen this trend of, for example, payment service providers booming over the last 10 years. Yeah. Now there is e-money institutions and neobanks popping up everywhere. What is this dynamic gonna bring us in the next 5 years?
Okay, so you cannot look at the history to predict the future, but let's still do it. Because Bitcoin is one in a stage. We had in Europe the payment service providers as a specific niche. We had e-money institutions as a niche, where the UK was a center of e-money organizations until the Brexit. We had crowdfunding, lending platforms. So the emergence of new technologies and the adaptation of regulations is something that has a usual curve. The curve for Bitcoin is slightly different because it's been criminalized in the early days. So it's tougher for Bitcoin companies and Bitcoin business models, or the newer business models, because we still have this history of criminalization. But I think we're now at a mature stage where we're moving on, where we're dumping the old stuff. I mean, all the rules are there. We're all set to go in Europe, and we come from a time in the Netherlands, for example, in 2014, there was an informal message of the central bank to companies, to banks, saying, don't do it. So no Dutch bank was going to touch Bitcoin. Now, I think right now with the European legislation, it's all said and done. We can move forward. Let's stop the criminalization part. Let's just see it as a regular business as it is, and start using all the tools we have.
So what do you think is going to be more successful? Turning a traditional bank into, let's say, a Bitcoin bank, or a Bitcoin company into a Bitcoin bank?
I think there's only a few banks that could pull off entering the space properly. They may want to do so, but it's extremely hard for a bigger bank to step into the new space. And you can see, for example, the example of Adyen, the payment service provider, started out as a payment service provider, became a bank. You see the same with Molly. So you see the innovation, the movement from a smaller startup with a specific license towards a bank is more often seen than banks stepping successfully into the fintech niche.
Cool. But, and what about Dennis? Like, because from a wealth management perspective, I mean, I think it's a no-brainer that everyone should consider a percentage allocation to Bitcoin. However, we're seeing ETPs and derived products. Do you ever foresee a position where you're allowing deposits of actual Bitcoin and people are able to withdraw their Bitcoin in their own ways?
Yeah, definitely, personally, but it will take some time. And this is interesting to explain because I feel a lot of people say, well, it's going too slow. And maybe not everybody realizes that within an institution like, say, our wealth manager, we've been around since 1737, we're still here. That means we're very good at managing risk. But that also means we have a lot of people managing that risk all the time. And so it takes a long time to go through all these people and all these commissions because they all have to agree that we go on with Bitcoin. But before they agree, they have to know, they have to be educated. And that takes a long time. So we're a relatively small private bank, so we can do that relatively quickly. But even we, as a bank, are only now at the point that we're going to offer Bitcoin, well, the ETPs, to our clients. And this is also happening with big institutions, nation states, funds, because you say they're starting with 1 million of Bitcoin. You might say, well, that's not a lot. On the other hand, that means you passed all these people, all these committees, and it's part of the asset allocation now. So it's not a question of are we going to invest more in Bitcoin, but when. Exactly. And it's still coming.
And still, I'm very curious from of course, my perspective is that what I just mentioned as well is first we're looking for a bank account, now we're looking at financial instruments. And this is this development that we need to be on top. Like, as a non-bank company, we rely on banks for infrastructure. And my strong opinion on this is, of course, that if the banks are not going to support us, if it's still so difficult for us to open new entities with new bank accounts, I mean, I'm even more tempted than tempted. I've been making this joke for the last 12 years since I've been in this industry that, you know, one day we're going to be a bank and then we're going to look at every perspective from the Bitcoin vision. You know, it's going to be the bank, be your own bank with a bank account, basically. So that's what I'm very stoked to see. I'm still curious on the Czech side. Like, are you very much aware of the new regulations that are coming, the Czech companies that are popping up?
I had expected that because of the new regulation of European Union, banks in Czech Republic would be more open to Bitcoin and that they would prepare some, for example, funds with it and so on, as we may see it in the United States and other countries. But unfortunately, banking sector in our country, and I think in many other countries in the European Union, is not so open to it. Bankers do not understand in many cases what Bitcoin is. They are afraid of it. They are still thinking we are in 2012 or something when Bitcoin was seen by many, not by me, but by many like a vehicle to make transaction with weapons and drugs and child pornography and so on. But we are in completely different setting right now.
But are you, for example, aware of how many Bitcoin companies there are in Prague?
In Prague, there are many companies, about hundreds.
Like actively talking with them, for example?
Hundreds, and some of them, as I said before, are really with global reach, or at least with some CE and an Eastern Europe reach. But still, you have the feeling that it's like underground still style, something that's still not official.
But for example, because if you this week there was Bitcoin Corporation's Day in Prague. I was there as one of the attendees.
I was there too, but you know, it's only part of the financial industry in our country, and the bigger part is still quite reluctant to even bring about some businesses connected to Bitcoin. So it's getting better. It's getting better thanks to regulations, which is paradoxical because at the beginning we were completely against any regulation. We in the Czech Republic and I think in many other countries. But now there is some shift towards banks be more friendly to it. But I think they are afraid of it as a kind of competition for them. And I perfectly share this view because I think really, for me, the internal value of Bitcoin is that this is really a new vehicle when the current financial system will go bankrupt or will crash one day. And I think it's unavoidable because of large debts and so on, and inflation or printing money and so on. And then I see the biggest real alternative to the old financial system in a Bitcoin. And that's my investment proposition, why I invest in it. And
well, of course, but I think from a banking perspective, we need to be a lot more pragmatic. We need to start solving things today and tomorrow. And I understand, as Dennis says, it takes a long time. But again, Czech is a great example because there's so many great Bitcoin companies there. There's Firefish, for example, a Bitcoin-backed loan platform that issued like $313 million in Bitcoin-backed loans. And this is peer-to-peer. This is going outside of the bank. So we're waiting for the banks to chip in and actually get in action.
Because of banks' reluctance to Bitcoin, we are creating kind of shadow system, I think, which is maybe this is the philosophy behind the Bitcoin since its very beginning, that it shouldn't be part of established banking sphere, but something which is alternative to it.
I think that we're beyond this point now. It's been 16 years. Maybe, like, also from your perspective, indeed, Simon.
Well, what I think next years are going to be very interesting and challenging, but inevitably, the nice thing about the European regulatory space is that it's open for everyone. So we will see companies with a European passport doing modern tech stuff, setting out Bitcoin-backed bonds, loans, and well, just watch the space because it's going to happen. And the big advantage of the harmonized regulations in Europe was already there, for example, in the e-money space as well. When US players came to Europe, instead of having 53 states with money transmitter laws, they noticed, hey, it's a harmonized framework. That's easy. We'll pop in an e-money institution in Ireland and we'll serve the whole region. So those are the things that Europe has as an advantage. We'll see that play out. I'm confident we'll see nice and cool fintech companies with the newest technology setting up the next layer of financial services. And I would estimate that your company might be one of those. Yeah. But there will be more companies out there. And it's going to be, watch the space, I would say. It's going to be interesting.
Yeah, and so what about you, Dennis? What do you think that from now in 5 years, what is the most exciting thing that you're going to see from your position that's going to be offered, finally, 5 more years?
Well, it's quite difficult to look 5 years ahead because everything's moving so quickly. I'm really looking forward to the Americans passing the Clarity Act. But if you look 5 years ahead, I think we'll see the great convergence between TradFi and DeFi. That is definitely happening. So I'm really looking forward to see what's going to happen in the next 5 years.
And Lucas, what do you think? Like in 5 years, am I banking with you? Can you buy my bonds? Are we issuing loans? Can we tap Euribor rates through your bank? Or
I would be happy to see it all. I hope we will see some, especially amongst at least some smaller banks that are sometimes more aggressive. But I still think that we will be behind, for example, United States and other countries.
But the US is always leading, like no offense, but the technology is always first and the legal and the compliance side will follow. Yeah. But this is the role that we have in Europe, is to build a proper regulatory system and make it a lot more stable and safe and secure for the users.
This is the same like with AI, that in the United States they create first the business and they then regulate it. In European Union we do first the regulation and then the business. But with regulation first, it's more difficult to business to flourish. So many businesses and many entrepreneurs go to United States when it is easier because there is at the beginning almost no regulation. And I think it's crypto, it's AI and so on. So in Czech Republic, the fastest growth of Bitcoin we saw during the times when there was no regulation at all. And it was all those times when politicians said, oh, it's for drugs and weapons and child pornography. At that time, it was most innovative era in the history of Czech Bitcoin.
Yes. And the last seconds on Simon, what do you hope to have fixed, from a regulatory perspective in the next 5 years? Is it privacy? Is it money payments?
Yes, what I would hope to have fixed is that, for example, the human rights evaluations on rules, people think it's just about privacy, but it's just as much about efficiency. If we have too many AML rules, it's going to cost us a lot, and we're hurting privacy. If you kick them out, you win on both terms, more efficient and more privacy. Well, what else would you want?
Yeah, awesome. Thank you very much, guys. I hope you have a great day. See you around.
Thank you very much.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Korva, Bitcoin journalist, joined to my left by CoinJoin Chris, the CEO of Cedar and BitSurance, as well as Vic Sharma, the CEO and founder of Cake Wallet, and Christine Lee, crypto journalist extraordinaire. Chris, I'm coming over to you first. You brought with you a head decoration, a hat, if you will. Could you tell us a little bit about this?
Yeah, I mean, we are at this point. We have this discussion, like running core, running knots, and now there's the idea of having a user-activated soft fork, or like they pivoted now to a miner-activated soft fork. You have a node, we all have nodes, run it, choose an implementation, but in order to like find consensus or build consensus, like the best thing that you can do, put your money where your mouth is.
Okay, prediction market.
There is a prediction market. Rob Hamilton built something really cool.
Shout out to Rob Hamilton of Anchor Watch.
Take him up. You can multiple your Bitcoin if you believe in the knots, whatever this fork is.
And like we're cutting that there. Thank you, Chris. Vic, we're going over to Vic to keep it a little bit more grounded. Vic, please give us a little bit. You're a sovereignty advocate. You're a privacy advocate. What are you doing with Cake Wallet to help further both privacy and sovereignty?
Yeah, I think self-custody is the main feature of Bitcoin. That's number one. Second, I believe Bitcoin should be used. You should be able to use it like cash without revealing your transactions, without revealing your balance. So in Cake Wallet, with things like silent payments, PayJoin, you're able to do that. You're able to use Bitcoin on the go without worrying about somebody knowing your whole financial history.
Yep. Yeah, appreciate that. So using Bitcoin as a medium of exchange, big theme here. Yep. Chris, I'm going to come back to you. Any serious thoughts here? What's the conference been like for you? What are you doing here at the conference? You want to give a little bit of background?
Yeah, what are you doing here? What am I doing here?
What is this guy? Who brought this guy here?
So I'm not working at Bitbox. I work with Bitbox, and we have a great booth here. Talked to a lot of people, helped them get onto like Bitcoin and self-custody, the right journey, using his tools. And I'm about to do my quiz show, my Bitcoin trivia quiz show.
What's a Bitcoin trivia quiz show? Tell us about this.
I mean, it writes itself. You all know who wants to be a millionaire. We are playing Who Wants to Be a Satoshi Millionaire. Woo. Live on stage. We have 21 questions, Bitcoin trivia, history, finance, and we have Adam Back, Shinobi on stage. But everybody, and Susie Ward is also on stage, but everybody in the audience can play along. And the lead sponsor, Bitvalvo, they donate 1 million Satoshi. You can become a Bitcoin millionaire.
We're making Bitcoin millionaires here at Bitcoin Amsterdam 2025. Vic, I want to go back to you. Christine, did you have a question?
I have a question for Vic.
Yep,
Because
sure.
earlier we were talking about digital identity and that movement happening in the UK, and whether or not this, folks out there, this new generation is getting lazy about wanting privacy. They just want convenience. And so from that perspective, what are you seeing out there about what folks do they care about privacy?
Yeah, I think so. I think the need for privacy is definitely increasing, especially financial privacy. It's one of those things you don't need it.
Over convenience?
I think so. I mean, we're seeing it growing, right? Privacy is one of those things you don't need it until you need it. And I think for a lot of people, there's going to be a wake-up call. There's going to be a financial crisis like from 2006, 2007. There's going to be whatever,
the next big crisis.
Some some encroachment on privacy is going to happen. And then people realize, hey, wait a minute, all my financial transactions are totally transparent. And so I think right now people are settling for convenience, but they'll come around to it.
And you've been doing great work. I've seen you at many conferences around in the last, year or so. You've been here talking with people,
and Frank,
showing them how to use this.
You've experienced a bit about that living in Venezuela.
I have. I've lived in Venezuela. I lived under the Chavez regime in Venezuela, but that is a story for a different day. I have heard that we are going back over to the main stage, where we will be hearing from none other than Peter McCormack and Mark Jennings. They'll be talking about the rise of Bitcoin treasuries, the future of banks in a hyper-Bitcoinized world. Stick with us, ladies and gentlemen, over to the Treasury stage. We'll be right back here after this.
Good morning, everybody. It's a bit quiet.
Good morning.
Morning, Mark. How are you?
Hi, Peter. All good?
So I went to the very first Bitcoin conference that was held in San Francisco, part of this collection, and everybody was in hoodies and trainers. And we've seen a growth of suits and ties and very handsome men in blazers. Are we still punk rock?
I think we always will be. I think that's part of what we've been trying to do. We've been trying to create our own ecosystem, and when you see the suits arriving, you can see that it's turning their own minds and they see where they want to go to. So for me, the more suits we see, the more we're doing the right job.
So treasuries have dominated the discussion and the landscape for Bitcoin now for a good couple of years. It kind of came in a little bit through Saylor, but prior to that, we started seeing people and companies adopting Bitcoin in the treasury. Why do you think we saw that?
So I think it comes down to what does a treasury do? When we look at these companies, the treasury function is there to try and make the most of the assets that they have and protect themselves against scenarios that they can't see coming, whether that's inflation, whether that's cost of capital, all of these elements. And again, they've seen what Bitcoin can do as an asset class. They can see that Bitcoin was standing in the way of the inflationary moves. It was standing in the way of what was happening with fiat. And so it was an asset that they needed to have on their balance sheet. So if they were doing a good job, that was where they needed to go. So over time, I think what we've seen is the development of that. How do we utilize and give access to Bitcoin more broadly? And I think that's where the latest iteration of treasuries are giving users an access point to Bitcoin and other asset classes via that treasury system. So to me, it's a function of people understanding what Bitcoin can do and how they leverage its use for the best use of a company.
And I think everybody in this room is hoping that fiat dies. Am I correct? I had expected a little bit more enthusiasm for the death of fiat. Although we are in Europe, we're a little bit communist here. But no, we do, and we expect that. And in markets where currencies die quite rapidly, those with access to foreign currencies have been able to short one currency, long another currency. I know people in Venezuela were able to make a lot of money doing the same in their own market. Is a corporate treasury essentially the same thing?
Effectively, yes. I mean, it started off as a risk management process. How do we figure out what risks we're trying to protect against, whether it's interest rates, whether it's FX, whether it's just market moves itself? But I think now we get into a world with huge dynamics and the influence of macroeconomic factors on Bitcoin price and on crypto prices as a whole. The correlations we start to see change a whole lot. And so all of a sudden we can see that the dominant moves in markets are reflected in Bitcoin price, whether it be inflationary moves, whether it be macroeconomic events. And so again, that it needs to be a core part, and it's becoming the best hedge against inflation. It's also becoming a hedge against kind of the dynamics that we see across most countries. So, yeah, originally that's what it would have started off, and I think it was a more basic infrastructure, whereas now it's becoming much more kind of transparent what strategies work and what don't. And it's not a buy and hold anymore. It's how do you actively make use of that Bitcoin?
Yeah, so we saw that really with MicroStrategy. Like a lot of companies, they started with a treasury. Then they essentially became a treasury company as the amount of Bitcoin they held dwarfed the revenue from their software business. And from that, we've now seen people just create treasury companies on their own. There's a lot of them out there. There will be some winners and losers. What is required for a treasury company to be a success? Because there is criticism of some of the treasury companies just being really zombie companies who aren't actively doing anything. And so what will it require for a treasury company to be a successful company that's something that is actually worth investing in?
So there's a couple of factors for me. The first is understanding how they leverage their Bitcoin to generate a return and a meaningful return. Because operating a treasury company itself, the expense cost to do that needs to be covered by something. So understanding how you leverage that Bitcoin to generate return so that you can actively participate and benefit from it. That's the first piece. The second piece, though, is that how do you leverage that Bitcoin to expand your overall business, your exposure? How do you access capital markets? Can you borrow against that Bitcoin and leverage that to utilize whatever fiat you want to get access to, whatever other currencies you want to get access to? And until we get to the point that, larger banks understand that they can hold Bitcoin on their balance sheet and leverage that to expand and build on operations, I think that's where we'll truly see a big shift in those treasury companies actually starting to really utilize that for the positive benefit of the operating expense of the company, rather than just buy and hold and benefit from the price appreciation that's there.
Is Strategy a treasury company or is it a bank?
Depends who you ask on that.
I'm asking you.
Yeah. The way I would say it now, I'd still think it's a treasury company. I think in terms of being a bank, how do I see it? I see a bank as being a provider of leverage to the current fiat system that we have. They take $10 from me, they lend $100 out to somebody else. And so until we get to a point that we utilize the Bitcoin on a balance sheet like Strategy does to optimize and kind of lend out and provide multiples of the capital that they've got for other resources, I think that's when it becomes a bank. So I don't know that we're quite there yet.
Okay, let me ask it differently. Does Strategy provide services that you would see in a traditional bank?
For a retail customer, for a user? I don't think they're there yet. No.
Not a retail customer?
No. Well, they provide an access point. They provide a hedge of sorts for kind of institutions who want to access Bitcoin in a way that they can't hold Bitcoin on their balance sheet, so they need to utilize Strategy to do that. So they're a tool in that way, but I don't know that they've reached bank level kind of distribution capabilities.
Okay, I'll tell you where I'm going with this. Are they morphing into a bank?
I think that's the end goal. I think if you would look at what their strategy internally would say is that's where they're trying to get to, and they can utilize what they've got on that balance sheet of Bitcoin to really expand themselves and provide a huge amount of leverage on top of that. I think there's still a few regulatory hurdles they'll have to get through, and how do they increase that distribution center a little bit better? That's where they're going to have a real challenge. They seem to have the accumulation and the corporate strategy part of that understood, but then how do they use that to distribute more broadly? I think that's where the challenge comes.
Because the reason I ask it is the neobanks became the challenger banks for the high street banks. Revolut is a great example in Europe. Excuse me. A great example in Europe. They were able to understand how customers were changing, how they wanted to access banking services. For Bitcoiners who natively understand Bitcoin, do you think we will see this new generation of Bitcoin native neobanks, which better understand the Bitcoin customer, better understand money, which we as a group in here would migrate towards?
It's a good question.
And if so, what do they need to be able to provide?
So if you look at what customers want now, instant accessibility 24/7 and be able to access that wherever they may be, whether they're here in the Netherlands, whether they're in the UK, whether they're in Ireland. So that's what we can provide. That's what Bitcoin gives the capabilities to. There's no borders to it. And I think that is the opening salvo for us to be able to expand crypto and Bitcoin in particular to allow that to happen. How do we access that? How do we make sure that people can do that? That's what Gemini is here to try and help people do and build. That is, we still get paid in fiat, and what's the quickest route to get that to Bitcoin? That's where we, as Gemini, want to be able to provide that so that you have your on-ramp. You don't need to get back out of that. It's in Bitcoin, and then you can use that from there. But I think, again, it comes into how do we make sure people can just get paid in Bitcoin? How could we utilize that framework more broadly so that you're straight into your Gemini account and it's just Bitcoin sitting there instead of having to go through that whole process of conversion? That's where I think the system needs to catch up with us. We shouldn't just be paid in pounds because that's how it should exist. How can we just get paid in Bitcoin and then remove that whole need for fiat to exist? If we can get to that point, and that requires some change, I think that's when we really start to see change happen.
Yeah, because probably similar to people in here, I hold a very small amount of Bitcoin, but I'd like to be able to do things with it. I'd like to be able to get a mortgage with it, or borrow against it, maybe create some kind of future fund for my children. Now, with traditional banks, I can pretty much do that all with a single bank, whereas in the world of Bitcoin, it's all a little bit disjointed. We have lending companies, we have treasury companies, we have exchanges. When do you think we will see this all converge into a single place?
So I think that's where we're trying to get to. Like the traditional world requires that we have to engage banks. And I think that's how it's existed for a long time. But if we look at where we'd like to get to, and in 100 years' time, what does Gemini want to be? We want to sit there with your all-access platform where you're getting paid into Bitcoin, it's sitting in your account, you can lend against it. Ultimately, you'd be able to leverage that to become a full-service provider, and all in one place where your Bitcoin gets put to work for all the services that you need. And I think that's where we, as a company like Gemini, want to get to. We want to be that all-in-one place that doesn't need to use a bank anymore. You don't need to go into that world, and you can sit within our platform and do, whether you want to just stake your assets, whether you want to hold it, you want to borrow against it. Ultimately, that's where I think it's going. There will always be the need for the different providers and different jurisdictions and different services that people provide, but I see the banks are coming towards us to try and get access to those services, whereas I think we're already ahead of the curve on that. And it's taking time for the rest to catch up. We can be that one-stop, what was a bank, but will now be your Bitcoin wallet, and that's where you'd want to go to. So that's how I see it developing. You know, we all believe it in here. We just need the rest of them to understand and believe it as well.
Do we want the traditional banking sector to catch us up, or do we just want it to die?
Well, the traditional banking sector that is going to start to move towards us. I think there's a necessity for them to be there. They exist for a reason. But I think ultimately their use case will disappear. I think that's where we'd like it to get to. There'll be no longer a need for them to leverage up all the fiat that they hold to provide a mortgage and everything else, because that will all be on chain. That will be outside of their understanding and their remit, and it will sit within us, with our own ecosystem within Bitcoin, to be able to provide better services, more transparent, and we can run it ourselves. We don't need banking regulation to do it. Right now, I think there's a hold on how fiat moves around the world, and banks have that. They've built their own network. We just have a competitive product here that's going to take it over eventually.
So you said you see them coming towards us. Well, like, what signs are you seeing? What is happening out there?
So I think you see with the neobanks themselves are all starting to offer crypto. They understand that that's what those who are using neobanks, that's the next step they want to get into. I also see that most of those banks, they all have a head of crypto who all wants to talk about DLT technology and blockchain technology and how that can help them do what they do now. But I think most of those banks are understanding that, you know, the first use case was stable coins, and they see that that's something that's going to challenge what is a big revenue generator for them, which is cross-border payments. So that was the first piece they moved into. I think the second piece will be, and you can see some of the US banks now taking on Bitcoin, taking on ETH as collateral, being able to borrow against that. It's now within their risk appetite, but I think that's where they're now moving towards it. They have to understand custody, they have to understand the asset class themselves. But we've been in this space. We've been here for 10 years in Gemini. We know this better than they do. And so that's where ultimately we'll be able to show them the way, and they'll either follow or, as you say, they'll die. In your preference.
But with our industry, we're backed by the most pristine capital in the world. Does that give us a significant advantage over them? And do they even understand that? Because really, are they just trying to provide services that we're providing because they're losing out on customers? Or do they truly understand the collateral itself?
Most banks respond to clients' needs. Clients are looking for it. Clients want to get access to it. Clients are already buying Bitcoin and ETH on platforms like ourselves. So they had to adapt to be able to survive in that space because, again, clients will move where they're getting the services. I think they see ultimately what the benefits are. I don't know that they fully believe it in the same way that we do, but they can see that there is a want and a need, and they will follow that want and need.
So are we essentially living in a parallel banking world at the moment, where we're living in a Bitcoin world, where we think of Bitcoin as a collateral, the pristine capital that we trust and understand, whereas there's this traditional fiat world, which is backed by thin air and bullshit, and there's essentially two parallel worlds happening at the same time?
That's a pretty accurate view of it right now. I think there's the past and there's the future, and I think we see what Bitcoin can do as a future tool for financial freedom. It's certainly the one that's going to drive a lot of that innovation over the next 100 years. And I think, as Cameron and Tyler said yesterday, it is the money of the internet and where we're going, and that no longer needs fiat. It's all on chain, and that Web3 need is not for dollars and cents anymore. It's Bitcoin and sats. So for me, we're existing in parallel, but I think one is moving towards the other, and I think we're the ones leading the way, and I think the existing system is trying to move towards where we are. Governments, central banks, they'll still find the need to have fiat and be able to control that, but I think ultimately over time, what we've created will be our own network, our own infrastructure, which doesn't need them to be a part of it.
So will it make the central bank obsolete?
Maybe the central banks become treasuries. Who knows? They start to leverage digital assets themselves, understand how that sits on their balance sheet and make sense of it. The US is creating their strategic reserve. Do we see the rest of the central banks, maybe across Europe, the UK, starting to do the same? And understanding that to be a properly functioning treasury, you've got to look at all assets that are there, and maybe that's the move that they take into leveraging Bitcoin to do the same thing the strategy companies are doing right now.
But do we want a lender of last resort in a Bitcoin world, or do we want people to understand the collateral and be responsible for their own decisions?
Well,
is the protocol the central bank?
I think that's where we want it to be, right? I think that's the future, and that's where it sits, and it doesn't need a central bank to be part of it. The central bank has their responsibilities for a country, and that's how they run it themselves, but the financial infrastructure that supports it, that should be with Bitcoin, and that's where it should sit.
So when I came into the world of Bitcoin, we were teaching people about self-sovereignty, taking control of your private keys, considering different forms of custody, from single sig wallets to cold storage. In this new kind of world of treasuries, we're handing over our sovereignty sometimes to other parties. Is that a maturing of the market we kind of have to accept for Bitcoin to be this collateral that is used globally?
You can't bring everybody to Bitcoin, and some people will only go so far as a treasury company, and maybe that's where their risk level sits. And so I think we have to support that in order to expand and grow Bitcoin's importance and dominance, there are different ways people are going to access that. So whether you manage your own wallet, whether you manage your wallet through Gemini, whether you manage your Bitcoin exposure through a digital asset treasury, that's always going to further and grow Bitcoin's dominance. And I think that's where we can't bring people to the well and let them understand and know what Bitcoin can do for them. But if this is their first step into it, then they start to understand, then they start to believe, then they'll start to move into their own Bitcoin wallet and take it from there. So I think it's all to do with risk appetite, it's all to do with education, it's all to do with expanding Bitcoin's footprint in that global financial system.
So treasuries themselves can be a gateway drug to self-sovereign Bitcoin?
I think we've got to show people the path to get there, and I think treasuries can do that. And I think that's where we want to educate people, we want to show them the way, and if they take that first step, that gives them the appetite to know more and want to do more, I think that's only a benefit for us.
Interesting. Okay, so if we're moving into this world, it's still very important that we maintain a role for education and a role for elevating voices that fully understand the technical sides of Bitcoin, so we don't allow for a corporate takeover that leads to some changes to the protocol we don't like. How do we maintain that in a corporate world, that we don't let BlackRock make decisions?
Well, I think that's where the Bitcoin community is so strong. What we see in the corporate world is a lot of them, they may accumulate, they may store, they may custody, but I don't know that they're as active within the protocol as the Bitcoin community is. So I always think they'll be able to grow their share and they'll be able to sit on that, but I don't know that their views and their intentions would be to interrupt the protocol that's there. They're there to accumulate based on the instructions they get, but they're not taking those decisions, not moving those decisions in the same way that Bitcoin holders like yourself and myself really want to get involved in this. So I think it becomes an incentivization. Where is the incentive for them to become involved in something that they don't know as well as we do?
We're still in this precarious world of money printing. US debt, the US debt clock's over 38 trillion now. UK debt to GDP is over $1 trillion. Most of Europe is a basket case. It's obviously this growth in debts, it's not going to end, which means we do end up in a hyper-Bitcoinized world. Does that mean companies like Treasury and Gemini become the first institutions of this? And what does that mean?
I think that, that's why this Bitcoin was created. When we see what happened in 2008 and how people just, didn't take care of the finances that are there, and it's not controlled by us. I think we make that first mover advantage because we understand how to build and grow in this world, how we can service and how we can help people get into this financial ecosystem that will be the future. So I do think the treasury companies, I think the likes of Gemini, are showing the way of how people can cross that bridge, essentially, taking themselves out of that fiat world into the on-chain world and understanding that that is the future for them. And the future lies with them rather than the banking providers that they've got right now.
Amazing, thank you. I think we're done now, so round of applause, Mark. Thank you.
Thanks, Ben.
Something bold is coming. Introducing the Bitcoin Whiskey Collection, made in collaboration with Bitcoin Magazine. A collection of 2 premium whiskeys made for those who never sell short. The luxurious Bitcoin Reserve with a custom minted Bitcoin coin. And the ultra-rare Satoshi Reserve with only 999 ever being produced. Get yours before they're gone. Now accepting Bitcoin payments at goldbarwhiskey.com.
Welcome back to the Bitcoin Magazine news desk in Amsterdam 2025. We've got a loaded jacket for you. Let's check it out. We've got Chris Seedor. He's the CEO of Seedor and Bitsurance. We've got Vic Sharma, CEO of Cake Wallet, the master of privacy. And we've got technical editor of Bitcoin Magazine, Shinobi. All right, folks, let's kick it off with a bit of continuing the controversy from our last conversation. We have a proponent of NOTs, this soft fork of Bitcoin. You know,
who is a proponent of NOTs on this stage? Hang on.
Okay,
there must
wait.
be some miscommunication.
Okay. Well, earlier we had Pierre McCormick, who was saying that at least with the block size wars, it seemed rooted in logic and reason. And this soft fork proposal seems more about a war of personalities. What are your thoughts?
It's also based in logic, but it's exclusively Luke logic, and you have to like twist your mind into a pretzel to fully understand the reasoning behind those moves. Yeah, I mean, you can just do things. Like, I'm of the opinion, like, if you cannot even enumerate the ways that you can embed data into Bitcoin, then that is a not worthwhile cat and mouse game to throw dev time at. Like, there's so many things that you can do, and the proposed soft fork would not fix any of these, or like some of them, but not. Like, it's very easy to put stuff into a blockchain that wants to have stuff in there. Like, that's Shannon's information theory. Can you back me up on that?
Yeah. At the end of the day, you can strip out all of the features that they want to strip out with this BIP, and you can still put whatever information you want. You can just use a fake public key that you don't have the corresponding private key for and make that whatever arbitrary information you want. And that's something you cannot stop without breaking Bitcoin itself. Like, if you can't include random addresses in that part of the transaction, then it's not even possible to send people money. Yeah, so no matter what you do, you get down to this dilemma at the root of it. Like, if you want to stop the data, you have to essentially turn off Bitcoin.
Yeah, and there are other cryptocurrencies like Grin or Mimblewimble that have just that. They don't have scripting. They have like some pub keys on the ECDSA curve. Even there, you could, like, with enough motivation, grind a fake pub key. Right. Like, all of these things happens. The thing that I would focus on dev time is just, like, scale Bitcoin, make it more attractive, educate people, and we easily price out spam from any block space.
Mm-hmm. Just we have a couple seconds left, but Vic, just want to get your thoughts also on the privacy side. Samurai Wallet, Keon Rodriguez, he got sentenced to 5 years. Developer running a wallet. What are your thoughts on the situation that resulted?
Yeah, so I'm definitely on the Samurai side on this issue. Bitcoin itself is open source, ready, can be used by anybody, and what they did was provide a tool for privacy. It could be used for good or bad, and I guess maybe some people used it for bad things. But what they did, I think they should be clear of it. Writing code is not a crime. And does that worry us as, we're trying to build privacy tools for Bitcoin? It worries us because there's, the rules are applied in a very gray area. It's not uniform. So any rule can be twisted, any law can be twisted, so, they can come down on us. So it worries us for sure.
I mean, there's often been talk about a need for regulatory clarity, and it seems that progress is still needed in that trajectory.
Exactly.
All right, we're going to wrap it up there. We've got a talk on the main stage. This will be an announcement from Contour up next. Let's have a listen.
Counterparty had a lot of firsts. Had the first blockchain-based decentralized exchange, first oracles, prediction markets, had the first financial derivatives, and some of the first NFT collections, including Spells of Genesis and Rare Pepes, which you may know. Through Counterparty, I was at the center of the first op return wars. This is when the core developers at the time, around 2014, tried to censor meta protocols on the Bitcoin blockchain by limiting the size of the op return. This is based really on a disagreement about how to build on top of Bitcoin and censorship. The core devs at the time were, in particular, trying to push their preferred architecture, which was sidechains, and I'll talk a bit about that. I left the public blockchain space in 2015 and came back over 8 years later in 2024, to my surprise, to see that many of the same debates were still raging. This time the excitement was more about zero-knowledge rollups than about sidechains. But the philosophical differences were still there. Also, many of the core developers had actually switched sides at that point. And working again on Counterparty, I saw an opportunity to build something new and exciting, which I'm going to tell you about today. Why am I excited about meta protocols in 2025? Well, it's because people still have a particular understanding about how to improve Bitcoin, how to scale Bitcoin, that I don't think really works very well. The thing is, you can't scale Bitcoin horizontally. The fundamental issue is that the idea that Bitcoin as a payment network can scale to compete with Visa and MasterCoin to handle tens of thousands of transactions per second is fundamentally flawed. People also want to be able to improve the functionality of Bitcoin. They want to be able to do more stuff with Bitcoin than you can do with just Bitcoin script. The naive solution is actually to scale it like a database, right? Because people say Bitcoin's like a database. But the limitation of a database is usually about reading and writing data to and from disk. It's not about agreeing on which transactions you want to persist to disk, which is the problem for Bitcoin and consensus networks. So what that means is that scaling a blockchain means duplicating the blockchain, actually creating additional consensus networks. And that's really what a sidechain is. It's a second consensus network. It's a second instance of Nakamoto consensus or a multi-sig agreement with a two-way peg to Bitcoin. Zero-knowledge proof systems do similar things. They anchor their other chain effectively on Bitcoin using some kind of zero-knowledge proof scheme that proves it's correct. The issue is that that usually requires significant changes to Bitcoin or changes to your trust model. The bigger problem is that both sidechains and zero-knowledge proofs are alternatives to Nakamoto consensus itself. And they're fundamentally parasitic because of that. They move transaction volume, activity, and fees off of Bitcoin. They're competitive with Bitcoin. What's a meta protocol? A meta protocol is an extension to a layer 1. It's not really a layer 2. There is no separate network. There is no separate consensus system. The best way to understand a meta protocol is just a code module that is tacked onto Bitcoin Core and extends the functionality of Bitcoin Core, just making it able to do more stuff. I think of this as scaling up rather than scaling out. Interestingly, meta protocols were first described by Hal Finney, the second user of Bitcoin, in 2010. You can see here, Hal Finney is describing more or less the same encoding method that ordinals, counterparty, runes, and other meta protocols use to store data inside Bitcoin and extend its functionality. Meta protocols are fundamentally Bitcoin native. All the transaction data is on Bitcoin. You don't need any new opcodes or additional security assumptions. And they offer true interoperability with Bitcoin. You can chain transactions together using Bitcoin script. You can use your regular Bitcoin wallet and addresses. And the use of meta protocols strengthens the underlying blockchain because you're adding economic activity. It's interesting to note that the first versions of Ethereum were actually meta protocols. And it was precisely the risk of censorship which drove Vitalik Buterin to build Ethereum off-chain. In 2025, the FUD is as strong as ever, but it turns out that you can keep on building. And you don't need to ask permission to build on top of Bitcoin. You just pay your fees and keep going. And you can see here that in 2025, over the past 3 months, runes constitute almost 50% of Bitcoin transactions. That's very exciting. So what's Contour? It's a next-generation meta protocol with rich smart contracts and scalable file storage. With Contour, there's no bridging and no onboarding. The security model is Bitcoin's security model. You can chain transactions together, you can interoperate with Bitcoin, and you can use your regular old Bitcoin wallet and transactions. How does Contour do smart contracts? We have a novel smart contract framework called Sigil, which makes writing smart contracts as easy and natural as possible. You can write sigil smart contracts using Rust and soon other languages targeting WebAssembly framework. It's just like writing normal software. The other important feature is scalable file storage. We keep the file storage system entirely on top of Bitcoin, and the transactions are on Bitcoin, but file data doesn't need to be on Bitcoin because it's stateless. Contour is live on Signet today. You should all go check it out and use it. It represents a fundamentally new approach to building on top of Bitcoin, and one that matches Bitcoin's original values. A meta protocol that extends Bitcoin's capabilities on-chain with modern technology, working with Bitcoin, and recognizing its place at the very core of our shared future of permissionless innovation and value creation. Thank you.
Welcome back to the Bitcoin Magazine News Desk in Amsterdam 2025, presented by Treasury. And on the desk with us, we have Luke Broyles. He's a Bitcoin advisor and content creator. Vic Sharma, CEO of Cake Wallet, and Susie Violet Ward, a Bitcoin journalist and CEO and co-founder of Bitcoin Policy UK. All right, so we were talking about with Vic, Samurai Wallet, and we saw a developer get sentenced to 5 years in prison in the United States for an unlicensed money transmitter, but basically a wallet. And so how does this, I suppose, guide you in navigating the regulatory gray frameworks in the United States? And how do you protect yourself from something like that happening?
Yeah, so I think the biggest thing is we make sure we don't custody our funds, or even give the appearance of custodying our users' funds. They control the keys, they control their funds 100%. We actually have no access to it. Second is anything we put in, like silent payments or pay join, it's at the protocol level. It's not a central server that we're running or a coordinator we're running, anything like that. For example, silent payments is BIP 352, I believe. It's a real BIP that's out there, and we implemented it. We don't need to run a coordinator to get that done, and it gives the user some level of privacy. So yeah, I think those are the two things: do things at the protocol level, and don't custody funds. Okay. Yep.
Susie, you're very active in the UK policy world, and so I'd love to have this conversation about how are people sacrificing a lot of their privacy for convenience? Do they care about privacy, especially in light of the conversation, the movement about digital identity in the UK?
I think people sacrifice a lot for convenience, absolutely. And because they don't really understand why privacy is important, a lot of people still think that I have nothing to hide, therefore why wouldn't I submit my data and my privacy? I think privacy is very normal, and I think that we've forgotten that, and I think we need to try and remind people.
That's a mistake, though. I think that happened in Web 2. So what can we learn? Do you think we will learn as we progress in the digital financial age?
No, because it's so insidious and it happens so slowly, and people don't understand what's being taken away from them. When you think about how mobile phones and iPhones and everything have crept into our life, we're now being tracked, watched, monitored. Every transaction is linked to a Face ID. We're already doing it, and we're paying for it voluntarily. So, no, I don't think people are going to realise.
Okay.
Could I add to that?
Yeah, go ahead.
I think convenience, like you said, is number one. And we as a wallet maker, I take the blame for it, because people want to be able to use cryptocurrency as easy as you're using Venmo or PayPal. So
yeah, no,
it's kind of on us, the tech industry, the Bitcoin industry, to make it more convenient and make it more user-friendly.
Okay. Yeah. I also just want to point out Bitcoin price right now is below 100,000. What do you, Luke? What is your gauge on the sentiment, and where do you see Bitcoin headed?
Well, clearly it's over. It's going to zero, right?
So. Okay. It's died how many times?
Yeah, no. I think sentiment's pretty low. I think that this year we've seen a very small, let's say, price decline, but we have seen a very long, drawn-out period. So maybe it's not a quote-unquote been a bear market or negative year in terms of price, but it's been a negative year in terms of sentiment because people's expectations were significantly higher than where they are. And I think that human nature, human emotion, we
Quickly
care.
prediction by the end of the year?
No, I don't really care what it's going to be at the end of the year. I think it'll be higher than it is right now. I think it'll be back over 100K. But at the end of the day, it doesn't really matter because the long-term future is tremendously upwards, I think. And we just need to, maybe if we want to keep those high price expectations, maybe we need to change our timeline expectations, right?
Excellent. All right, we're going to head over to the main stage to hear what they're talking about. Navigating risk, regulation, and M&A in Bitcoin Treasury management. Let's go.
One of the biggest issues that I am seeing in the U.S., for example, it's a lot of like hostile investors in these pipelines, hostile bankers, and a new world of entering, right, Bitcoin, entering into the traditional finance capital markets, which is very new because we always have people with experience in capital markets, but now we're truly merging a world in which people don't necessarily have the experience in the capital markets, but absolutely have the experience in the Bitcoin markets. So I want our friends here, especially our lawyer friend here, to tell us a little bit about what's going on in Europe. What are the regulators thinking? I know that a lot of the treasury companies are in a bit of a halt right now from going public. Can you please talk to us, like, what is going on?
Yeah, maybe I can start on that. I think it's a great question. I think it's a very interesting time. We are seeing really a change in the acceptance of crypto, both in the US and Europe. But I do think that there's still quite a difference in how crypto is perceived and also regulated in the US and also in Europe. And it's not only a matter of different rules, but it's really a different attitude towards crypto and on the adoption. And I think what's telling, for instance, today, this morning, our financial regulator, the AFM, issued a statement with certain concerns on the Dutch markets. And one of the concerns mentioned was the increasing interdependence between the crypto markets and the regular financial markets. So you can see that in Europe and in the Netherlands also, there's still hesitance to really accept crypto, and you can also see that in the regulatory space.
Yeah, I think just to add the kind of UK perspective to that, we see with the Financial Conduct Authority in the UK that there is a willingness to engage around crypto assets and a willingness to engage on Bitcoin treasury companies in particular. But there's also a desire to do that in a structured way, to look at it in terms of putting the building blocks in place first. So, I mean, clearly in the EU you have MiCA, which unfortunately in the UK we don't benefit from because of Brexit. But we do have other building blocks being put in place around things like financial promotion. When can companies go out and market their financial products? We have a sandbox with the FCA in which they've been trialing blockchain settlement of particular capital markets products. So there is a desire to put those building blocks in place, but at the moment it's kind of a cautious step forward rather than kind of throwing yourself wholesale into the regulatory sort of arbitrage argument.
I think you made a fantastic point at the beginning, right, about how Bitcoin and crypto is slowly becoming more mainstream. And it has a long history of crypto being wrapped in TradFi assets, right? So people want exposure to Bitcoin. How can you get that? Okay, well, in the early days, it was just, have your own node on your computer. Then it was, or maybe you can find yourself a VC or a hedge fund that might give you access if you have enough cash to spend on it. Then it was ETFs on futures. Then it was ETFs on spots, right? So, and now we're looking at public securities with the crypto underlying. And each time crypto finds a new home for itself in the TradFi product set, there's always this initial resistance from regulators, no matter where you are in the world. In the US, we had to wait years for spot crypto to be available in ETF form. Right? It's only been recently that's actually been possible. Before it was always futures, because futures they're much more heavily regulated, obviously, than crypto is. So the thing about public securities, so putting it into a DAT, is that it gives you arguably even more flexibility than putting a crypto into something like an ETF, because ETFs do have rules they must follow around how they manage the assets, how they risk manage them, whereas in public securities there's more, I think, flexibility than what you can do, but of course the obligation to be transparent is still there, right? And when we talk to regulators, whether it's the FCA in the UK or ESMA or other European regulators, transparency, investor knowledge is often a thing they keep focusing on.
Do you think that's coming from a lack of understanding of the industry? For example, there's just like not that many people in the traditional markets, especially within like the regulators' offices, that understand this industry very well. So in the United States, we had 4 years, obviously, of the Biden administration attacking the industry. Once President Trump took office, it's just been like, you know, we're all in this rocket ship headed to the moon, right? The regulators have had to get smarter, think very quickly. We've also been able to put people from the industry into all of these offices to assist in the lack of knowledge, right, and the education portion of it. What's going on in Europe? Because it seems that at least, and you know, I'm speaking as an American and as someone who's not in Europe, but it seems that the regulators here seem to go a little bit significantly slower into the adoption of let's just talk about Bitcoin here, right? This is the Bitcoin conference and crypto gets a little murky, but you know, Bitcoin as a commodity, as what it is, why are regulators so slow to adapt into this world? In addition to the lack of education, are they seeing risk? What are they seeing? What are the biggest hurdles that you encounter with your clients in dealing with this?
I think it also goes to, I think it's a fundamental difference between the US culture and the European culture. And of course, there's a much larger debate, which is much larger than only crypto, on the risk appetite in Europe and also the role that regulators play in that. And I think the problem is not only the regulators, it's actually the entire ecosystem. If we're talking about, for instance, getting listed, a Bitcoin Treasury company wants to list its shares on the stock exchange, you need all kinds of parties. You need the regulator to approve it, but you also need banks, you need listing and paying agents, you need auditors, all kinds of facilitating, gatekeepers that you need to have on board to realistically have a shot of getting listed. And what we see is that also these parties are still quite wary of getting exposed to crypto. It's still much less than in the US. I think there's still this general sense that we should tread carefully, first see what happens. And where I think in the US there's more an attitude of just let it go and we see what happens and then we may regulate later. In Europe, I think there's more, let's just slow it down. And we ask lots of questions. We are difficult with all disclosure requirements, licenses. And that's why it's much more difficult to actually get listed here than in the US.
Well, in the US, we didn't take the approach of we'll see how it happens and we'll regulate later. We regulated by enforcement, by penalizing companies. I mean, my own company had its own struggles. Coinbase has had its own struggles with the past administration. When we regulate by enforcement, we criminalize activity that we just simply don't understand. So if that's an approach that the regulators are taking, it's like, let's not regulate by enforcement, at least here in Europe, and that's actually a very positive attitude.
Absolutely, that is a very big cultural difference in how regulation works generally in the US versus on this side of the water. However, I don't believe that it's due to a lack of education. I think it's more to do with simply the political will of a particular government in a particular country. So we've seen what's happened in the US. I mean, literally a year ago, right, or maybe less than a year ago, the environment for Bitcoin was very different to what it was now. And the previous administration took a very different view. Now, things are slightly easier for the crypto industry, I would argue. However, in Europe and the UK, they started looking at regulations for Bitcoin. Well, Europe rather looked at regulations for Bitcoin back in sort of 2019, right? 6 years ago. First draft of MiCA came about in sort of 2020, I believe it was, in September, and they've slowly been working on it, and it got published or went into force just last year. So, and that regulation was born out of a desire to protect investors and to protect consumers, right? It wasn't seen as simply as a way to try and encourage further growth in industry. So the philosophical standpoint of Europe is back then when they drafted the regulation is very different to the current political environment that we see in the US. So I think it's less education and just more about political will.
Yeah, and I think the thing I would add, I completely agree that there's a completely different culture, not just in terms of risk-taking, but in terms of how laws are enforced between the US and Europe and the UK. If I look at it as a securities lawyer, it's similar in terms of the way that insider trading regulation came about in the US. It came about through enforcement and litigation, whereas in Europe and the UK, it's a much more permissive regime in terms of focusing on what is allowed and that driving the kind of behaviors. And I think because of that, there is a desire to try and see where Bitcoin and Bitcoin Treasury companies fit into existing legislation, regulations. And I think that will be one of the main drivers that we'll see as this space continues to evolve. If I think about it in terms of M&A, yes, there's a desire to scale and to get more Bitcoin, but there's also other things that drive value within the companies that are operating in this space. I've been amazed at the number of people who are from a TradFi background and have made that switch, often at a very early stage. And that knowledge and that skill set is going to be really important in terms of how companies in Europe and in the UK engage with regulators, how they can get regulators comfortable with what's happening, and they can also get institutional investors comfortable with what's happening.
I think it's interesting that you said that the regulators like to look at the things that you can do, so it comes from a positive standpoint, where I think it's really difficult because it's an exhaustive list that you'll never get through. Whereas I think in the States we take more of an approach, or at least like constitutionally speaking, it's more like what you can't do or what government cannot do. So I do agree, like, we're a little bit more in the Wild West in the US than you are here. I wonder how much of that has to be politically motivated. And by that I mean, like, obviously there's been issues with the current governments, and how much of maybe the unwillingness of moving quicker in this space has to do with the stubbornness of not wanting to embrace something that President Trump has been having such a positive outlook from. Don't answer that because you'll get in trouble.
I think the honest answer is I think that crypto is much more politicized in the US than here in Europe, I think for me at least it has much less of a political taste. And it's very clear that in the US, of course, the administration plays a very important role in pushing that agenda and really opened that market. I think in Europe, I don't see very much that political angle, actually. I'm not sure if it's different in the UK, but...
Yeah, I think that's true. I think that's where Bitcoin has the advantage in many ways. I think it is better understood. It's been around the longest. It has had the most uptake. So I think there's a lot of comfort that regulators, in the same way as institutional investors, there's a lot of comfort that regulators can take from that. And I think we see here today and yesterday the ecosystem that exists around that is very strong. I also think to the extent that the sort of Bitcoin industry is reliant on service providers who are also regulated in the right way and known to the regulators, that also helps to reinforce the point that it is not the Wild West. It is something that is growing in acceptance, growing in understanding, and therefore the risks to investors of investing in Bitcoin and in derivative products from Bitcoin should not be seen by the regulator as a kind of, there needs to be a blanket ban on it. It's seen as something that has its place alongside other traditional finance structures.
Where do you see this space headed? So there are obviously jurisdictions that are friendlier than others within Europe. For example, Ireland tends to be very friendly to the space. I think Cyprus also is one of the areas that's very friendly to the space. I know the UK is a little slower, Netherlands a little slower. Where do you see this going? Do you see them becoming a little bit more unison in how they're moving, or do you see them as just like, we're gonna walk here to the beat of our own drum?
From what I've seen, right, so in Europe, the regulation anyone that's a bit of legal geekery in 20 seconds. You've got a regulation, there's a directive. There's a directive, every country can kind of fiddle around the edges with how they implement it. A regulation, you have to take every single word directly into your national law, okay? So in crypto in Europe, it's a regulation, which means that every single word of that regulation you've got to put into national law. So every national law should mostly be the same when it comes to crypto in Europe, okay? That's the law itself. But then it comes down to a combination of political will and how the supervisor's feeling, how the regulator's feeling about that particular thing, in this case, Bitcoin and crypto. So, absolutely right. Some European jurisdictions are kinder to Bitcoin and crypto than others. That's absolutely certain. How does that manifest practically? Well, it manifests practically when you want to go for a license there to be able to offer crypto services. Some European countries can take, a year or longer. Some European countries pride themselves on doing it in a far faster time frame, a matter of months. So, there is certainly, whilst the regulation will always be the same in black and white, regulatory approaches will always differ. And I think that's been the case not just for Bitcoin and crypto, but for everything, right? The whole of financial services, to a certain extent, operates a bit like this, where the regulator has some discretion over a particular market, they normally exercise it in a way that suits them.
Yeah, I think a really good example of how we're seeing that in the Bitcoin Treasury space is with the question of whether these companies are operating companies or whether they're alternative investment funds. And there is a real difference in terms of how certain regulators are looking at that. It has real knock-on consequences in terms of what the regulatory regime that applies is, who you can sell to, whether you need to have a regulated fund manager, for example, which exchanges you can list on. So I think that is an area where, yes, the law may be the same across the various EU jurisdictions, but the way that regulators look at things and the way they engage with those kinds of questions is really important.
Yeah, and I think I totally agree with that. And we have looked at different European countries, and you see that the same rules, like you just referred to, regulators take different views on what these mean in practice, especially if you have to apply them to, for instance, a treasury company, a hardcore Bitcoin treasury company. How do you apply the current legal rules that have not been designed with that business model in mind? How do you apply that? You can see there's a clear struggle with regulators, and I think some regulators then tend to move slower than others, and that's where you see the differences.
One of the really important consequences of this, though, right, is that it's not just a case of saying, I'm going to go for the easiest jurisdiction that I can find, okay? Because everyone knows which ones are easy and which ones are harder. Now, if you go to a very, very kind of relaxed jurisdiction, it comes with certain potentially adverse reputational consequences, right? Whereas if you come to the Netherlands, which is a very, very highly respected, world-leading financial center, then of course your reputation will have a much more positive impact if you decide to come here to do business in the crypto and Bitcoin market. So that's something I really wanted to make sure that people knew, because it's not just a case of finding the easiest, the lowest barrier to entry to get your license, right? You have to think about what's your reputation, who are your clients. If your client's going to be in TradFi, if they're going to be asset managers, for example, then you're probably going to want to err on the side of good reputational impact by picking a country that has that knowledge.
Do you think out here, one of the things that they're looking at also is like, who is the team of people leading this company, right? It's like, so the US, it's a little bit more like the Wild West. And these companies are going public, and let's be real, there are some issues in some treasury companies, like their stock is getting slaughtered, and at some point you have to wonder, well, if this is going to become an acquisition target, what if every single treasury company that comes into the market just becomes automatically an acquisition target? Do you think that that's one of the things that the regulators are looking at here? Like, this is a huge risk, depending on like who we're allowing to enter into the market, specifically not Bitcoin, but like the teams of people managing these companies?
Yeah, I mean, if I look at it from a UK perspective, the regulator will look at the suitability of the individuals involved, but that can also be a positive. I think we've talked about consolidation perhaps being seen as a negative within the industry, but actually I think it's a positive, because going back to the point about what is the intrinsic value behind the M&A, it's not just getting your hands on more Bitcoin, it's about bringing real experts into the business. Maybe there's an operating company that also benefits from having an e-money license or a payments license, that gives you regulatory touch points that a Bitcoin treasury, a pure Bitcoin treasury company may not have from day one.
Okay, so I'm very bullish on Bitcoin treasury companies. I think that we're going to get out of the slump and it's going to be fantastic. So I hope that, you know, the regulators can take a look at the really wonderful people that are in this conference and ask as many questions as possible. I do think that the space is going to move forward significantly. So I hope you all have a wonderful day. And of course, if you always need anything from Kraken, here I am. And let's go.
Bitcoin Magazine news desk in Amsterdam. And it is presented by our lovely sponsor, of course, Treasury. We've got Luke Broyles on the desk with us. He's a Bitcoin advisor and a content creator. And we've got Susie Violet Ward. She is a Bitcoin journalist and CEO and co-founder of Bitcoin Policy UK. All right, so it's been a busy day on our final day here in Amsterdam. And Luke, you have a talk coming up with us. So tell me a bit about it. I understand that it's not too late for those wanting to get into Bitcoin.
Yes, the conference asked me what I wanted to talk about and host for the panel, and so that's the topic I decided, because frankly I think that as much as we may get tired of the number go up and constant FOMO and hopium, I do think that that is something people need to still hear. People won't take action on something unless they actually believe that it can directly benefit them, or at least that's my belief. And I think it's really important that people hear that message, that you're not too late to Bitcoin, right? We only saw a couple days ago, 2 or 3 days ago, that the Central Bank of Czech Republic bought $1 million of Bitcoin. And so we're at the very beginning of that.
People are hearing about these governments and these companies are scooping up Bitcoin. They see it's worth $100,000 or so in the United States. So they get intimidated.
They do get intimidated, but it's all about that unit bias and anchoring bias. You know, there are 21 million Bitcoin. There are way more than 21 million millionaires, 21 million companies, 21 million homes. You know, if you were to price homes, cars, or anything else, it'd be a lot higher price.
We got to stop there. We're wrapping up. We're getting on the main stage. We've got European treasury companies are building their Bitcoin balance sheets. Let's have a listen.
Kindly MD DBA Nakamoto. And today we have a group of treasury companies today to talk about all the different things going on in the industry. So treasury companies have been this new boom, right? Especially this year. And they're popping up all over the world. And so what's fascinating is we have people from Amsterdam, England, and Norway today to talk about what they're doing in their regions. So today we'll dig into why you guys chose the location you chose, what your long-term vision is, and how we might see things evolving globally. So let's start with geography. What made you choose your specific location? Was it regulatory clarity, tax policy, access to Bitcoin, proximity to capital, culture, and Has that location proven to be a good location?
Yeah, happy to start. I think we chose Amsterdam specifically because it has always been on the forefront of financial innovation. So if you go back to the 1600s, it has basically launched the first stock exchange globally, which is an amazing feature. And then I think if you look past the 2000s, when we moved to electronic trading, we really built massive powerhouses from a trading point of view. Optiver, IMC, Flow Traders. And then if you move fast forward 10 years after, you see crypto exchanges like Deribit, which has been founded in the Netherlands. You see Bitfavo, which is founded in the Netherlands. So we really have a thriving community when it comes to trading, but also in terms of digital assets. So we're really excited to basically become part of that broader ecosystem. And also, being able to host everyone here in this amazing venue.
It is an amazing venue. Norway.
So actually it's Sweden. So
Sweden,
we do love
sorry.
Norway.
You didn't read my prep notes.
It's a good friend of ours, but we are based in Sweden and Stockholm. Sweden's great, really. It's a very mature capital market. The country's small, only 10 million people, but we punch well above our weight when it comes to capital, entrepreneurial spirit, and tech, and of course, love of Bitcoin. Sweden was actually the first country in the world to get a Bitcoin ETP. So we've had people investing in the capital markets in Sweden in Bitcoin since 2015. Sweden also saw the first court case that set the entire precedent for the EU for VATs regarding crypto transactions. So Sweden's always been at the forefront of crypto, has a very liquid market. Our exchange is actually operated by NASDAQ, so not a lot of people know this, but you have NASDAQ US, and then you have NASDAQ Sweden, $2 trillion market, and of course our tax rules are really good, but especially compared to buying Bitcoin on spot. If you buy Bitcoin on spot, you're paying 30% capital gains tax, there you go. And if you're buying a stock through an ISK, you're only paying 1% on your portfolio. So there's a huge advantage to actually buying a Bitcoin treasury company versus just buying Bitcoin on spot.
Henry?
Yeah, so before becoming CEO of Satsuma, I was at UTXO. And at UTXO, we were diving into each of these markets as we were investing into treasury companies all over the world. And I was spearheading our investments into London. And as we dug deeper and deeper into the London capital market, we were kind of amazed at how strong and how well suited the capital markets there are for a Bitcoin treasury strategy. In particular, London, if you look past the sort of headlines of, IPOs are fleeing and some de-equitization, London remains the capital of venture investment in Europe. It has a market that is incredibly well suited for secondary issuances, which are the lifeblood of Bitcoin treasury companies. And it has the third largest corporate fixed income markets in the world after the United States and China. So the ingredients are all there for a world-class Bitcoin treasury company to be built. And unlike, America, which has strategy, or Asia, which has Metaplanet, there isn't really a, running away market leader in Europe. All of the Bitcoin treasury companies here are effectively of similar sizes, and each one of them is innovating in a different way to compete in that market. So it's a very, very interesting place to be.
Do you think that you'll stay anchored to the locations that you're at now, or do you see yourself evolving into different markets as well?
You mean into different jurisdictions?
Like dual listings or anything like that?
I think dual listings can be very interesting, but mainly from a point to attract other investors in other countries. So you have seen quite some treasury countries basically dual listing on, say, the OTC markets in the US. That can be an interesting move, but you really need to think that through and also ensure that you have sufficient liquidity on those markets before you really tap into those markets. It really makes sense if you have institutional grade liquidity on all those exchanges on which you're going to do a list.
Yeah, for us, our goal is increasing institutional and retail Bitcoin adoption in the Nordics. So we do want to focus on the Nordic investors, institutional and retail. I'd say over time, there's definitely options for going to the US markets. There's options for going for the Frankfurt market. But I think what's key here for every treasury company is do focus on your local market and then expand when you have something that's actually competing versus the local companies, right?
Bullish. I like it.
Yeah, I agree with that. I mean, you want to focus on your local market. I also think that there are strengths that come from the regulator that you're dealing with, right? So like the FCA, for example, is
they're a pretty strict regulator. You have to tread carefully with them. They are conservative. There's a sort of a learning curve there. But working with a regulator like that in a way can be helpful in the long term because it pushes the companies and the competition to be better and to work harder, and you come out the other side of that as a more institutional company with a more solid footing and basis.
So geography obviously has a lot to do with why people choose certain strategies, but what is a Bitcoin treasury company? Let's talk about fundamentally what that is and how you guys are thinking about your strategies.
I think if you compare us with Apple, Apple's basically holding mainly fiat or short-term money market funds or treasuries in their own treasury, basically, to run their financing. We chose a different path. We chose Bitcoin because we believe that's a much more valuable asset, really moving towards the currency debasement as well. And we think longer term, it's the most valuable asset to hold on your balance sheet. So if you look at what a treasury company can become, it can actually become anything it can almost wants to be. So it can be a bank to really build a whole financing business. It can also start building out a conglomerate of profitable businesses. So really using the Bitcoin on its balance sheet to purchase more profitable businesses, use the profits out of these businesses to accumulate more and more Bitcoin. That can also be a really interesting angle.
Yeah, I think the term is definitely evolving right now and is going to keep evolving. I think when you're talking about a treasury company today, you're talking about the MicroStrategy model, the MetaPlanet model. It's a hyperscaler. It's a company focused on getting as much Bitcoin as possible, as fast as possible, as cheaply as possible. But I think that's going to evolve over time. I think, to me, what a treasury company is, a Bitcoin treasury company is, it's a company that's long-term focus is on growing your wealth in Bitcoin and growing the amount of Bitcoin you have on the balance sheet. And then the question is, what do you do with that? Do you just focus on getting more Bitcoin, which is what a lot of companies are doing? But I think we're going to start seeing other things where, how do I use my Bitcoin to actually grow my business, whatever that business is? So that's the answer for me, is it's a company that's focused on buying more Bitcoin over time.
Yeah, I think that we will see the concept of a Bitcoin treasury company, right, which is essentially a company that reorients their entire focus around Bitcoin, right, which is different from a operating business that does something that's not Bitcoin focused and simply decides to hold some of their treasury in Bitcoin, which will eventually be probably every company in the world, right? But right now you have this unique phenomenon of Bitcoin treasury companies which reorient everything in terms of Bitcoin. And those companies, I think, will evolve into Bitcoin businesses, building businesses on top of their Bitcoin balance sheets. And I think that'll happen for two reasons. One is that Michael Saylor, sort of preaches that the ideal use of capital in a Bitcoin treasury company is simply to buy Bitcoin. I don't think that works for companies of our size that are trying to scale and survive to become the next strategy. The capital markets will be open to strategy far longer and in much worse circumstances than they will be open to us. So we have to build businesses, operating businesses with cash flow on top of those balance sheets for longevity, for resiliency, so that we can survive these cycles and grow into the size of a strategy. That's number one. Number two is that we are in a relatively permissive regulatory environment for crypto assets. And in the future, I think that may change, particularly in the United States, if the White House switches hands in 3 years. I think the easiest vector of attack for regulators on a Bitcoin treasury company is you're a fund and you should register as a fund, and you therefore lose the ability to issue accretive debt or equity capital. And the defense against that is to have a robust operating business.
Yeah, totally makes sense. The topic has been raise money, buy Bitcoin, but that's not just holding Bitcoin is not a long-term, you need more capital to come in to be able to sustain the business, right? So I totally agree with all of you.
I also think on that, Amanda, you really need to differentiate yourself. If you look at globally, there are over 100 different treasury companies already. So how are you going to differentiate yourself? And to Henry's point, you really need to look at operating businesses. That's a key differentiating factor. But also how you structure your balance sheet and how you most efficiently make use of your balance sheet.
So do we think that there will be a few large treasury companies in the future? Do you think we'll see consolidation, or will we continue to see a lot of treasury companies in different markets?
We already witnessed the first consolidation within treasury companies. So in a way, that's already the first move. From our perspective, we see it as a positive that if, say, a treasury company is trading significantly below their MNAV, they are unable to basically go above 1. That another treasury company within the industry is effectively consolidating that treasury company, specifically because then we ensure that Bitcoin stays committed to the same goals and principles to which we started those treasury companies in the first place. I think globally you would have like some serious large players. You already have MetaPlanet, of course, in Japan, Strategy in the US. Now we see in Europe, we see like multiple popping up in each country. Time will tell how that consolidation will play out, but it's definitely going to happen.
Yeah, I mean, I agree. I think essentially we're going to see a lot of consolidation and then diversification. And then where we are right now is we're seeing at least one Bitcoin treasury company, if not multiple, in every major market. I think we're going to start seeing that. I think we're going to see new business models, new ways to accrue yield, new ways to grow the business, seeing more operating companies built on their Bitcoin stacks. And what's going to happen is the winners are going to keep moving upwards and the losers are going to disappear or hopefully get acquired by other treasury companies. The goal here is to get every company in the world to have some Bitcoin on the balance sheet. And I think there's going to be a lot of ups and downs on the way to that.
Yeah, I think the interesting thing about our industry is that the cycles are fast. And so you very quickly get a sense of who's dedicated to Bitcoin, right? I think everybody here has been in this space for many years, maybe a decade, plus. And so, you've seen through the years the people who have been like, oh, I'm going to do this, right? I'm going to make a bunch of money really quickly. And then it gets really hard because the price crashes, you deal with volatility you've never experienced before in your life. And a lot of those people are like, yeah, I'm out, I'm done.
But that's the fun part.
Yeah, that's what I completely agree.
So we talked a lot about structure, geography, and I think you all know what I'm going to ask you next because I've been asking you questions behind the scenes on it. So I think about how we measure treasury companies. I do not like MNAV and I do not like sats per share for measurement of treasury companies. I think that they are stale metrics that don't really give the underlying understanding and assumption of the business. How are you guys thinking about measurements and how you're sharing your measurements and what you think the industry should be judging a treasury company on?
Yeah, I think if you look at treasury companies and how they currently share their measurements, you can nearly track them all live on their own websites. There are also websites which are basically consolidating it and updating it near real time. But what you see is that quite often those MNAVs are incorrect because of the data sources they're using, the amount of shares are not correct, the amount of Bitcoin which might not be correct, or pricing is simply incorrect, which is there. So I think collectively as an industry we need to tackle that issue as a whole because treasury companies basically get targeted because of their MNAV basically being too high, too low, or like not moving at all. So I think we need to work on that collectively. Also show that there's assurance on whatever we are publishing and make sure that it's factually correct.
Yeah. There's an inherent conflict between being a public company and being able to be extremely transparent, right? Because you can't always say what you're doing. That's just how it works as a public company. So that's why I think some of these metrics don't exactly make sense. So for example, MNAV, your outstanding shares, you don't update that every day somewhere. And the third-party data sources are sometimes very wrong. And so people are pulling these numbers from sources that they think are good, but the company can't even respond to that or get the updated information to those sources. So I agree. What metrics do you think treasury companies should be judged on?
Well, I think it's more of an iffy one. It's not like a hard metric, which I know is what you want, but I would say it's coming back to the shareholder. It's really something that gets sometimes forgotten in the treasury company narrative. It's what do our shareholders actually want? And for us, how we want to be judged by our shareholders is, are we going to bring more Bitcoin adoption to the Nordics, to institutions, to retail, and are we going to bring more utility and usage towards Bitcoin options and Bitcoin derivatives? That's where we're focused on, is as long as we're showing our shareholders that Bitcoin has a space in the Nordics and that the value and utility of our Bitcoin stack is going to keep increasing over time, then I feel we've done a good job.
Yeah, I mean, MNAV is a particularly interesting one because nobody agrees on how to calculate it, right? I mean, it's like you go to MicroStrategy's website and it's, it's the NAV divided by the enterprise value, right? But a lot of other people use the market cap, not the enterprise value. Some people use just the shares that are in issue. Some people use the shares that are in issue plus the warrants. And warrants are a pretty popular method of financing for Bitcoin treasury companies and obviously represent future dilution. From our perspective, it's always been like, well, you should include the warrants. Like right now you have companies with like 30% warrant, dilution coming down the line, but they're only showing their MNAV based on the shares that are in issue. So they're out there telling people, oh, we're trading under a 1 MNAV, but they're not under a 1 MNAV. They're actually like a 1.2 MNAV, right? So
yeah, we saw the same thing in mining companies. So in 2020, 2021, there was a rise of public mining companies. And the metrics that everyone kind of held everyone to was the cost to mine. It made no sense. Some people were using only electricity costs. Some people were excluding SG&A. Some people were including SG&A. Some people were excluding ASIC costs. Some people were including them. And ASIC cost was such a big part of the overall component. So it was like you can look at someone and they might put in an investor presentation, the cost to mine, it was at the point like maybe like 15 grand, and another person would have it for 60 grand, but they were actually a better cost to mine because they included everything in there. So I think we'll see over time treasury companies start to evolve and hopefully have like metrics that work for everybody. But I've never, like in mining, I never saw everyone get aligned. So I guess I'm a little pessimistic on like the ability for the whole industry to get aligned on metrics and how you calculate them. So we have time for maybe one more question. If we have a crystal ball, which I think we all wish we would have because we would have all saved cash to buy Bitcoin yesterday. Where do you think we'll see the industry, and especially where treasury companies will be in 5 years from now? And 5 years in Bitcoin is a very long time. It's like basically like you're a dinosaur.
So you're talking about when Bitcoin's $1 million?
Treasury companies, yeah.
No, but Bitcoin will be $1 million.
I'm not going to ask you for price predictions. I hate that.
But nonetheless. I think that we will see more companies that are operating companies that have a Bitcoin treasury, right? That maybe the operations have nothing to do with Bitcoin, right? I think that will become considerably more widespread. But I also think that the current class of Bitcoin treasuries, right? Companies that are focused specifically on Bitcoin, there'll be considerable consolidation. And you'll probably see like a cohort in each geographic area that has come through those 5 years of competition and consolidation and has come through as sort of leaders. I don't think necessarily that, there may be one particular leader. That doesn't mean that there's going to be one Bitcoin treasury per region, right? I mean, I think multiple companies can succeed at different sizes in a single jurisdiction.
I think to add to that, we also need to be mindful, of course, of the whole centralization. We also don't want like one treasury company globally to be in existence. It has to be way more dispersed. Every jurisdiction, maybe every country deserves a winner in that sense. But I think fast forward in 5 years' time, hopefully Bitcoin price is up 10x. And then we can also see way more companies already adopting this in their normal treasuries for the like of some Max 7 or other companies.
Yeah, no, I totally agree with both points here. I think for me, maybe it's more wishful thinking, but I hope it's a prediction, is that I want to see Europe own a lot more Bitcoin in general. I want to see more European companies owning Bitcoin. I want to see European citizens owning Bitcoin. I want to see European governments owning Bitcoin. And yeah, I mean, US has gotten a really good head start this year. Millions of Bitcoin and treasury companies and an IBIT. China's never stopped accumulating Bitcoin, so I think Europe really needs to catch up, and I hope in 5 years we'll be there.
I think to add to that, like if you look, the Minister of Finance was here yesterday of Luxembourg, him basically stating here outright, 1% of his sovereign wealth fund allocated to Bitcoin, never selling it, holding it until eternity. That's the bullish signal we need also from politicians globally overall, but especially in Europe to catch up with the US.
I feel like there is a mentality in Europe that is uniquely well suited to Bitcoin. And it was an eye-opening experience for me because, you know, in the United States, it's like if you live in a house that was built in the 1800s, it's like, oh, wow, that's an old house. That's really cool, right? And it's like in Europe, you know, you're meeting with institutions that have existed for 600 years. So there is inherently a longer-term mindset that exists in Europe that doesn't necessarily exist in the same way in the United States. And so when you sit down with these banking institutions, the Rothschilds of the world, right? And they're like, we have this name and this reputation that extends back centuries. And you're like, well, we actually also think in centuries, right? People don't think about that when it comes to Bitcoin because they think, oh, you know, it's all short term and quick cycles and, you know, you make a quick buck. But, you know, the people who have been in this space for 5, 10, 15 years, right? Like, they are thinking about the future in decades or centuries. And the companies that are being built on top of this asset can take that kind of a long-term perspective. And so that's, you know, when I was talking about how the increased regulatory environment, the conservatism is actually beneficial, it forces you to return to that perspective, to say this isn't a race or a sprint, this is a marathon, and you're building a company that you want to last for decades or centuries.
Bitcoin certainly will. Thank you guys so much for your time.
Thank you.
Okay. You want to do... we're live already. Ladies and gentlemen, we're back. We're here at Bitcoin Amsterdam 2025. Some technical difficulties. We're back in the saddle, though. I'm joined by an all-star panel here. We were just talking off camera, which turned into on camera to my left. We have Spencer Nichols over here. And Spencer, very, very special guest to have on this segment. This is the man usually behind the camera, so it's an honor to have him here. But to my left, we have Gary Krugliakov, head of Bitcoin strategy at Saifedean. And sir, I was just actually asking how you'd like to be introduced, so let me hand it over to you to introduce yourself.
Yeah, my name is Jake. I'm the Client Success Manager here at Bitcoin for Corporations.
Client Success Manager at Bitcoin for Corporations. Gary, I'm going to go over to you first. So maybe some takeaways from the conference so far. What have you been working on? What would you like to share with our audience here?
Yeah, well, great to be here. Thanks for putting me on. And we can't wait to tell the world more about why Bitcoin is going to take over also Germany and German corporations. So that's kind of our mission here.
Some big words.
Yes.
Yeah.
And, it's the third, fourth biggest capital market outside the States, third biggest economy in the world. Lots of zombie companies, as Taylor calls them. So I think we're on a mission to change that.
I'm into it.
Yeah, great to be here in Amsterdam to connect with the other European players and of course you guys.
Amazing. Great to have you here. Spencer.
And on the main stage, we just heard from Jurjen Mayer as well as Henry Elder, both people operating in the European Bitcoin treasury space. And Gary, I know we spoke previously on the Bitcoin for Corporations show, and you spoke about how there's kind of a fixed income culture within Europe largely. Could you speak a little bit more to that? Like, what is this opportunity set, and how do you understand that in the context of your financial strategy?
Absolutely. So basically, Germany is a fixed income land, right? They have lots of short duration fixed income products that institutional investors love, where it's a very plain and simple, easy tradable product. So we call them in German Schuldverschreibung, and that's something like Sailor's now kind of tapping into with the STRE product that they launched.
What is the response been to STRE, and how does that inform what you may do down the road?
Yeah, well, clearly the response has been tremendous because initially they issued 350 million euros, and now that got topped up to 650 within days. Without knowing anything more than that, I bet that they're going to top it up to over 1 billion euros very soon. So clearly there's demand.
Yeah.
Clearly there's investor demand, institutional demand. Europe, specifically Germany, has been traditionally been hungry for yield because not many know this, but Germany has a low interest environment, a 10-year government bond that pays you 4 or more percent in the States. The same asset pays you 2 or just shy of north of 2% in Germany.
Yep. Yeah, that low yielding environment, I think, really primes people for higher yield Bitcoin-backed credit.
A curve based on Bitcoin, right?
I want to take it over to Jake real quick. Jake, I know you're really tapped into the Bitcoin for Corporation side of things, of which Saifedean participates, but want to get a sense of, have you seen a lot of interest in European companies in general, or is Saifedean an outlier when it comes to this sort of movements in capital markets?
Jake, if you don't mind, we did get word we have to go back to the main stage, but we have about 15 to 30 seconds, so a quick answer if you don't mind, sir.
Yeah, Saifedean has been a leader in Europe as far as one of the treasury companies, and we're really excited about what they're building and how they're going to model how to do this for the other companies coming online.
We appreciate that. Good perspective here from the live desk at Bitcoin Amsterdam 2025. We are headed back to the Treasury stage where we're going to hear from Chris Cedar, who is hosting an interactive game show. You heard that correctly, ladies and gentlemen. It is called Who Wants to Be a Satoshi Millionaire? Let's head over to the Treasury stage and we'll be back here at the live desk after this.
We are going to play a quiz show. You're going to get 21 questions. You can start scanning the QR code. No registration required. And we have 3 people playing along here. Susie, come on up. Round of applause for Susie. And we have Adam back, Dr. Adam back. And we have Shinobi. And let's see what kind of prizes we have. So we get around, the 20 people will get like a cool credit card wallet from BitSurance. And the third prize will be a Zero starter kit. Second prize, a Bitbox Nova, the latest version, of course, Bitcoin only. And the first prize, where we're all here, from Netherlands' own Bitwavo, we will give away 1 million Satoshi. Again, 21 trivia questions, Bitcoin, cryptography, finance, and it is best to be right, but it's also good to be fast. In the end, if somebody has the same correct amount of answers, the lower time will win. And are you guys ready? You get to scan this QR code too. And you just wait in there. Let's hope the internet plays along. Show of hands, who has trouble scanning the QR? You can go to slido.com. Let's go to the next slide. You can also go manually on slido.com/212. There we see the Peter, Skylar, Bjorn, Niels. Okay, we have a bunch of people in there. 79, 99 people. That looks great. 135. Come on, let's get to 1,000 people. So in this thing, what's happening on your phone?
Technology is working.
Technology. Do I need to give you a hotspot? Can you dip into your 5G, please?
It doesn't seem to want to cooperate.
Okay, what you're gonna do, you can play on my phone. That's no problem. Because as a European citizen, my connectivity might be better. You're good?
Oh, hold on, it's doing something. It's doing something.
Yeah, I don't want to see you get wrecked.
Well, I'm not going to win anyway. I'm competing against myself.
Okay, guys, we are 321 people. Those are rookie numbers. You got to pump those. Join. The people in the top ranks too. Join it. You good? Okay, give yourself a name. And it needs to be your actual name. Susie, I will double check. So we have Shinobi, Adam Beck, who has been accused of being Shinobi, and Susie. And I would say we start the quiz with the very first question. You will get multiple choice. You can select the correct answer, and then there is a send button. Until the time runs out, you can always change your mind and choose a different option, but you need to confirm with sending. All right. And you can also join at a later time. Let's start with the very first question. Bitcoin, a peer-to-peer electronic what?
Data storage
system. What did you say?
Data storage.
Data storage system, okay. You can lock this in, and you sent it, you select it, wonderful. For the first question, we have 60 seconds on the clock. Later questions will be shorter, so everybody gets up to speed. And again, the time that you set to log in counts towards the end goal. 20 more seconds. I will go through different prizes. We have a bunch of hats here too from Bitbox. We have the latest Bitbox O2 Nova, Bitcoin-only hardware wallet. 7 more seconds.
You're missing the red underline effect from Bitcoin SV.
Come again?
The red underlining. Roger Ver used to underline it in red.
Okay. Wow, a lot of people fell for my very crude Photoshop and chose credit system. No, of course, it is a cash system. That is the correct answer. And in the leaderboard, the first, in 5 seconds, we have a Tom, Sam Coleman from Switzerland, Eric, Louis. Great. None of you guys are in the top 5, but I guess you all chose the correct answer. Wonderful. As we can see, it's electronic cash system, of course. We continue to the next question. Are you ready? Which of these countries is El Salvador? A, B, C. Trick question. None of these countries is El Salvador. You get to choose. Show of hands, who has been in El Salvador? Not many people. It's a place I want to visit. And maybe Nayib Bukele is giving you a hint. A lot of people say, trick question, okay, geography not strong in Amsterdam. Of course, it was B. Like, why don't you trust me? Like, I tried to help you. You guys chose correctly. Susie. Susie chose trick question. Well, better luck next time. But again, I don't expect anybody to get all 21 questions correct.
I mean, would you really believe that a politician would lie to you?
All right. He's not a politician, he's a great leader. We have a change. Eric is now in first with 10 seconds total. So again, being correct and fast. Is this Eric? Wow, UX Eric. Round of applause. No, okay, good. You can continue to the third question. Are you ready? How often does the Bitcoin halving occur? Does it occur every 144, 2016, 52, 560, or every 210,000 blocks? How often do we see the Bitcoin halving?
Obviously every day.
Every day. In price? Who's looking for a Bitcoin halving in price? Nobody. You could buy cheaper. All right. So most people chose the correct answer. Of course, it's 200,000. Yes, correct. All right. We continue to the next question. First off, Eric, did you misclick? Wow, he misclicked. Okay, what did you choose? 2016, that's the difficulty adjustment. Well, okay, better luck next time. Okay, we continue to the next question. We don't have that much time, 18 minutes. At launch, Bitcoin version 0.1 only existed for which operating system? What was the preferred? Did you say Temple OS? And oh wow, he selected Temple OS. Okay, we have Windows, Linux, Mac OS, and Temple OS. Who has heard of the latter? Who knows Temple OS? Who has ever run Temple OS?
It is the best operating system ever created.
Yeah. So, what did you choose?
Linux is...
Susie chose Linux. What did Dr. Adam Beck choose? Ooh. He chose correctly. He chose Windows. It is not Linux. Yeah. Very peculiar. Maybe Satoshi thought if it needs any chance of getting adoption, it can't be on the nerd operating system. So the first version was on Windows, later versions already were with Linux.
He literally prioritized having the minimization icon so you could keep it running in the background over Linux support.
Interesting fun fact. So that screenshot is from Temple OS. What does the leaderboard look like? New people, Leendert. Sounds very Dutch. Where are you? I don't see him. He's shy. Prof. Edu. Brady. Is it Brady from Swan Bitcoin?
Maybe he's not even here.
Smat. Anyways, okay, round of applause for the people in the leaderboard. We continue with the next question. Oh, by the way, this is a picture of how Bitcoin version 0.1 looked like. That was the very first thing. And there was a prominent button called Generate Bitcoin, and you click it, and you got 50 Bitcoin. We wish we all would have been there and done that, but we didn't. We continue to the next question. What significance had Bitcoin block 630,000? What significance had Bitcoin block 630,000? Was it a soft fork for OpCTV? Was it the first block with a reward of 6.25 Bitcoin? Was it the launch of, what's happening here, of Bitcoin Magazine? Or was it Hal Finney's last message? Bitcoin block 630,000, what is the significance of that? All correct answers.
CTV getting turned on.
Yeah, CTV. Who is a proponent of Object Template Verify? Me and Shinobi. Damn, that's not consensus. Yeah, it's a discussed soft fork. And of course, as we know, every 210,000 blocks. Come again?
I didn't hear any counter arguments, so it sounds like consensus to me.
Consensus has been built. Yes. You could have done the math because 210,000 blocks times 3, it was the third halving. And now we're at the fourth, going for the fifth. All right. Who knew that? Professor Idu? You want to dox yourself? There. Great. Leonard, Yorick, Smat. Still a lot of people in the running for the 1 million Satoshi, and the times are very close. We continue with the next question. The amount of Satoshis that can be bought for $1 goes by the name of, we've all seen the picture. We have Jack Dorsey here. And you have the answer selections. We have Amsterdam time, Paris time, Berlin time, and Moscow time. A very famous interview that Jack Dorsey gave, and the meme was born. How do we call? Oh, Amsterdam time. Wow, local pride. No, of course, it's Moscow time. He had a block clock in the background. And Shinobi, do you know what time it's at?
No.
It's 1952, I think. Right now we are at a Moscow time of a little bit over 1,000, right? Because the price, oh my God, we're at $95,000. So one Satoshi, $1 buys you around, 1,000 sats.
Chris, I'm doing really badly.
You're doing badly? You chose Berlin time? Oh my, I saw the red marker. I didn't want to point it out, but very brave of you to mention that you do not remember Moscow time, Susie. But how many points do you have so far?
I think I've got 2 questions right.
Oh, let's see. We go to the leaderboard. You are in which place?
198th.
You have 2 of 6 questions correct. I mean, participation is everything.
Maybe you're not doing badly, Susie. Maybe these answers are all just lies.
I think I need a new pair of glasses.
How are you doing, Dr. Beck? 4 of 6, and you, Shinobi? 4 of 6 as well. You answered like 10
2 of those were lies.
Yeah, okay. All right, okay. You have a lot of chance. I think that the people in the audience will win the 1 million Satoshi. You were out of competition anyways. We continue. So first off, you see like it was 1952. That was the block in the background. And some journalists assumed, because there is daylight, and like 8 p.m. or so, that was the time in Moscow, and Jack Dorsey is signaling something. No, it's just like the Bitcoin price in the background. All right, we go to the next question. It's going to be a logo question. Which of these is the official Bitcoin logo? Is it happening?
Still not loaded for me.
It's not loading. We got a reminder to be mindful of the time. I'm going to press again. Let's see if it crashes. Okay. Which of these is the official Bitbox logo? We just showed the Bitbox Nova. That is one of the prizes that you can win. You've been at their booth. You've seen the sponsor slide. Where are we at? Oh, wow, he's even wearing the logo. Correct. So you all chose correctly. Wonderful. Of course, it is B. And what does it do to the leaderboard? Prof. Ido is still in first place, but he can be caught. And we see only 4 people so far have all the correct
Eric's
answers.
Back.
Eric's back in the top?
Yeah, so let's continue. 7 of 21. Next question. There we go. This is one of the prizes. It's a fantastic thing. Next question. Are you ready? Which term refers to stealing someone's Bitcoin by threatening them with physical violence instead of hacking their wallet?
$9 screwdriver.
Is it a $6 socket strike, a $5 wrench attack? Is it a $10 hammer exploit, or the $9 screwdriver negotiation? What is a meme that we all know?
If somebody wants to negotiate with me with a screwdriver, they can just have my coins. I don't like the sound of that.
Well, okay. We over at Bitsurance, we insure against the $5 wrench attack. That was the correct answer. The leaderboard hasn't changed. And yeah, it came from this very famous Randall Munroe comic. If you're interested in insurance, we cover that. Somebody can kick your door and we insure you against $5 wrench attacks. We're running out of time. Next question. Are you ready? The last name of which prominent Bitcoiner translates to Taylor? And again, maybe there's a hidden clue in the image. Is it Nick Szabo? Is it Andreas Antonopoulos? Is it Gavin Andresen? Or is it Wei Dai? Who do you think, whose last name translates to Taylor? I was at a Hungarian Bitcoin conference and they were really proud of him. Of course, it's Nick Szabo. And you guys all knew that, yes, okay, Susie is hiding her phone, I guess not. The leaderboard looks great. Oh, only 2 people knew everything so far. We continue to the next question. We've seen David Bailey walk around and he had a very special hat on. Which animal was on the Silk Road logo?
A honey badger, duh.
So we have what the options are: a frog, a honey badger, a kraken, or a camel. Which animal was in the famous Silk Road logo? Susie. Of course, the people fell for my very crude Photoshop. It was a camel. So this was, of course, ChatGPT. It's not a honey badger. It was this camel. A lot of people fell for that. But, well, we continue. While we're at logos, the next question is also about logos. How many of these logos did Satoshi Nakamoto design himself? We've had various Bitcoin logos, some Bitcoin adjacent logos, some forks, some soon-to-be forks are in here. How many of these logos?
He put a lot of time into the Bitcoin Cash logo.
Yeah, the Bitcoin Cash logo, let's turn it and make it green. And I don't think Satoshi designed it. All of them? Susie! No. Satoshi only designed 2, the 2 gold ones. A person, anonymous, called BitBoy, designed the one that we all know and love, the orange one. The other one is Bitcoin Knots and Bitcoin Cash. And, oh wow, Lendad, who are you? Where's Lendad? He knows everything.
Eric, you're gunning for first, man.
Where's the person? Somebody's pointing to... All right, you're doing fine. Let's continue. We have 7 more minutes. This was the logo, and every time you edit, I'm getting really annoyed. If you zoom in the official Bitcoin logo, there's like this artifact, and every time I have to remove it. Anybody who has done everything like with Bitcoin artwork knows about it. But we continue with the next question. It's an easy one. You just have to guess. What is worth more, 1 kilo of gold or 1 Bitcoin? When I created these questions, the Bitcoin price was somewhere else, but it's updated to the latest. Please don't. I mean, there's always a hint in the pictures, is all I'm saying. There's always a hint in the picture. We know this gentleman from Puerto Rico. I think it's David Bailey's neighbor. Of course, currently, it is 1 kilogram of gold. It is a little bit like $130,000 or something. The leaderboard, again, the guy knows everything. Wow, there's one person really in it for the million Satoshis, and he sounds very Dutch. And Samuel Kuhlman is keeping up. And Eric, great. Okay, we continue. We do some quick maths. That's you right now. If the price rises to 500,000 euros tomorrow, how much Bitcoin can you buy for 1,000 euros? Is it 0.002, 0.005, 0.02, 0.025 Bitcoin? If the price of Bitcoin 5 times tomorrow, wow, Susie knows math. Huh. Dr. Beck too, yes. Shinobi does not.
I don't math good.
Yeah, you don't do public calculus. It's, yeah, so what you can buy right now for 200 euros will be more expensive when the price rises. So take your chance. We continue. Next question. What is older, Bitcoin or Instagram? Who has used Instagram?
What's Instagram?
Instagram is like some meta Facebook thing for people that show their face, I guess. And what would you guess is older? Bitcoin or Instagram? Out of left field, the people chose Bitcoin, and that is correct. Bitcoin is from 2009, Instagram from 2010. We continue. Question 14 of 21. Samuel, oh, Switzerland is number 1. 13 from 14 question, and he's really, really fast. Well done, well done. We continue with the next question, question 15. What was the code name for the Trezor Model 1, the very first hardware signer during development in 2012? What did Satoshi Labs name their first hardware wallets during production? Was it Bitbox, Bitkey, Coldcard, or Seedor? What was the name that they chose and somebody else then used later? You don't know?
I can guess.
No, it's not. Well, you chose Seedor. That's my company. No, it was actually the Bitkey. And yeah, to prove it, Samuel, nobody knew this. Nobody in the top 5, I guess, knew this. Here we see Slush, that's the very first commit, and there you see Bitkey. The Trezor was supposed to be a Bitkey, but they changed the name later on. Fun fact. We continue with the next question, and it's a very interesting question because history rhymes. Who wrote the user-activated soft fork client during the block size wars in 2017? Was it this guy, Shinobi? Was it an anonymous person called Shaolin Fry? Was it a person called Dathan Ohm? Or was it, who is that, Chris Skeeter? Who wrote the famous UASF client that signaled, hey, I'm running a node, I want this to activate? Wow, 27 people think that you can code.
I am not a developer. I don't know how many times I have to repeat this.
Adam got it correct. Susie got it correct too. Wow, look at you. Shaolin Fry. He was a Litecoin developer.
That's fake news.
No, it's not. I have sources.
Quick history lesson. The only reason he contributed to Litecoin was so Litecoin developers didn't break something in so similar of a code base and make Bitcoin.
Shut up, nerd. We're running out of time. Next question. How many Square merchants can now accept Bitcoin payments in the United States? Jack Dorsey's company Square launched Bitcoin adoption. Is it 40,000 vendors, 400, 4 million, or 40 million vendors? One of the biggest... You knew this? One of the biggest events. Now you can pay in Bitcoin, and the merchant doesn't even know that he accepts Bitcoin. Isn't that fantastic? And the correct answer, people chose correctly in the majority, was 4 million. We can see this fantastic article. If you don't know, Bitcoin Magazine publishes some great news. And we continue. We have 2 more minutes. Which of these currencies was used the longest and was the most widely circulated in history? If you read Lynn Alden's book, Broken Money, you know, is it paper money, charger plates, metal coins, or cowrie shells? Which of these currencies was used the longest and was most widely used in history? Here we have coins, here we have shells. You also chose shells, and Shinobi, I'm sorry, cowrie shells. We have been using them up until the 1800s, but we used them for 3,000 years, and coins are only 2,500 years or so.
I never used cowrie shells as money. I don't know this Wii you're talking about. I've never used
I have not been
shells
around.
as money.
I've used shells constantly to pay for things. Okay, Wave Space is picking up. Arno is new. This is a charger plate. This is like a predecessor to the credit card. We didn't use this very long. These are cowrie shells. Get ready for the next question. Which exchange dominates euro-denominated trading, excluding stablecoins, with 50% market share? Is it Coinbase, Kraken, Binance, or maybe is it the sponsor for the 1 million Satoshi from Amsterdam? Which Bitcoin and crypto exchange dominates euro-denominated trading, excluding stablecoins? And the audience rightly chose Bitwavo, hidden champion, growing really fast, and they will be donating the 1 million Satoshi at the end. 2, maybe Arno. We continue. So this is how their financial looks. Amazing. I was very surprised when I saw that, enough shilling. We continue with the next question. If the last block was found 9 minutes ago, when do we expect to find the next block, assuming hash rate stays constant? Is it in 1 minute, and 5, and 10, or in 20 minutes?
Some amount of time.
Some amount of time. We don't know, right? But the expected value is very well known because it's Poisson distributed. This is the penultimate question. 6 seconds.
This is a tricky one. It's not very
It
intuitive.
is not 1 minute. It's always 10 minutes. It's always 10 minutes.
The dice has no memory.
Yes, we have 8 seconds left. We go to the last question. We've all seen this formula, and if you win one of those wallets later, you can check it. How many, what number goes there in this back of napkin calculation of how many Bitcoin there will be? It's not entirely correct. Is it 2132? What have you chosen? Show me, Shinobi.
No.
It's very famous. He knows. Susie knows. If you don't know, come on, show me. You have to flip over your phone.
No, I don't.
Be cool. And
I'll
of
sit here
course,
all
it's
day.
32 because we have 33 halvings from 0 to 32. That was Who Wants to Be Satoshi Millionaire? Arno wins 1 million Satoshi. Sam gets the bitbox, Linda the Cedar kit, and like the 20 people in the top 20 can come to me. We will give the prizes out here. We're a little bit over time. Round of applause for the contestants. What place did you make? 16th place. Seventh place for Adam Beck. What place do you have? Show me.
27.
What place is it? I don't see. 27. Wow. Adam Beck is the crowned champion. Thanks so much. Thanks for Bitwavo for sponsoring. I hope you learned and had fun. The prizes will be over there. Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. We just saw Chris Cedar hosting Who Wants to Be a Satoshi Millionaire. Quite the game show host, that man. I hope somebody out there was watching and gets him a contract for some major network soon. Anyway, we're here back with an all-star panel. I am joined to my left by Gary Krugliakov, head of strategy at Ifinio. To his left, Spencer Nichols, producer-director at Bitcoin Magazine, the man behind these cameras here usually, but he's on the desk with us here, and Jake Fenton, head of client services for Bitcoin for Corporations. Maybe not the head of it, but he works in client services at Bitcoin for Corporations. Jake, we're going over to you first. There was a Bitcoin Corporations for Symposium. It was 2 days. It was the day before the conference got started here, 2 days ago. A little overview, if you don't mind, a little recap.
Yeah, we took the day to meet with BFC members as well as other companies and people interested in the Bitcoin treasury space. We got to network, and we got to hear from guys like Gary to talk about the strategy that they're running and what they're building in their respective market over in Germany. And we had a great time. We learned a lot, and I think what we did is we pushed the ball forward, and we're building something special with these treasury companies.
Appreciate that. Yeah. Some thoughts. We were just talking off camera a little bit about Bitcoin in Germany, generally speaking. Even this idea of nodes, people running nodes, why that's so sort of integral to German culture. Some comments on this.
Yeah, so apparently Germany or German IPs run the second largest nodes network on the Bitcoin blockchain, so after the US. I think given Germany's economic, political history, people do appreciate free thinking, less censorship from centralized players, the government specifically, decentralized power, because didn't go that well last time.
Didn't go that well last time,
So,
yes. We'll leave it at that. Sure.
Yeah. And so I think at heart, many Germans actually really appreciate Satoshi's ideas.
Yeah.
And many, actually put it into reality by stacking Bitcoin, having exposure, learning more about Bitcoin, learning more about what Bitcoin stands for. And with the Bitcoin corporate treasury that we're running, we also want to push the envelope now towards the corporate world, which is humongous.
Bitcoin is for everyone.
There. So I think culturally, Germany is primed for Bitcoin adoption, as you described. I'd be curious if you could offer a little bit more context on like the public sector. Do you foresee any inroads there? I know we've been talking about bit bonds in the United States, or is Germany more just focused on the private sector in your point of view?
Gary, before you dive in, I just want to let you know we're going to head back to the main stage in about 30 seconds, so I don't want to cut you off. Just want to give you a little heads up there. Yeah.
So the search term for Bitcoin on Google is apparently the highest after the United States. So clearly the voters have interest. And I think if the politics and the financial regulators, etc., understand that the community, the voters, the investors, retailers are interested in that, I think we'll see something, but probably not anytime soon, because in Europe everything happens on a EU level, so you kind of need to convince Ms. Lagarde and Brussels first.
Miss Lagarde, not a Bitcoin favorite, but we do have plenty of Bitcoin favorites here at Bitcoin Amsterdam 2025, one of which is Kale, developer of the protocol Cashew eCash, built on top of Bitcoin and Lightning. We're going to hear more about that from the Treasury stage right now. We're headed over to Treasury stage. We'll be back at the live desk right after that.
I think my have a conference in Amsterdam and not talk about drugs. So that's sort of the very short outline what's going to expecting you, obviously in connection with Bitcoin. Quick introduction. You might hear from the accent, I'm German. I'm an entrepreneur since I'm 20, which is 27 years ago. I'm 47 now. I started a biotech company with my two professors at uni, which was super random because I didn't fully understand what they were working on, but they were very good, which became really successful. So I skipped uni. And then after we IPO'd the company, which is called Alnylam, I started my own investment firm, which is practically my own family office, investing very broadly. So we do still a lot of biotech, which is our core sector. Then came into crypto fairly early, not as early maybe as some others, but 2016. So we're doing a lot of crypto now. We have a little bit of a pocket deep tech, which is everything from space tech, AI, and stuff like that. And we have two bricks and mortar things, hospitality and sports, and a little bit of natural resources. But that's just an overview. The title is Reprogramming Mind and Money. I want to rephrase it a bit because reprogramming usually, like, people might think, oh, is it kind of, I don't know, manipulating mind and money or whatever. I think the better term would be recreating mind and money, or actually liberating. I want to a little bit put together, because a lot of people ask me, like, hey, why are you so meaning, or what's the common kind of denominator between, especially coming to the point now, you work in mental health, and I'm doing a lot, especially with psychedelics, and with Bitcoin. Is it just random? You like both? Or is there any sort of connecting link? And I think there is. Like, I was thinking a lot, like, because, so what is really at least drawing myself to Bitcoin, and what I guess is drawing a lot of you to Bitcoin, is the whole aspect of freedom. Meaning, I'm a very, like, sort of libertarian in my core. I think sort of we shouldn't pay taxes. At least we should pay much less, because governments really don't do anything, almost anything good with it. But the worst, I think, what governments do to all of us, and which is literally taking away the fruits of our labor and what we're building over our lifetime, is actually by devaluing, obviously, their currency. So I think fiat currencies are, if you really want to put it very harshly, but I think what they are a tool to kind of enslave us. So as you go back to the Roman Empire, actually, it's very harsh what I say, and hopefully that's not quoted, but slaves were better off than most people now. They were actually provided security, provided food, whatever. We always just see the bad sides in movies, but I'm also a history geek. I had 9 years of Latin. Actually, they were integrated in society. They were just like not having excess money and saving. So if you look at what happens to most people today, a little bit less in Europe, but still actually extremely in emerging markets, is people work people pay their taxes, they get fiat money, and over a longer period of time, in emerging markets sometimes over a shorter period of time, the government so much devaluates the fiat currency people have got, so that at the end, net, they're not better off than slaves have been 2,000 years ago. So why I personally love Bitcoin is because it's the one way which was invented to really help all those people to escape their fiat currencies. Yes, we had other ways, by the way. This is why humanity has been drawn to gold over thousands of years, because like governments have not changed in that aspect. They always try to take away your fruit of labor and everything you have. And this is why humanity always has thought after and sort of tried to find stores of value. We had different stores of values like cows, pearls, or whatever, and gold has proven to be the most stable store of value. Why? Because it's immutable. So gold, as maybe some of you know, cannot be produced physically on Earth. It only can be produced in a dying star. So all the gold we have on Earth has somewhere been seeded from outside by comets or asteroids. So somehow, even if they didn't know the physics of it, people over the last thousands of years have felt that gold is the one thing which A, is not corruptible, is immutable, and can sort of help you store value outside the greedy hands of government. I think, as I said, it's more important now than ever. Emerging markets is a disaster. Look at the Nigerian Naira or whatever. Like, yeah, that's, by the way, why especially I think in emerging markets, Bitcoin and other digital assets like stablecoins are taking off so much because people are realizing that. But again, I think also in the Western world, I actually believe that we're going into a new wave of an unprecedented currency devaluation, especially in the US. The US, if you look at it, I want to say compliantly because I see people are filming, but like the balance sheet is very challenging. They're over-leveraged, they have too much debt. I think they're trying their best. I'm actually a big fan of the current government. I think they're trying the best to grow out of that, meaning their two options are, and they're trying both, are growing out of it. But on the other side, they will have to devalue the dollar against any asset. So my standard advice is have assets, not fiat currencies. But I think, again, Bitcoin is one of the most interesting ones. Also because of the second one. So the one thing is Bitcoin freedom, you can escape fiat currencies. So you could now say, well, I can escape with gold. I can escape with real estate. I can escape with stocks, which is true. So my first advice would be have any asset, any good asset, don't have fiat currencies. But unfortunately, the second problem I'm seeing in the next 10 years, we're going to go into an unprecedented time of geopolitical volatility. And I don't want to scare people, but like my personal view is, at least we don't know, but the risks, hopefully they don't materialize, but the risks of wars, you have the whole China-US, also the risks, I think, of civil wars inside certain countries, because societies are becoming more and more unstable, and all of that is increasing. By the way, I think Europe is going down a very bad path, like from socialism to more and more taxes and all of that. And again, in this environment, you not only want to have a store of value, but you want to have a movable store of value. So real estate, normally a good store of value, is very bad if the country you own the real estate in goes to shit. Yeah, gold is already better, but still we had times when we had controls, when governments were trying to take away the gold. Yeah, and that is another very positive example of Bitcoin, or a very positive use case of Bitcoin, is that it's obviously one of the easiest to move and kind of secretly move store of value. So in one sentence, I think maybe I said what you all believe anyway because you're at a Bitcoin conference, but these are sort of my two very simplified. A lot of people asking, why do you own a lot of Bitcoin? And I think you don't need to make it complicated. Bitcoin gives you freedom, protects you from governments, and it's a very movable way of having freedom, because part of my freedom at least is also that I'm hopefully, if shit hits the fan in place A, I'm very easy to move to place B. So having said that though, there's the other part, which is the mind part of the discussion. Because at the end, we're all just doing that because I believe we want to be happy. So money is just, and financial freedom and all of that is just a means to what I think what at the very end we all want to be. We want to be happy, but also we want to be healthy. These are always, and they're very correlated. And then obviously, people define happiness different, or what makes you happy, and money is always helping to sort of allow you to do whatever makes you happy. However, that is kind of a superficial view on happiness. Not a wrong one, because again, I think in order, I don't know, if you say cars make you happy, it's great when you can buy cars. If you say, look, I want to have a family and I want to obviously be able to provide for a family, money is helpful because it helps you do that. But at the very end, I want to bring up one sort of idea, one more like, how do I describe it, more deeper rooted, more deeper going idea of happiness, which is actually, again, related to freedom. And that's why I want to connect these two topics, Bitcoin and psychedelics, because the big holdback for most people of you for true happiness is actually your ego. And not ego in a colloquial meaning, saying, oh, somebody has a big ego, but like truly the part in your brain, which we know actually since around about 10 years where this part is, which is creating your sense of self. So everybody of you here in that room, you don't think about it a lot, but you wake up in the morning, you know who you are, and you have your personality, and that is formed. That is a part in your brain which is creating that ego. And unfortunately, most people believe that this is all what you are. You're only your ego, which is, in my point of view, A, wrong, B, it's very sad, and C, it's the source of also a lot of pain in your life, because your ego is the one, and if it's healthy, it's good. You wake up, you want to work, you want to make money, you compare yourself to others. So again, in a certain portion, that is very helpful, because otherwise you would sort of be lethargic and stay in bed. But for many of us, all of us, by the way, including me, like this ego sometimes takes over. It's when we're getting too eager, too comparing. Oh, this person has more Bitcoin than me. Like this person has a bigger yard. This person, whatever, has a hotter girlfriend or whatever. Like that is actually when sort of the ego suddenly becomes rather the source of misery than of happiness. And there is one group of therapeutics, I don't want to use the word drugs, which helps us mastering our ego, which are psychedelics. So maybe some of you know it. Psychedelics is a whole group of drugs, again, drugs in terms of therapeutics. Yeah, you might know LSD, magic mushrooms. Here in the Netherlands, it's called magic truffles, ketamine, DMT, 5-MeO DMT, and so on. So what I'm working on since 10 years now, and I'm very, very proud of that, that's actually the single, I think, most meaningful thing I've done so far in my whole life, is bringing back all these psychedelics from an illegal space. So you might know it as kind of an illegal party drug, which they shouldn't be, because in the 50s and 60s, these psychedelics have been valuable medical treatments for various mental health issues. So when I discovered them 10 years ago, I was like, holy shit, like, why is this at all like illegal? Unfortunately, it's illegal because what I just said, governments are often a source of pain. In the 70s, the hippies did it technically illegally because they did it outside the medical framework. So nobody cared because, by the way, they're the good drugs. I can show you in a second. Maybe we can put up the chart now. Nobody cared till the hippies became political, till the hippies went against the Nixon government. And then the Nixon government said, how can we discredit those hippies? And they really faked science and practically said, I can go and make a picture. That's the most important thing. If you take away one thing, I explain it in a second, is this. So that the Nixon government faked science and said, you know what? Psychedelics make you crazy. Why did they say that? Oh, because you must be crazy if you're against the Vietnam War. So the government framed the hippie movement as crazy in order to discredit it. And by that, took one of the most valuable therapeutics we had in medicine away from humanity and outlawed it. They outlawed it in a crazy way because they made psychedelics, the whole group, a so-called Schedule 1 drug. Schedule 1 is the worst thing on paper, actually technically worse than heroin. While that's the reality, this is a very scientific research. It's a whole book colleagues of mine have done more than 10 years ago, which is rating every single recreational drug, just as comparison, in terms of the risk for you. Yeah, and if you take one thing home, aside of buying Bitcoin, is that the worst drug in the world, worse than heroin, and that's not an opinion, it's a scientific fact, is alcohol, closely followed by heroin, and everything else you think is bad, while at the very end you have psychedelics, which only have a risk. The pink thing is only you could fall down the stairs while you're doing it, so the only risk of psychedelics is an accident risk while you're on it. But what we're doing with psychedelics is we're actually just recreating, again, what we knew in the last century. They are with a high probability or a high success rate, and we've proven that in multiple clinical studies. So we're doing full-scale FDA clinical trials. They've proven to be really effective, curing with 50, 60, 70% success rate, which is unheard of any form of mental health issue. Depression, anxiety, addiction, the whole range. But why I'm telling it now, because you might say, oh, well, but I'm not depressive, whatever. First of all, mental health is the big problem of our time. Like statistically, around about 15 to 20% in this room have a diagnosed mental health issue. You just don't see it because people can function well, but they are not well. So first of all, it's kind of somewhere affecting all of us. Second, I believe over the next 10 years, because all the changes I briefly touched on, which is coming with AI and so on, if you look at it, mental health issues are crazily on the rise, because I deeply believe on the one side, the world we're building is amazing, but on the other side, clearly, it's not good for our mental health. But coming back to the unifying factor or unifying theme, what are they doing? So while you do a psychedelic trip for like some hours, depends, some are longer, some shorter, but for the duration of the trip, your ego is reduced. So you might say now, oh God, like what is happening when my ego is not there, because then I'm not there. And it's very hard to describe, especially when time is running out. The very short version is every single patient, we've treated thousands of people, I can say it again, in a very clinical medical setting, is reporting there is something else which is always there, I just couldn't hear it because my ego is pounding so loud. Some people would call that your soul, if you want to make it spiritual. Some people would say it's your subconsciousness. Some people would say it's your inner voice. But something we do actually have, which is much wiser, much deeper, and much more healthy for us than only our ego. And I do also believe that, again, in the world we live, this ego becomes louder and louder. The outside information flow becomes louder and louder. And hence we less and less hear that voice, which I think is very, and not just I think, which I can see in our clinical studies, is very healthy and healing for us. So that's, and then a last sentence maybe, I'm just looking around, meaning the most important thing for psychedelics, and by the way, follow me, like go on my Substack. I'm obviously posting, tweeting a lot about it, and if you have questions. But like the one big thing is mental health, but then the other one is also, again, coming to freedom. If you're older than 30, which I guess parts of the room at least are, and if you're not, you're going to get 30 somewhere. At 30, roundabout, your brain starts literally aging and losing every year a little bit of your capacity, which is again very bad. If I look at freedom at the bigger picture, for me, freedom is also to having my intellect, my sort of full capacity. And the second effect of psychedelics, next to the sort of mental health effect, is that it's literally refreshing and rebuilding your brain. So it's boosting what we call neuroplasticity. So if people older than 30 take psychedelics and we look at their brain scan MRI, weeks and months later, their brain looks actually younger, like a brain in their 20s, which is associated with a lot of things like creativity, problem-solving ability, but especially openness for the world. So again, I'm always very libertarian, both towards the government and towards my own body. I want to be in control. I want to be young and fresh, also in the brain. And this is also where psychedelics help. So with that, because otherwise they kick me off, I hope you liked it, and thank you very much.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. We're about halfway through the day. We're leading up to the all-star closing trio. We'll have Adam back on the main stage. We'll have Jack Mahlers on the main stage, and we'll have the Bitcoin author of the Bitcoin Standard, Saifedean Ammous, on the main stage as well. But first, ladies and gentlemen, we have a special segment here. This segment means a lot to me, Frank Korba, Bitcoin journalist, joined by Spencer Nichols, producer-director at Bitcoin Magazine, and as I mentioned in the previous segments, the man that's often behind the cameras. Spencer, we've done this around the world for the last year and a half or so. A lot of memories, a lot of challenges, a lot of high points. What comes to mind when you think about this journey we've been on together?
Yeah, that's a loaded question. I think there's so many experiences. First of all, I think just the people and experiences we've been able to share through Bitcoin has been phenomenal. People I never would have crossed paths with otherwise. There's so many walks of life that people come to Bitcoin through. I mean, we just had Christian Engermeyer on stage talking about psychedelic therapy, and there's kind of this, you have the Silk Road oriented culture of people that are open-minded and experimenting with that sort of thing, mixed with crypto anarchists, mixed with anti-inflation post-2020 kind of COVID reactionaryism, with suit coiners and everyone in between, and together that menagerie of culture is beyond fascinating, and it's just been amazing to be an observer of that and being able to show that to the world through the Bitcoin conference.
Yeah, and you've also done an amazing. You do a really important thing. So personally, I used to watch this live desk. I used to watch it and kind of have FOMO. And to be here, for me, it's a tremendous honor. But to be able to do this with someone like yourself, who cares really about bringing the most quality programming to the world, it's a big weight to carry. We'll put it lightly. You're in control of these different crews around the world who are doing this. What is it like? What goes through your mind as you're prepping for this, and as the day goes on, and we're broadcasting to hundreds of thousands of people around the world?
Yeah, first of all, I just want to give a huge acknowledgement to the team at the Bitcoin conference that helps put this on, especially our programming team. Craig, Madeline, Emily, Naomi.
Big shout out.
Phenomenal at what they do, and they do an amazing job bringing these speakers around the world. When it comes to what I want to present, first of all, entertainment is important. I think, Pete Rizzo, our indefatigable host.
Shout out to Pete.
We've worked with over the years. Phenomenal at what he does, and we like to keep things moving here too. And kudos to yourself, and Christine has also joined us here at Amsterdam. But doing right by these people is really important too. I think we all take a lot of pride in our work because Bitcoin matters to us. As a Bitcoin first organization.
Yeah, Christine herself even said it. She's done a lot of crypto stuff, but she said, this is much different doing Bitcoin only. You people seem to be you really care about this. You're very ideological about it. One final question. You studied abroad here years ago.
This is true, yeah.
If somebody told young Spencer that he'd be back here doing this, bringing the Bitcoin conference to the world, what would you have said to that person?
I wasn't sure where I'd end up, so I'd say, maybe, but it sounds unlikely. But I know Amsterdam is an incredible place. I think this conference in particular is one of my favorites. Just going around the venue, there's so many amazing nooks and crannies, so many passionate people. The art is amazing, and it's just great vibes all around here at the Sugar Factory in Amsterdam for those who are familiar. Just a wonderful space to be in.
Amazing, very cool. Last question, about 15 seconds before we head back to the main stage. Your highlight from the conference so far?
Oh gosh, that's a great question. I think seeing Saifedean Ammous on the news desk yesterday was a lot of fun.
Yeah,
loved hearing about his new book, and I'd say so.
I think that's a good highlight. Saifedean Ammous here on the live desk. He'll be on the main stage later. Speaking of the main stage, we're heading back over there right now to hear from Gilles, developer of the Cashew Protocol. He'll be speaking about BitChat. Stick with us. We'll be right back after this.
That is more hands. Nice. Okay. So first of all, while I talk, scan this QR code. I want you to install this app during this talk. It's going to be fun. I'll wait 10 more seconds. That's it. Bitcoin was first introduced in 2008 by Satoshi Nakamoto as a response to the financial crisis, which is evident by the inscription that Satoshi left in the first Genesis block, Chancellor on brink of second bailout. There was another response to the financial crisis back then. In 2011, the Occupy Wall Street movement brought thousands of people onto the streets of New York. These protesters were demonstrating against the government bailing out the big banks with the money of the taxpayer. What followed was a crackdown of the state against the protest. And especially one of the things that the state has done there was to take away the protesters' ability to communicate during their assemblies. They took away their rights to use microphones and megaphones during the protest. And that's where the protesters came up with a very finicky and interesting idea. They invented the so-called human microphone. The idea is simple. There's one person who wants to give a talk, and there are many people listening on a square. How do you reach everyone if you don't have a microphone? And that's where the human microphone steps in. The person giving the talk would speak one sentence at a time. The people around that person would pick up that sentence and amplify it by speaking it again, and then that would propagate slowly until everyone has heard the message on the square. What became apparent is that Occupy Wall Street as a social movement needs resilient forms of communication. And with the proliferation of the internet, digital communication has been ever more important for social movements. And this became clear in 2011. What was deemed to be the first digital revolution, the Arab Spring, particularly in Egypt, showed the importance of protecting communication infrastructure for bottom-up movements. During their peaceful protest for Fight for Democracy, it was crucial that protesters could communicate in the digital space. Some have called it the Facebook revolution. Activists organized via Facebook and Twitter and used hashtags to find each other. But the dictatorship found a way to silence millions by cutting off the internet and without having to arrest them and put them into jail. Communication on the internet is almost always intermediated. In Egypt, the internet shutdown lasted for 5 whole days. And the crackdown on the internet infrastructure demonstrated the vulnerability of centralized communication systems. But humans have to communicate. And when communication flows through centralized systems, those systems have centralized choke points that can be abused by dictators and tyrants. So how did the Egyptian people respond? They used old-school methods like pamphlets. Because the government did not or could not shut down the telephone system, they relied on fax machines, phone trees, and they used international phone calls to reach the internet using dial-up modems in other countries. So the internet can be very powerful for movements, but it comes with a risk. It comes with the risk of being shut down and with the risk of being surveilled. In 2014, the umbrella movement in Hong Kong faced the threat of digital surveillance and artificial network obstructions. But for the first time, protesters could reach to a decentralized communication app called FireChat. FireChat is a Bluetooth peer-to-peer mesh network communication app. And at its peak, FireChat has seen hundreds of thousands of downloads in Hong Kong. And it became the first major example in the world where mesh networking was used in a mass protest. And for the first time, the physical infrastructure that is used by a movement for communication was owned by the demonstrators themselves. So these movements show us centralized communication is a choke point and produces single points of failure. And we can only speak freely as long as the gatekeepers allow it. The struggle for free communication, however, is not only limited to authoritarian regimes where people fight for democracy. When communication relies on centralized systems, freedom of speech is conditional and restricted. Centralization, whether through states or through mega cooperation, can be abused and for surveillance and for control. And our democratic principles require freedom of speech, freedom of expression, and the ability to communicate privately. So the Orwellian system that we have built today encourages complete, total mass surveillance, and recent pushes in Europe for anti-hate speech laws, age verification laws, and chat control hollow out the fundamentals of our democracy. These rules do not restrict only our ability to communicate, they also restrict our ability to think. They normalize total control. Of course, there will be bad people who misuse freedom of speech to commit crime. Their behavior should not be tolerated, and we cannot ignore the fact that we need to do something about that. But the answer cannot be to build centralized systems where a single entity controls what can be said and what not. Exactly. We cannot build the foundations of our civilizations built on systems with a single choke point. On the opposite, we do not tolerate mass surveillance. For law-abiding citizens and for the sake of total control, we will not let it happen. There is too much on the line. Instead, access control and content moderation should be in the hands of the communities that actually use these systems. These are the European ideals expressed in digital space. These are the ideals are not to give power to a central body to control everything, but to empower each individual community to govern themselves in self-sovereignty. So as a complete violation of these ideals, the Snowden leaks have revealed that the NSA monitors all and every communication happening on the internet, even encrypted communication for potential decryption later. So the US and the Five Eyes countries have created a global surveillance system that was revealed by Snowden, and it still exists today. But private communication is free communication. The Universal Declaration of Human Rights states that as humans, we have the right to self-determination, and our democracies depend on our right to privacy. This is why we must fight chat control in Europe today. The lesson is we need to defend our right for privacy ourselves. As the famous quote by Eric Hughes from the Cypherpunk Manifesto goes, we cannot expect governments or corporations to grant us privacy through their own beneficence. So a number of existing technologies try to solve this problem altogether by avoiding centralized communication. So we've already mentioned FireChat that was used in Hong Kong. But what you see here are mesh-tastic devices that use long-range radio technology to communicate with each other. But these alternatives often have a downside. They may require specialized hardware, as you see here, and they are hard to use. So they rather appear to nerdy people instead of being accessible to everyone. Therefore, they have seen only limited adoption. You should not need a PhD in order to be able to use a mesh network. It should be as simple as using WhatsApp or Signal. Freedom of communication cannot be reserved for the experts or those who are privileged enough to have specialized hardware. Another big downside of these devices is that they look very suspicious. So imagine crossing a border with hundreds of mesh-tastic devices in your pocket in 2011 in Egypt. What would happen to you, do you think? You would probably be arrested, maybe you'd be tortured, maybe even killed. And there are borders in this world that don't allow the flow of any advanced technology altogether. For example, the Israeli occupation of Gaza right now doesn't permit the importing of any basic electronics. In their war against the Palestinian people, they made it absolutely impossible to import reliable communication infrastructure. So the importance of infrastructure for basic human rights and human flourishing cannot be understated. Cannot be overstated, excuse me. It's not even possible to bring a toaster to Gaza. Imagine bringing mesh-tastic devices. However, there is one type of device that can travel through all borders without raising suspicion. And it has to be something that is in everyone's hands. And maybe it's in your hand right now, or maybe in your pocket. And this type of device can run any type of software. And as we all know, software is borderless. There's 7.3 billion mobile phones, smartphones on the world right now. 86% of all people own a smartphone. It's practically impossible to confiscate all smartphones in the world. And remember Egypt. The regime did not turn off the phone system either. They cannot turn off a system they themselves rely on. And that's where BitChat steps in. So BitChat is a chat app that is a tool for communication. It's software, and it's a protocol, and it runs on every smartphone. And most importantly, BitChat cannot be turned off. It requires no internet connection, and like FireChat, it uses Bluetooth to send messages between the devices directly. There are no servers, and messages travel peer-to-peer from one phone to another. Like the human microphone, messages are amplified within the crowd. There is no registration, no identity, no account. You download it, you install it, that's it, you can use it. It is pure permissionless communication. And I recommend you download it right now, and you can use it to also discuss this talk with others after. It's perfect for a conference like this. In recent months, we've seen spikes of downloads of BitChat linked to civil unrest around the world. It has started with Nepal. Early September this year, the Nepalese government decided to ban all social media platforms. This was a particularly bad idea in a country where the median age is 25 years old. Protesters have reportedly elected their representatives in Discord chats. And many have downloaded BitChat to have decentralized communication tools at their hand in case of further government crackdowns. And this has been a repeated pattern. We've seen the same thing happen in Nepal, Indonesia, Madagascar, and Cote d'Ivoire. Whenever we observed a sudden spike of downloads in BitChat, a quick Google search revealed that there is currently a social uprising happening in that country. And we didn't advertise BitChat as a tool for demonstrations or civil unrest. People found it themselves. And as long as people will be oppressed by their governments, BitChat will be in demand. So imagine a solar storm hits the northern hemisphere and interrupts all our communication networks. The internet is shut down, your phone can't reach anyone, your Apple Pay doesn't work, you can't get any news. And you don't know what the situation is, and the worst, you can't reach your loved ones. How do you reach them to ask them if they're okay? How do you find the nearest location for help? Unfortunately, this is not an artificial scenario, and due to a natural disaster this year, this was the situation in Jamaica. Just before Hurricane Melissa hit Jamaica, we've seen a big spike in downloads for BitChat. Then the electricity and infrastructure was down. During that period, BitChat jumped to #2 downloads of all apps in the Jamaican app stores, only surpassed by an app that helps to monitor the weather situation. So whether it's a natural disaster or a technical failure, our communication infrastructure is fragile. And as Bitcoiners, we don't only care about our communication infrastructure, we also care about our money and payment infrastructure. Not only because we say that money is also speech, we also say money is half of every transaction. So what happens when our money networks are turned off? We could just witness this year in a nationwide power outage in Spain and Portugal. People were forced to reach back to the most resilient payment method that we know, one that has been around for centuries, good old physical cash. And in times of crises, a bearer asset that can be handed from one person to another is king. Cash does not only work offline, it's also untraceable. And that's a killer feature of cash for democracy and freedom. Remember the umbrella movement in Hong Kong. The people in Hong Kong made a virtue out of a necessity. They quickly established a culture of using cash to buy their train tickets when they wanted to reach the demonstrations. They knew that the government can track every single transaction if they use credit cards for it, especially when the transaction is tied to your location when you want to take a train. So we asked, what if we could send Bitcoin from one person to another without being tracked? And what if we can even send it when the internet is down? What you see here are two devices both running BitChat. On the left, there's an Android. On the right is an iOS. This is a demo. We didn't release this yet. This is still under development. But what you can observe here is that the phone on the left sends Bitcoin to the phone on the right using Bluetooth. And it does this using a technology called Chaumian eCash, using the Cashew protocol, a bearer asset representing Satoshis. And the whole process is instant and practically free. Only one of the two devices needs to be online to do this, and sometimes it also works fully offline. The Cashew protocol is our attempt to rebuild a better financial system from the ground up on top of Bitcoin. And for this, we're using the earliest form of digital cash called Chaumian eCash. So Cashew is a bearer asset that is issued by a financial entity called a mint. Think of a mint like a bank that has an ATM where you can withdraw physical paper bills, but instead of withdrawing physical paper bills, you withdraw digital cash. That is eCash. eCash is a piece of data that is stored on your device, and it's not like a bank account, it's more like physical cash, but in digital. So when you send eCash from one person to another, you literally send the data from your phone to their phone. The Cashew protocol has seen wide adoption in the Bitcoin ecosystem with a lot of interest from developers. And we are rebuilding the financial system that respects human rights and preserves user privacy and protects activists. All this while providing incredible transaction speeds, the best user experience that still works when one of the two parties is offline. Hell yeah. You can check out more on cashew.space if you like. So with Cashew, we will be able to bring Bitcoin not only to the Mesh, but also to small community banks, to large financial institutions, to social media platforms, and so much more, and it's already happening. eCash scales to billions, all while preserving user privacy and enabling incredible user UX. Yes, it comes at a cost that the users need to put some level of trust into the mint. But the utility of eCash is to be a payment technology and not a savings technology. It is a technology that is built on Bitcoin as hard money, but enables amazing user experience and privacy. We love magic internet money, and we want it to be everywhere. We believe that the internet needs to be rebuilt from a different set of priorities. One that puts the user into control instead of large centralized choke points. One that preserves human rights and empowers people all over the globe. One that protects activists and freedom fighters. A system to leapfrog the old one. A system we can march into the future together. A system that still works when everything else fails. Thank you very much.
Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. We're getting ready to close out the day. One of the premier speakers here will be this man to my left, the one and only, a man who needs no introduction, Jack Mallers, CEO of Strike and 21. And I'm joined also by Christine Lee, crypto journalist extraordinaire. I'm Frank Corva, Bitcoin journalist. We're going to dive right in here, Jack.
Let's
go. Vibes are high here, right? We were actually just talking a little bit off camera about how Bitcoin's price is dipping a little bit, if you will, as it does from time to time, but vibes are remaining high, right? So things here are good. But I want to dive into a little bit of, you were here last year doing a fireside chat with Dylan LeClaire. Mm-hmm. You've done plenty of shipping this year with Strike.
Yeah.
Some of that shipping has been in Europe, so I was hoping you could touch on that a little bit. Where have you expanded to in Europe?
Well, I think it's our product suite particularly. So we've expanded into lending.
Okay.
Bitcoin-backed lending has been the most successful Bitcoin utility product I've ever launched in my entire career.
Okay.
And I've done, Lightning stuff all over the world, obviously. It's the first time that we've seen such explosive growth and adoption in a product that allows the Bitcoin that customers have already acquired to change their lives. And they're doing it by getting liquidity, getting a cash event without selling it. And so we're really excited. I think it's just the tip of the iceberg. We entered the lending market this year, but this time last year, Strike had never issued a loan. We hadn't even started building it.
Okay.
And now we're one of the largest retail lenders in the world. And so I think there's lines of credit products, yields on cash products. There's a ton of stuff. So that is now in Europe, and we're really excited about that.
Let's go,
Can
Christine.
we talk a bit about the products that you offer in terms of, what kind of client profile are we looking at? And because a lot of people might be intimidated and not realize that you don't have to have a ton of Bitcoin to get into this crypto lending.
I would say our customer is the Bitcoiner. I would say this bank is a nasty term at a Bitcoin conference, but in many ways, Strike's becoming the Bitcoin bank for the world. And what I mean by that is we're a financial services company, and so what financial services do we offer? We allow you to buy a brokerage service to acquire Bitcoin, custody to store it, payments to move it, and now credit to borrow against it. We're coming out with a line of credit product, a yield on cash product. And so we're kind of expanding this Bitcoin banking suite. And so that if you are a Bitcoiner, if you save in Bitcoin, if you hold Bitcoin, we probably offer a service that would make your life better and allow Bitcoin to further enhance your life is sort of the customer profile. People that don't like Bitcoin are not customers of ours.
I guess when you say bank, people think of rehypothecation and so tell us
I think what's special about Bitcoin, right, is like you hold the Bitcoin, right? It's something that people know they have a certain amount, they're borrowing against a certain amount of that, and on the back end, So
the way our lending product works is it's a 50% LTV product, which means if you give us $100,000 of Bitcoin that's on the platform, we'll give you half of that value as a loan, so $50,000 as a loan. And so it's a severely over-collateralized loan. There's not only no rehypothecation, but it's over-collateralized. And so there's no risk to us as the lender. It's pristine collateral. We can liquidate it on a Sunday in the middle of the night if we had to. We've actually never liquidated any customer. Strike customers actually tend more towards 40% and lower.
Okay.
So we do not have a customer base that's risk-taking and degenerate. They're just using the Bitcoin wealth they've accumulated to actually put their kid through school, put a down payment on a home, start a new business, finance a medical emergency. So it's actually fascinating to see the customer behavior. It is not over-levered speculative behavior.
Yep.
And things like the yield on cash, I think, is interesting. When people are getting yield on a savings account, they're actually getting it because the Fed has interest rates. You know, the U.S. government sets how much they're willing to pay effectively for you to lend to the U.S.
Yep.
That rate is increasingly going to zero because the U.S. government can't afford it. They're $38 trillion worth of debt.
Yep.
If you take our customers are net producers to society. If you're a Bitcoiner, you've produced on net to society because you are earning more than you're consuming, which means you have savings and you allocate that to Bitcoin. If Bitcoin's a 50 CAGR asset, it means it doubles every 18 months. So our customers are net producers. They're getting twice as rich every year and a half, and they're actually willing to collateralize their loans, and they can afford to pay for them.
Yep.
Our customers are paying 9.5% for a loan where the U.S. government is trying to get it to zero as close as possible. And so what we can do is say, if you have a cash reserve, a rainy day fund that you want yield on, we can give you 5, 6, 7, 8% on that because our customers are wealthy net producers that can afford it, not the U.S. government. So when you deposit into Chase fractionally lends your money to the U.S. government, an institution that increasingly can't afford it. If you have cash on Strike in a future state, we could tell Argentine customers, hey, 8% yield on your USDT, and that cash can actually go to financing a loan to someone in Manhattan that wants to start a business. And that is, to us, like the stark difference between the existing financial system that the government's broke, indebtedness, currency debasement, and the future, which is full of savers, net producers, innovators, and we can offer superior products.
Much appreciated, Jack. We do have to head back to the Treasury stage. Thank you for that. We sincerely appreciate it. We're heading over to the Treasury stage to hear from Sam Wouters, who's going to be talking about Bitcoin business adoption, an update from this year, 2025. We'll be right back at the live desk after this.
Bitcoin, especially as of early 2024. And we'll get into why in a little bit. But the public companies, of which Bitcoin Treasury companies make up a portion, that segment has been growing a lot. So on the top left, you see the Bitcoin Treasury companies, but then you have all the other segments. Some of them are like cryptocurrency companies, some of them are Bitcoin infrastructure companies like miners, but you're just seeing it grow gradually across the board, primarily in the US, of course. Now, in 2025, the largest buyers of Bitcoin, as I already mentioned, have been the Bitcoin Treasury companies, buying 381,000 Bitcoin, and they've overtaken the funds and ETFs. In early 2024, everyone was so focused on the ETFs, but businesses buying Bitcoin has just far overshot that, and it's been growing tremendously. Now, this last segment is the one we know the most about at River, because we actually serve over 3,000 businesses at River from all kinds of industries that are buying and selling Bitcoin with us, putting it in their balance sheet, and working on it from there on out. So we made a bit of a breakdown going through from what industries are these companies. And it's quite crazy when you look at it, like real estate's incredibly popular. These are people who understand owning assets. They know how much of a pain it is to deal with tenants and rentals and all of these things. So a bunch of them are like, why don't I just divest some of that real estate capital that I have and start putting some of it into Bitcoin, because it's scarce. And they understand scarce and unique properties and these kinds of things. And then many of the Bitcoin companies that you buy products and services from, or that whose app you may have used, are also clients of our platform, naturally, because those companies also need to deal with Bitcoin somewhere. And then across pretty much every industry you can imagine, we have clients. We've got like all the way down to a hot dog stand. That's like all of the extra savings that I build up, I'm putting that right into Bitcoin and saving for the long term. Down to like dentists, healthcare, a fitness studio, you name it, and we've got it on the platform. That's a huge trend in the US. And in Europe, I'm like, why aren't we thinking about it? Why couldn't every Dutch company where you buy stuff also have a little bit of Bitcoin on the balance sheet? It's not a conversation we're having here as much, but we should be having it, I think. So what do these businesses have in common? Well, first off, very often they're small in size. We've talked to a whole bunch of these business owners. We've gone to them. We have these videos up on our YouTube channel. For example, the first one there is a business that prints T-shirts for events, for corporates, for brands. And all of the money that they can save and are able to put into Bitcoin, they kind of look at like a way to reward their employees in the long run as well, and to build up their treasury for when times are more difficult, or if they want to grow the business. Second one was actually on stage here yesterday, Jim Kreider, who's a financial advisor who helps families and individuals with wealth planning and whatnot. Super happy to have you if you're in the audience as well, Jim, but we're happy to have you as a client. And then the third one, an optometrist. So that's a clinic that helps people with their eyesight, figuring out what their next steps are to get a better vision. And they've got about 8 people on the team. And they also just put a part of their treasury into Bitcoin through our platform. So very common trend there. It's just like small businesses and these maybe individual Bitcoiners as well that are leading them. Second reason, second thing they have in common is a very concentrated ownership. That does not necessarily mean a small company. If you look, for example, at MicroStrategy, why were they able to move so quickly is because Saylor was able to call the shots. It's businesses where you have a small number of people that are able to make that decision of let's put a bit of our balance sheet into Bitcoin. Those are the ones that are moving the fastest. So 97% of the businesses on River only need about up to 5 stakeholders to make that call. So a lot easier to do it that way rather than you need to go through layers of democracy and get a board together and get approval. That makes it a lot more complicated. And then the third thing is that a lot of these businesses are long-term oriented. They really aim to buy Bitcoin and hold it for the long run. They're not looking to make a quick buck. They're really trying to build that up over time. So what is making those businesses adopt Bitcoin? Let's look at some of those reasons. This is a graph that we've been maintaining for a couple of years now that shows the distribution of the 21 million Bitcoin by different groups within the industry. So, of course, in the middle, the golden section, the individuals hold by far the most Bitcoin today, and that's both in self-custody as well as on exchanges combined. Of course, these numbers aren't perfect, quite challenging to map all of this out, but like roughly, directionally, this is going to be accurate. And the big question now is like, for what price are these individuals willing to sell to the businesses, the ETFs that have gradually started buying up? The blue segments there have been growing tremendously over the years. So what we saw is like, and especially on River as well, a lot of people who are individual Bitcoin owners, they're like, wait, why am I only buying this for myself? Why couldn't I do this with my business? I've got all this cash sitting there that's gradually deflating, that's gradually inflating, and my value over time is decreasing. Why don't I just put a little bit of my treasury into Bitcoin as well? So that's a trend that's been growing a lot because these guys look at their treasury and they realize like holding euros or any fiat currency just loses tremendous value over time. Since I opened my first bank account as a little kid, the euro has lost 73% of its value. And for those of you who have ever traded altcoins, when you're down like 90% or something, you can go down another 90%. Like it doesn't bottom out here, it just keeps crashing. And you can take this graph and like project it to the bottom and it will keep going and going and going because they will never stop printing fiat currency. So people start waking up and realizing, hold on, this is not a great trajectory we're on. Now, even if you work, imagine you're the CFO at one of the most successful companies on the planet, like Microsoft, Google, Apple. You're responsible for managing the treasury there, and after 5 years, you have to be like, well, adjusted for inflation, we actually lost $14 billion. Sorry. That's what's happening at even the biggest and most successful firms that can hire the best quality people to manage their treasuries. They are losing money by holding it in dollars, in euros, in every other currency. Now, what if we went back 5 years in time and these companies decided to put just 1% of their treasury into Bitcoin? That's it, just 1%. That would have offset all of the losses in dollars that they made over the course of those 5 years. You're not even talking about taking a crazy risk there. 1% into Bitcoin, that's nothing. And this is what we're seeing, like a lot of businesses just not realizing that the cash they're sitting on is losing value over time. So what role does Bitcoin play for businesses? Well, you have to think a little bit about how do businesses use their money in general. They want to return earnings to their shareholders if they're like a publicly traded company. They want to reinvest back into the business. Businesses love doing that. Let's grow. Let's take more market share. They focus on marketing, on mergers and acquisitions. And Bitcoin's really all about the bottom right corner there of strengthening the balance sheet. And by doing that, they can then in turn do all the other activities, especially in the future as Bitcoin's value accrues. So we surveyed our clients. We were trying to figure out, okay, how are you looking at that Bitcoin allocation that you have? And out of all the net income that these businesses are earning, they're on average putting 22% of their income into Bitcoin. Of course, the bulk of it is only between 1% and 10%. So kind of going back to that previous slide, they're just allocating a little bit to offset inflation. They know that's enough in the long run to do it. And they just make that call of, we'll take a bit of a risk here, but it should be paying off for us in the long run. And of course, there are also companies that are allocating much more than just the lower amount there. Now, we also asked them, okay, how much of your treasury is in Bitcoin? And there we saw like 30% of all the clients of all the business clients that we have had over half of their treasury in Bitcoin. For a lot of them, it's like, this is all I've got. These are my savings as a business. This is my like serious buffer for when things get really bad. And that's where I'm putting it towards. But again, you also see plenty of them that are just putting a small percentage in and kind of like rebalancing that over time as they go. And we asked some of those questions as well, like, are you planning to hold this for the long run? And that's the vast majority are like, let's just hold it. We'll see how this plays out in the long term, but not planning to sell anytime soon. Some of them will rebalance more quickly. Others are just planning to stay put where they are. So we collect all this research, we put this into like a big overview, we try to share this out there to get business owners to have these conversations, to get employees to talk to their boss and figure out like, hey, can we be doing something here to grow our balance sheet and strengthen our business in the long run? Now, the big question then is like, how could we further drive business Bitcoin adoption? What things can we still do to get it out there more? So we looked at the US for our research, and we realized that since the start of 2024, so much has changed. The Bitcoin market cap about tripled, like 2.5 to 3 times what it was just 1.5 years ago. Same thing with the business Bitcoin holdings that grew tremendously. But back in early 2024, businesses were still very concerned about adopting Bitcoin for like regulatory uncertainty. They weren't sure what direction it was going to take, if it was going to be allowed. So a lot of them held back. But today, that's totally changed. Businesses in the US feel very comfortable, generally, like the ones that are in there, with the decision that they've made to buy and hold Bitcoin. And then 78% of businesses back then were also very worried about the tax and the regulatory treatment. It was very unclear, but as of the start of 2024, that began to change. The rules changed, and it's a lot clearer there now as well. And then institutional acceptance makes a really big difference when like half of the top hedge funds in the US are buying Bitcoin. All of the top asset managers are buying Bitcoin. Suddenly, it doesn't seem so crazy anymore as a small business to do that. So we've been seeing tremendous growth there. Now, what can still change? What needs to improve? It's the public perception. And you all know this when you talk to your family, when you talk to their friends about Bitcoin, they don't get it. And in the US, a poll was done, and 60% of Americans didn't really know too much about Bitcoin, which, like, good that they admit it, because then they can learn. And only about 60% according to this, 6% according to this other poll, knew that there's 21 million Bitcoin. Now, probably the number that know that it's a scarce digital asset is probably a bit higher, but directionally, a lot of people don't really know. And then 46% of American businesses say that they still don't really have too much understanding of what Bitcoin is about and whether it's even something they should consider. You can imagine in Europe that number will still be a lot higher as well. Now, when you look at perception in US finance and business, all of these famous figureheads that are out there, before 2024, they all had a very different tune about Bitcoin. They had their thoughts, like some of these quotes from very early on where they were very skeptical about it, didn't think it was going to go anywhere. But then, as of the rule change, the administration change in the US in 2024, people started talking about it more and more positively. Now, in Europe, that's a little bit different. We've got Christine Lagarde, the president of the ECB, who said in her very humble assessment, it's not worth anything, highly speculative with a questionable background, which I find a little bit ironic, but okay. But then this picture was posted yesterday by Luxembourg's finance minister, who spoke here at the end of the day. And he was talking to Christine, apparently, just over the last couple of days, about improving Europe's strength financially and whatnot. And then he was here on stage yesterday to say that Luxembourg's sovereign wealth fund put 1% of their assets into Bitcoin. The Czech Republic as well just announced with the central bank they're moving into Bitcoin. So it seems like our influence may not be what it used to be, and we're starting to see the first central banks, governments get really interested here in Europe as well. Now, a big difference between Europe and the US as well is that the business service industry is a lot larger in the US. Because there's more businesses interested in putting it on the balance sheet, that's been growing more rapidly there. And in Europe, because we're lagging behind on business adoption, it takes more time to build that up. And in a little bit, I'll be on a panel as well with a few people who are working at companies trying to grow this adoption in Europe. So to sum it up and to round up my presentation, how do we grow business Bitcoin adoption in Europe? Well, the merchants adoption, that's been growing steadily and will continue to do great things over there. The store of value adoption, that's really where we've got to do something, because Bitcoin's going to keep going up in price in the long run, a lot of people think. So we're going to need to make some moves there if we don't want to get left behind. Regulation is a really big one. Ask any European entrepreneur about this one, regardless of Bitcoin, and you'll hear that they're generally not happy about it. So are we just regulating this industry away instead of growing it and building it like they are in other places? And then finally, perception. All of you, like all of us, can do work here in talking to other people about Bitcoin, making them understand some of these numbers and what's going on. So please, have those conversations, don't give up, and keep it going there. Talk to business owners that you know. So for anyone who wants to use any of the graphs or slides, you can look up our report on the website. Feel free to use it in any conversation you might want to have. Hopefully this has been super interesting, and I'll be on a panel now right away as well with a few European businesses talking about more of this. Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury, and we are bringing it home, ladies and gentlemen. We have some major talks coming up from the likes of Saifedean, Ammous, Adam Back, and the one and only Jack Mallers, who's sitting here to my left. And we're also joined here by Ludmila Kozlowska, the president of the Open Dialogue Foundation. And we're about to shift gears a little bit and talk about human rights, Bitcoin, and privacy. So Ludmila, I want to go over to you first. You do a lot of work in the name of fighting for people's privacy, both here in Europe, in the United States, and globally. Please fill us in a little bit on what you've been working on.
One of the most important fight right now for me is to protect so-called behavioral data. What is it? It's your financial, travel, and communication data. And those fights happening, first of all, in Congress of the US, where we were testifying about it, and we're trying to develop remedies showing that right now FATF rules, they actually not protect the national security and financial integrity of Western countries, and especially US. They undermine it, and they allow any kind of regime to prosecute and actually destabilize, destroy businesses and entities and also individuals. The same we're doing also in Europe. I'm going to speak about it in European Parliament. We defend privacy of communication against chat control regulation, where all messengers, photos, videos are going to be scanned if we don't stop it. We stopped it 2 years ago, we stopped it this year, we're going to continue to do it every day, because privacy is something what you fight every day.
And something you can do to support that is to go to the Open Dialogue Foundation website right now and make a donation to support Ludmila's efforts. Speaking of donations to support human rights efforts, I know, Jack, you give to the Human Rights Foundation and you support other open source devs that are doing really work around privacy, like creating eCash. We heard from Kale, the developer of the Cashew protocol. Why do you do this, Jack? Why do you see this as an important thing to contribute to?
I think Bitcoin is one of the better empowering movements that we have and technologies that can do well for not only human progress and flourishing, but undoing the wrongs that, half the world lives under some authoritarian type regime and is suppressed in some way. And it's the same old analogy. A tool is as harmful as it is powerful. It's the age-old, you can use a hammer to kill a man, you can use a hammer to build a home. And so money is used very strategically to suppress people, to strip them of their rights. I think money is, in its purest form, our time and energy in an abstracted form. It's the market good that's supposed to represent human effort. And so to censor human effort, to debase human effort, to confiscate human effort, to confiscate someone's time and energy, it's one of the more powerful ways to control them, manipulate them, and devastate them. Yeah, and so we need to, I think, as an industry, or I won't even impose that on everyone else. Me as an individual, I feel very confident that this is part of the blessing that is Bitcoin and what Satoshi created, and that we need to finance it and support it and see this potential through. The funny thing is Bitcoin doesn't have a governing body to allocate budgets, decide what's right or wrong. The responsibility lies on us as individuals to run nodes, to protect it from nefarious actors, and to also finance what we feel is important.
And also to you, Ludmila, real quick, just as a final note, we do have to head back to the main stage, but are these rights going to defend themselves? Can people just sit back in an armchair and say, like, my privacy will be okay, no problem?
No. You're going to fight for it and you're going to defend it every day. If you want to have your privacy in digital world, this is what you're going to do every day. Like you eat your breakfast, you're going to defend your privacy.
Ludmila Kozlowska, ladies and gentlemen, Jack Mahlers. I'll be on the main stage shortly with Jack Mahlers. Speaking of the main stage, we're heading back to it right now. Over to the Treasury stage. We'll be back here at the live desk after this.
I'm from Opago, and we focus on Bitcoin Lightning payments for merchants and payment service providers. We started with small merchants and now progressing towards big enterprises and payment service providers. And yeah, thanks for being here.
Awesome. Maybe to follow up, last sort of like store of value question after my presentation, are each of your businesses holding Bitcoin on a balance sheet? And why or why not?
So yes, for us, because that is all of our customers pay us in Bitcoin. I believe all but a handful of our employees are paid in Bitcoin. Their paychecks are in Bitcoin, so absolutely.
We do orchestration of data, so we don't do any custodial things, but yes, we are building a Bitcoin treasury primarily because we need to validate it for ourselves before we validate it for customers. They're going to come to us with specific needs. We want to say, oh, we did that personally, we can do that for you as well. And that's the main reason.
Yes, the same for us. We need Bitcoin actually for the Lightning liquidity. So next to having it as a reserve for our company is obviously something we need on a daily basis to have our services working.
All right. Michael, maybe starting with you, I had a question about what you're seeing at Opago in terms of adoption, given that you both service kind of like online payments, but also in-store kind of payments, like point of sale. What's kind of the difference you see between those? Is one of those like growing much more rapidly than the other? What kind of feedback do you hear from each of these? Can you share a little bit with us what you're seeing there?
Well, from a point of sale perspective, in store, definitely there's more and more interest in from shops to accept Bitcoin payments. There's different reasons for that. There's the one part of it, they say, look, credit card fees and stuff is too expensive for us. And there's others, they're maybe based in a very good center space with lots of universities and stuff. So they say, we would like to engage these new international tech-savvy customers with the new Bitcoin payment option. So there's actually different reasons why they accept Bitcoin. Yeah.
Okay, and Frederick, you're also in the online payment space. What do you think about that? What are you guys seeing?
Yeah, so a lot of the places where we've seen a lot of success is tech industries, so like web hosting providers, VPN providers, that kind of thing. That's definitely our largest market. But an interesting space that we've seen is really trying to tap into countries that aren't doing the best financially. So like a lot of like African nations, some South American nations and so on. Obviously our biggest customers are in Europe and the US, but we are seeing a lot of engagement from people who are trying to run shops in, like we had one guy who was running a t-shirt store in Ghana and he wanted to be able to sell t-shirts across West Africa, and Bitcoin made that a heck of a lot easier than trying to navigate any kind of financial systems.
Oh, very cool. Jason, I was also curious about what your business is into right now. You've been talking about AI. Very curious to see, like, how did you come to this conclusion of, I think it's going to be used so much more in the intersection of AI and agents. Anything you want to share with the audience there?
Yeah, there's there's a lot of hype in the AI space, right? There's a lot of competition in this space. There's N8N, you have Zapier, but those tools aren't built for Bitcoin. They aren't built with human approvals in the loop. They're not built with determinism, where you can't change the decimal point on your Bitcoin purchase. It has to be built with very specific things in mind. And we've been building it in a way where it's an operating system for a company. So when we talk about adoption, there's actually a couple things to think about here, right? You talk about regulatory and taxes. The big challenge for the majority of people is going to be user experience. And I'm not talking about an interface, like a screen. I'm talking about how Bitcoin operates in the same way that AI operates, like in a utility. It's like something you plug into, right? It's freedom money, but having the ability to orchestrate that for your business across your employees, for your payroll, for any number of things that your business has to do is incredibly complicated. And we have a whole bunch of terminology. There's a lot of learning curve. If you're lending money, if you're a small business getting collateral loans, then you have to do loan to value. There's a lot of differences in the Bitcoin ecosystem, right, than traditional finance. So I keep focusing on adoption around this idea of user experience, and this is where AI is incredibly powerful, because now we can do things without having to manually do them. And it's not what we did in the past, it's what AI unlocks in the future. It is a brand new way to do things and unlock things that we couldn't have done even 6 months ago. So in the next year, next 2 years, these are the two most interesting things happening: AI agents and Bitcoin as they converge and allow businesses to do things that they never thought possible before. Borrowing money, running your payroll, saving cross-border transactions, everything from regulatory compliance. I mean, there's so many different aspects where this can be a massive game changer. But as the sailor said, courage is in short supply. I think people are nervous about AI. I think they're uncomfortable with it. And this is also something I think as Bitcoin begins to merge with it, we'll see its impact in the market even faster.
Yeah. Michael, Frederick, are you guys also using AI in various ways in your businesses today? Are you resonating with some of what you're hearing there around the complexity of even like simple things like payroll? Simple.
I mean, we absolutely use AI for, like operational stuff and things like that, typing and so on. We've experimented with some different AI, and the two of us were talking about this yesterday. Our issue is that right now the AI tools, we haven't seen enough, enough movement, enough that they're regular enough, that they make the right decisions enough. So like we experimented with an AI tool to try to detect when Bitcoin fees are going to raise or lower, so that you could decide, oh, I need to send a transaction, and I know that Bitcoin fees might raise in the next 2 hours, but then they might lower 4 hours from now. Can I send that transaction in 4 hours? And try to use an AI to detect that. We still, it's an interesting idea, and we'd still love to build on it. But when we were working on it like last year, and I know that a lot of advancement has come in AI even in just a year, but it wasn't powerful enough to be able to get that to an accuracy point where we said, okay, we can push this to a market. But we're always looking into different things, of course. So, I think I agree. And I love that there's actors in the space like you that are, trying to push that envelope.
Michael, anything to add?
No.
Great. Okay, I'm curious from each of you to hear what do you think are some of the biggest hurdles to get your specific solutions adopted by the clients that you're targeting today? What are your challenges? Maybe we start with Michael.
Yes. So what we've seen, or what I've seen, is bigger the company gets, you try to onboard towards Bitcoin, in our case, accepting Bitcoin as a form of payment. Obviously, they've got different purchasing processes. They've got several things they need to look at, because they're not you don't speak to the boss directly. You have always a big team you're talking to, and there's regulation, there's different things they really take care of, or SOC 2 certification, or where's your data center located, and these are things small merchants don't really care about. They really say, I'm the boss, if I would like to accept Bitcoin, then let's do it. But as bigger the enterprise gets, there's need really to get licenses or certifications which loads of Bitcoin companies don't have right now. So that's definitely a challenge right now, yeah.
Okay, what about you, Jason?
There are a lot of new Bitcoin treasuries coming out, and they ran a spectrum of a lot of different players, right? Those that are like Tesla, that just buy it, put it on the balance sheet. There are those that want to do the Michael Saylor approach and then make that flywheel happen. I think for a lot of people, I think they're still kind of caught in the way business used to be done. And there is I think the hardest part of any adoption for anything is actually people. It's not technology, right? It's not the AI, it's not the Bitcoin, there are organizations and there are human beings behind these institutions and behind these companies. So I think the real problem and the real challenge here is actually letting go in some ways and trusting. This was really difficult for me when I got into Bitcoin, right? Because I'm like, okay, I'm going to send that transaction. Please go through. Did it go through? And the magic, it happened. Wow, and I remember that magical feeling. I think we have a bit of education to do yet for businesses around some of these tools, around what's possible. I think it's really hard to unlearn, right? There's that famous Alvin Toffler quote that says, the illiterate of the future are those that cannot learn, unlearn, and relearn. And I think we have to do that as a Bitcoin community as these new technologies come, as we have to look at combining the forces of these to really make an impact in the world and help drive that adoption.
I'll echo that to a large extent. I think that it is education. It's about rethinking how businesses work. And for us, businesses have a certain way the payment space. Businesses they actually oftentimes prefer custodial options, especially large businesses. It makes them feel safer. Smaller businesses are generally okay with non-custodial, because then they've actually got the money in their pocket. But it's for us, it's being able to meet businesses with their needs and where they are and what they need, and be able to meet that, but not, give up what Bitcoin actually is. And so, being able to build non-custodial tools for us, non-custodial tools that still work in a business space that still, businesses are able to use easily without having to, figure out a whole bunch of extra stuff, but keep that spirit of Bitcoin alive, non-custodial, it's about, we shouldn't be touching the Bitcoin at all as a company. That's not what Bitcoin is. And so, meeting them halfway, and it's kind of a learning aspect both for them in terms of businesses being able to learn Bitcoin and what it means and how it's actually useful to their company, but also for us as a Bitcoin company in saying, we know all of the benefits, but businesses have to take time to adjust to that, and so us meeting them halfway, and doing that.
I'm hearing a very common thread here of sort of like having to educate the market. In a way, almost every Bitcoin business out there is also an education business. What kind of efforts do you guys undertake to like educate your clients? Is it making content? Is it speaking at conferences like this? Is it having boardroom meetings and calls? Can you share anything about that?
Especially when I first started working at the company, I was making a lot of educational videos, not just on our tool, but on Bitcoin itself. So like I actually, under the company's YouTube, under Blockonomics YouTube, we ran for several months a like, what is Bitcoin education series? And, really tried to showcase that. I think that as Bitcoin matures, the type of education that's required is a little bit more mature as well. And so, we've kind of moved on from that simple aspect of education to really trying to do it client by client, figure out what the client needs and, educate them based on, like hearing their needs and saying, here's how we can do it. But yeah, I mean, we had that entire library and that was a lot of fun to make because it helps me learn more about Bitcoin.
For us, there's a saying that, Bitcoin is everything you don't know about money combined with everything you don't know about computers. Add on top of that AI. So a lot of the people we're speaking with are now trying to understand. We try to focus on the faithful. I think it's a much easier way to convert rather than trying to convert non-people into a customer. But it is a bit of a learning curve. They're having to understand what these tools are, what the limitations of them are, what the capabilities of them are, and how do you properly combine them in the right way. There are different models that do different things, and there's a lot of education related to that in addition to Bitcoin. So for most people, they want nothing to do with the complexities of AI or training or any of that stuff. What they really want to do is just run their business. I want 3 buttons or a lever, and these are my dashboard buttons. And for most executives, that's exactly what they're looking for. But now, we can do generative front ends. So as a business, you can say, I care about these 3 buttons and that thing. And then those 3 buttons, you can push it, and it executes an automated workflow that helps them run their business. Does their auditing, does their payroll, does whatever they need. And that really is a magic moment. So we might be on the verge of, between these two technologies, of unleashing a brand new way to use Bitcoin that was never possible before because of what these tools have enabled.
Cool. Well, for us, it's always, before we start educating someone, it's always first important to know what to understand what's in for the merchant or the payment service provider, because everyone got different reasons why they should accept Bitcoin. They've got their private life, they have different private pain points why they should start being interested in Bitcoin at all. And from a business perspective, it's always about, are the fees too high, is the settlement too late, are they got too much competition, they want to get new customers. And then given this information, we really then obviously educate towards the pain point or towards the goal they want to reach accepting Bitcoin. And then due to that, they start to also get interested from a private perspective because they've seen what does it give me when I, as a business, accept Bitcoin. And then obviously they heard all the business advantages out of it, but they're not sure what do I have private out of it. And then it's really nice to see when they start to really also get interested from a private perspective into Bitcoin and really add their education by themselves to it afterwards.
We also, I think someone touched a bit on regulation. I'm actually curious for each of you, are there any regulations that make your work harder than it should be? If you could remove something or change it, like, would there be something that would have a really material impact there?
Getting a bank account. I think like something in the United States, like we are like you just presented, right? We're like the front runner we are the crypto capital of the world, right? So if we're at a stage where I can't even open a bank account because the word Bitcoin is in my name is a real big pain. Talk about adoption, regulatory, taxes. I mean, if I could, even if I had a de minimis rule where I could actually have it for like $300 or whatever the price is, massive adoption increase. I go to so many different countries and I'm switching between baht and ringgit and every other currency you can imagine. I would just standardize on Bitcoin, and in my life, everything would get cheaper. And it's a huge like mental win, I think, for many people, right? To go through your life realizing everything is getting cheaper instead of more expensive in your day. But yeah.
I mean, I'm going to echo bank account. That was a real pain in the neck for us to, absolutely.
Are you guys US?
No, we're in Singapore.
Okay, well,
So getting that bank account was a real, and of course it's counterintuitive because we've got all the Bitcoin and so on, but other companies need you to have a bank account in order to do business with them. But we're doing all of our transactions in Bitcoin, and we've got to find a bank account that's going to say, oh yeah, you've got Bitcoin, you got Blockonomics, that's in Bitcoin. Like we don't want you. So yeah, the bank account was one of the hardest things. Like it's interesting.
And the absolute basics. If it already starts there, then
exactly.
Things are dire.
It's such a simple piece, but it's it explains why we're all here in the audience, or in the conference, because it's these financial systems put up so many roadblocks, and that it's just the simple things, the basic thing, and that's why Bitcoin allows you to do more.
Yeah, from a regulatory point of view, from addressing the merchant or payment service provider, I think, or I saw really that when it comes to businesses, regulation, or as bigger the business gets, as more regulation comes to adoption, really. Because, as I said before, if there's just a small merchant and you make him to accept, it's not really difficult to have him accept Bitcoin, but then you've got a big retailer, for example, with like different boards. They've got their experience or their mindset about Bitcoin, and they really, without any kind of license or something, it's really difficult to engage in any kind of longer contracts. So for us, obviously, we are currently in the process to become a crypto as a service provider in Europe with the MiCA. And it's really important for us really to get that license, because all the big customers really want us to have it. So it's very important for us.
From every Bitcoin company I've talked to that has gotten this or is working on it, I've heard it takes years. It's a lot of work.
Yeah, so we've worked I think 12 months now. So in around 2 months we should be finished. So it's the last round of documents we've sent in to them, but it's a really long process. But yeah, hopefully it's soon over.
Yeah.
Yes.
Good luck. Hope it's done soon.
Thank you.
Maybe to round up the panel, I'm curious from each of you to hear what's next for your business. What's the area you're looking to grow and develop in? Are there maybe people at the conference that you'd love to hear from that should reach out to you? How about we start with Frederick?
Yeah, so our big thing is we're currently working on a new wallet, non-custodial wallet, to try to make that onboarding process for businesses faster, because then they don't have to go searching for a wallet. We've got wallets that we recommend, but building that wallet, making that it's still non-custodial, but just being able to have that little extra touch to be able to make those transactions easier.
If you're a business that's trying to automate things and you're struggling with this, with the tools that are out there, you don't have to hire a team of developers. We've already done all of this stuff, and we built it with pre-made packs, very specific to Bitcoin, analyzing your Bitcoin, moving your Bitcoin, controlling your Bitcoin, reporting on your Bitcoin. So there are many things that we can do. So if you're a business in that space, we actually launched it today. So you can actually go and sign up for free on our website, bitcoinorchestrator.com, and be able to use it. So we're realizing that with all of these new businesses coming from, especially Jack Dorsey and the 4 million that are coming on board, they're going to have a lot of questions. They're going to have to figure out taxes. They're going to figure out fair value. They're going to figure out a lot of different things. And we see that as the big catalyst for where things are headed for adoption in the future.
Michael?
Yeah, for us it's really, currently really to get that license and to be able to really do the off-ramping process in the future for the big merchants by ourselves. And we're currently around finalizing our seed funding round. So in case there's some interest, you can always hit me up. And that's for the next couple of months, yeah.
All right. Well, that's it for us. Hope you learned it. Hope you learned something new and enjoyed the panel. Thanks each of the panelists for being here. Great talking to you guys. And if anyone's happy to come up to any of us, we're happy to talk to you afterwards. Bye.
Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury, and we're closing out the day, getting ready for the main stage speakers, Adam Back, Jack Mahler, Saifedean, Ammous. I'm Frank Korva, Bitcoin journalist, joined by none other than Ludmila Koslavska, president of the Open Dialogue Foundation, and crypto journalist extraordinaire Christine Lee. Ludmila, I want to dive back into Bitcoin and human rights. I want you to share with the audience, if you don't mind, a bit of your own story, what it was like to be debanked because of your activism work and what Bitcoin meant to you in those moments.
Yes, of course. I'm Ukrainian. I'm Ukrainian activist, and I became one of the most, I would say, active Bitcoin defender and privacy defender, because this is something that literally saved my life of those whom I love. It's helped me to continue my fight. How? Back in 2018, at the moment when I was one of the most known human rights defender, releasing political prisoners from many countries, successfully running a reform of Interpol, doing one of the most sophisticated changes in trade agreements, placing their names of political prisoners. And this was my instrument, how to release them, how to force those governments release hostages, political hostages. I became a target, and those regimes were very sophisticated in weaponizing Financial Action Task Force rules. They found out that even if I have best connections in the governments, parliaments, one thing I would not be able to fix, and they were absolutely right, it's protection of my financial data and my financial rights in the very heart of Europe, in Brussels. And this is what happened. I was de-risked for my accounts, my foundation, company, family members, everybody around me. We were deprived the right to have financial services. And our money was frozen. And of course, at this moment, you start to think, what instruments you have? And actually, I'm very lucky that I found out Bitcoin. And
was it your brother that told you about
yes.
it? Yes. Shout out to Ludmila's brother. He doesn't get enough credit. He doesn't get mentioned enough. Yeah, and if you could just quickly, we do have to cut back to the stage, but yeah, just please finish what you were saying.
Yes, so he said to me one day, like, once you're going to discover what is Bitcoin, this was the moment, and I called him, okay, this is the moment I have to understand how it works, because my accounts were terminated. And this would help me to not only survive, but also hold accountable those who violate rights and those who were going after me, destroying rights for many other people, weaponizing Financial Action Task Force rules. And this is also the reason why I'm defending so much privacy, because without privacy, you cannot have any rights, not in digital world, not in physical world.
Yes, I do have to cut it there. As Ludmila said, I do want to kind of reiterate that point. It's like all of our rights sort of are supersede. Privacy is the biggest right. Everything sort of trickles down from there. So it's something worth defending in the digital age. Lots of privacy tools around Bitcoin under attack. We've seen Samurai Cash, Tornado Cash, all of these things. We need to raise our voices. We need to let the authorities know that privacy is important to us. On that note, we do have to head back to the Treasury stage. We're going over to hear about the ways that Bitcoin Treasury companies choose to structure capital. Something slightly different than a privacy discussion. But anyway, over to the Treasury stage. We'll be back here at the live desk after this.
All right, good afternoon, everyone. It's Friday afternoon. For most of you, it already has been a long day, but bear with us. This is going to be a fun topic. I want to start with Jeff. Jeff, in the Netherlands, in Dutch, we say als een vis in het water. And it means that you're really in your element. And I think you're really in your element on this topic. So can you please give us a primer on what is capital structure? What are the dynamics between risk and reward? And can you also tell us something about seniority?
Yeah, absolutely. So welcome, everybody. All right, thanks for joining. And I'll give a quick overview of what's really happening with these Bitcoin treasury companies and how they're structuring capital. So Bitcoin treasury companies are holding, Bitcoin on their balance sheet, and they've got a large stack of Bitcoin on their balance sheet. And what they're able to do is structure tranches of risk that are senior in the capital structure that have different risk-return metrics that are more appealing to different types of investors. So, for example, strategy, they have equity, common stock equity, which is amplified Bitcoin, and then they have senior products on their balance sheet, Strike, Strife, Stride, Stretch, and now Stream in the EU. And each one of those different products, where they're positioned in the capital structure, has different seniority. And that different seniority creates a different mathematical risk function. And so when you're thinking about institutional capital and how institutional capital works, there's this concept in portfolio management called Markowitz modern portfolio theory. Markowitz modern portfolio theory is if you add a new asset to your portfolio that has different risk and return metrics, you improve the return and reduce the risk of your entire portfolio. So different Sharpe ratios, different risk ratios. And that's what these Bitcoin treasury companies are able to do. They're able to, instead of just having a single commodity asset that's really volatile like Bitcoin, you're now creating different instruments that people can hold in a portfolio that have different volatility structures. So when you think about companies like insurance companies or pension funds and they're looking for Bitcoin-like exposure, but they can't handle 50 volatility, they can buy these types of instruments, and they're appealing to these instruments are appealing to those different investors. So that's the real unlock of capital here, is creating products that are attractive to different capital pools, and that's what we're all trying to do. And that's where we're headed.
Yeah, thank you. Gary, can you tell us something about equity versus credit? And as an equity investor, where are they focused on? And a credit investor, what are they focused on? Can you explain the two? And can you also elaborate on where the preferred equity finds itself in between?
Yeah, absolutely. So my background is in credit. I used to be a fixed income portfolio manager and trader. Worked a few years at a bank with a credit derivatives trading desks. So my heart leans towards credit in general. Having said that, clearly equity has been the main narrative this year so far. I think now with those mezzanine type of structures, hybrid capital that we're seeing, that's where it enters probably another more sophisticated period, the whole treasury space. And I think on the retail side, equity is still a bit easier to grasp, especially from a European perspective. I think in Europe, hybrid capital, mezzanine capital has been traditionally not as prominently placed as arguably in the States. Having said that, the oversubscription, or basically the increase of the stream product, I think in the last 2 weeks from, I believe, 350 million to 650 million, clearly shows that there's significant demand. And I think what Sailor is doing clearly is increasing this total addressable market, or establishing a new market where you have essentially hybrid product, a mezzanine product with a Bitcoin exposure, yielding extremely high, or offering an extremely high coupon in what traditionally has been a very low yield, start for yield environment that Europe is. So I think we will see clearly an increase in demand for those type of products, also on the credit side, to basically optimize your debt to Bitcoin ratio, essentially be less dilutive to be able to stack more Bitcoin on your balance sheet.
Can I add on there real quick? What all of these companies are trying to do is identify the longest duration leverage with zero margin calls and zero of the negative benefits, zero maturity. So the advancement of this perpetual preferred equity is really appealing because there is no debt maturity. Any of the capital raised with perpetual preferred equity, they do not have to pay back. Let me say that again. Any capital raised with perpetual preferred equity, they do not have to pay back. Any debt capital that they raise, they have a maturity. They have to pay it back. So that's really appealing when you have a stack of collateral that's incredibly volatile. How can I create leverage or amplification where I don't have to pay it back? And equity, the form of equity, does that.
Yeah, thank you. Sander, I was going to ask you, can you explain why Bitcoin is a long duration asset? And can you explain what happens when there's a mismatch, like a duration mismatch between your assets and your liabilities? And can you explain why Bitcoin treasury companies want to prevent that mismatch?
I think you just have to look into the history and see how volatile Bitcoin has been, but it's always been volatile up to the right. And when you try now to structure credit, you have to think about the volatility of the asset itself. So what we have seen in the beginning of this Bitcoin Treasury bull run earlier this year was copying Michael Saylor's convertible bonds, which was basically most of the companies they raised for 5-year duration, 0% interest rates, they raised in fiat. But you also saw companies coming into the market with Bitcoin-denominated convertibles, which basically doesn't put you in a risk of returning back your fiat, but in a situation there you have to repay the same amount of Bitcoin. So it's super important for these Bitcoin treasury companies to understand the risk of the debt you're taking on and the liabilities you actually have to manage over time. And I think what we see now in the industry, especially with Michael Saylor first and then Jeff in Strive, they're launching new products that are actually fitting the long duration of the asset class we try to capitalize on and give more exposure to investors worldwide.
Yeah. I want to talk about the benefits of digital credit. And Saylor mentioned a few, and maybe you can all elaborate on those, but he mentioned that dividends could be a shock absorber. Maybe we can elaborate on that. And also, can you explain how unique it is that you can create credit instantly versus traditionally you have to find somebody who you can lend money from and you have to deal out terms and conditions. So maybe you all three can elaborate on those benefits from digital credit versus traditional credit.
Yeah, I could start. So digital credit is an amazing phenomenon. Again, it's the same concept. If you're taking this really volatile asset and you're converting it into a credit instrument that's appealing to the credit market. The credit market is the largest pool of capital on the planet aside from real estate. It's hundreds of trillions of dollars large, and a lot of the bonds and the traditional fixed income and the credit products that are in the market are under collateralized. They're very opaque risk. They're difficult to quantify. The private credit market's pretty big, and now you have these new instruments that are novel, that are paying significantly higher yield than the rest of the fixed income market. And they're backed by sound money with Bitcoin. They're over-collateralized by sound money. And it's hard for people to conceptualize, but when you actually step back and you look at the risk of these instruments relative to other fixed income products, they're the relative risk is significantly better and the yield is higher. And that's incredibly appealing. And you hit on another really important part here is the access to that capital very quickly. So you think about Strategy or our company Strive on the horizon here. Strategy has an ATM instrument on every one of their fixed income products or their perpetual preferred equities. That means they can go raise capital at the click of a button. That is incredibly novel. Historically, if you wanted to go raise debt, like anybody that's gone and got a mortgage in this room, like think about how awful it was going to get a mortgage. Like it's a financial colonoscopy, right? And now they don't have to go through that process. They can do it at the click of a button. And that is vastly overlooked about how valuable that is. So you look at, again, a company like Strategy, they're able to raise capital in stressed environments which they weren't able to do previously. So that's a huge advancement in this marketplace.
Gary, something to add?
Yeah, so digital credit, I think, is going to rewrite the way we can capitalize companies that have essentially their main motive is somewhat of an accretive accumulation of Bitcoin, increasing the Bitcoin stack, changing their Bitcoin to debt ratio. If we're going to talk about specific European markets, I don't know if you want me to touch upon this or maybe later. I think Germany, for example, has traditionally been a very, very interesting market for private corporate debt. We call them Schuldscheine. And the investor is fairly familiar with this type of product. A lot of long-duration funds, mutual funds, insurance funds, pension funds, they love investing in those type of deals or instruments due to the very clear cash flow expectation. Here we're now entering a new, or it's a fairly big paradigm shift with Saylor leading the way, at least in Europe, in my opinion, with this mezzanine type of hybrid capital, where of course the coupon is not necessarily fixed but floatable, he managed to do a prospectus for that, which is something that is not very accessible to many issuers, and we don't have as many seasoned issuers here in Europe as we do in the States. So you can, if you actually want to, also offer this type of hybrid capital, mezzanine capital, at least in Germany, without a prospectus. So it's the entry barriers are much lower. The downside is, though, that those type of assets don't become easily tradable on an exchange. So that's, I think, a small difference to other markets. But again, a fantastic product for someone that wants to have a high-yield product with arguably a wrong rating. I don't think this product has been, we've chatted offline about this, should have a B- rating. But, Saylor's saying it's baby steps. That's step one, and then we'll see where it goes in the future.
Yeah, before we gonna dive into that rating, Sander, what do you think about the terminology of amplification? Does it confuse people that we use amplification instead of leverage, or is it necessary because it's so novel and it's something else, so we have to address that with another word? What's your opinion?
I think what we are seeing now is that the traditional financial industry is now understanding what Bitcoin is worth. And there we see new terminology coming into the industry. It might not be so easy to understand, but I want to put it very clear to people that have been in Bitcoin early. You have done a great job. Now the full traditional industry globally recognize Bitcoin as something they're willing to lend against. And that's fantastic. That's a huge step for Bitcoin adoption globally. And when we speak about these technicalities around how to do it, and in traditional finance, why they leverage these Bitcoin treasury companies, what it really means is that we have given Bitcoin value, and people are willing to lend you money against the collateral. And the collateral is global, so when you have this collateral, you can lend from everywhere in the world, which is super unique to Bitcoin. And that's the asset class, that's the reason why I think this asset class is going to grow faster than any other asset class. So I didn't answer your question, but I think it's important for the Bitcoiners to understand why we are talking about credit against the Bitcoin, because Bitcoin has succeeded. That's the reason.
Yeah, so an applause for all the Bitcoiners who were there for 10 years. All right, so the rating.
Can I take that question for a second? I think the term amplification is completely necessary. As I mentioned earlier, the perpetual preferred equity is not debt. Strive has zero debt. We do not have debt on our balance sheet. We just raised $150 million to buy Bitcoin without a debt maturity. So amplification, I think, is incredibly necessary. And then also to hit on this last point too, the risk is, you can calculate the risk 24/7, 365. You cannot do that with any other fixed income product. Go think about quantifying the risk on the fourth tranche of mezzanine debt on the Boeing balance sheet, right? Okay, you got to go look at the entire business model, the entire capital structure, who's senior to you, understand how much revenue, it's just incredibly complicated. But now you can see it 24/7, 365 on a website, and you can mathematically calculate it. That is an incredible innovation that hasn't existed before.
Yeah, absolutely. So back to the credit rating. Congratulations, Strive, on the issuance of SEDA. It's a competitor to Stretch.
Complementary.
Sorry?
It complements.
Complementary, yes, of course. I want to, so the credit rating. In the presentation, I watched the presentation, and you told that Strive has set aside the amount of dollars for 1 year dividend payment. Was that like the original idea, or helped the report of S&P as a guideline for treasury companies to maybe structure it a bit different to get better credit ratings in the future?
Yeah, that's a great question. So our new perpetual preferred equity product, SATA, S-A-T-A, just started trading on Monday. We set aside 12 months of dividends 12 months of dividends in cash to pay the dividends for the first year, or however it comes up. But I think conceptually, some of the feedback in the market to strategy was how are they going to pay the dividends? The reality is they could use the common stock ATM, they could sell covered calls, they could do 5,000 other things before they sell the Bitcoin, if they had to sell the Bitcoin, and it would still make sense. So for us, it was about increasing the credit quality, accessing these debt markets as a new issuer, which is a bit more challenging compared to Strategy, who's got $60 billion of debt on their balance sheet. So ultimately, having multiple issuers in the market is going to be helpful to go get credit ratings. But one interesting thing is the S&P actually they knocked Strategy for their credit rating because they held convertible debt on the balance sheet. In fact, the perpetual preferred equity was less of an issue because if you look at the calculus, Strategy has 100 years of dividend collateral based on their Bitcoin collateral. Strive, we have 30 to 40 years of dividend payments based on the Bitcoin held on our balance sheet. Again, go compare that to other junk bonds in the credit market, and you will be fascinated at how under-collateralized many of these other credit instruments are in many pension funds and other ETFs.
Yeah, so this is a great segue into my next question. Saylor compared Stretch to a bank account, but let us inverse that and let us compare a savings account as a credit instrument. What happens there? Because the yield is different, the amount of collateral is different, and the kind of collateral is different. And how will that impact stuff? Gary, you want to take this?
Well, first of all, I want to say if we compare it to a bank account, you're essentially shorting fiat, right, with any debt-like instrument. And we absolutely need to do this more, especially in Europe. So I think with those type of products, we can increase our Bitcoin exposure and short fiat more. And God knows Euro needs some more shorting versus Bitcoin. And other than that, I think it could work as a nice retail type of focused product where you compare a savings. You get your 200 basis points, 2% savings accounts if you're lucky in Germany. So compare that to Stream. That's a nice 10% premium on top of what essentially is a almost non-real yielding bank account. So I think if the marketing works right, and I think we as an industry need to work a bit more on that, this will absolutely take over the continent.
Yeah, because now we're talking about yield, but like a bank has like 10% collateral, and we're talking about 6 times or 4 times. And the kind is different because the Bitcoin treasury companies have Bitcoin and not dollars or government bonds. I mean, risk is mispriced here, right?
Yes.
All right. So we're going to my favorite question, or I want to get your thoughts on this. So it came out to me that Bitcoin is sniffing out inefficiencies all over the world. So Bitcoin miners, they sniff out inefficiency in energy markets. They look for stranded energy. Then we look at payments, like Square just announced that they're gonna that all the merchants can accept Bitcoin, and I think the dollar value goes on Bitcoin rails, so they pay 0 fee. So they're sniffing out inefficiency in the payment. I think Bitcoin treasury companies are sniffing out inefficiencies in the capital markets and maybe exposes all the mispricing and risk. So what are your thoughts on that?
Yeah, I can start. I absolutely agree with you. I think really I see personally Bitcoin treasury companies as cleaners of the capital market because think about it, right? We just went to go raise capital. We raised $150 million of debt-like capital from the market. That's $150 million that's not going to go to somebody else. And that can continue to happen as these companies that are over-collateralized go to access these different pools of capital. And so the businesses that maybe shouldn't have existed previously that have raised debt capital may not have access to the capital markets. And as the world starts to reprice this risk and put their head and grasp the mathematical risk of these things, that should reform the incentives of the capital market and how companies can access capital. So I completely agree with you.
Yeah, so we have 1 minute left. Sander, do you want to give some closing remarks?
No, I think what not other than Bitcoin treasury companies are building the Bitcoin capital markets. I think you mentioned payments, you mentioned credit, but I also think that we will soon see a more Bitcoin native capital markets with tokenization coming, and that will basically and Bitcoin treasury companies will see these kind of activities and help us unify around one global capital markets, which will be built on Bitcoin.
Gary?
Yeah, so I think we need to do definitely way more education, both on the retail and institutional side, seeing a full room of people interested in what essentially is a fairly highly complex structured product is unimaginable in a TradFi world. So props to everyone being here and listening to basically what will be the future of financial markets.
Right, Jeff?
I came for Number Go Up, and I'm staying here to take over the debt market.
All right, so enjoy the bitterballen this afternoon.
Check it out. We are back live on the Bitcoin Magazine news desk here at Bitcoin 2025 in Amsterdam. I'm here with Lucas Kovanda. He's a chief economist at Trinity Bank. He's also a prominent economist from Czech Republic. Welcome to the news desk,
Thank you
Lucas.
very much.
So,
Thank you very much.
Czech Republic has made headlines most recently for buying 1 million Bitcoin from the central bank. That's a quite small number for a central bank. So I wanted to get your thoughts on the economic strategy rationale for this move. It is a small amount versus to the opportunity that Bitcoin holds.
So first of all, the great thing is that our central bank is buying some Bitcoins, but you know, as you said, the amount is quite small because foreign exchange reserves of our central bank are much larger. So it just not just 1% of foreign exchange reserves of our national bank goes to Bitcoin and other digital currencies, but especially Bitcoin. But I think it's the first step in a direction, and in the end we will see, I hope, that our central bank will be one of the first in the world that will really have some Bitcoins in their official foreign exchange reserve.
Some experts believe that the amount is small because Christine Lagarde, who is the president of the European Central Bank, has said that Bitcoin is worth nothing and that the ECB will not be holding any Bitcoin in its reserves. And so does that have a influence on how they are approaching this?
Yeah. There was this influence for sure because it was in January or February this year when governor of our central bank has said that he would like to have some Bitcoins in reserves.
That they were investigating. They were going to take a look at it, yeah.
And few days after, Christine Lagarde said it's not a good idea for any central bank in European Union to have any Bitcoin in its reserves, which is quite interesting because we, as a Czech Republic, we are not in the Eurozone. So our bank, official bank, is not ECB, it's still Czech National Bank because we have still our Czech Czech crown instead of euro. And even though Christine Lagarde was quite assertive in her assertion that we should not go into Bitcoin. So I think this is a good way how to start, and I hope one day we will have really Bitcoin in our official foreign exchange reserve in Czech Republic.
Yeah, it feels like this is a way to experiment with the innovation of Bitcoin, but also not step on the toes, or in what appears to be a political atmosphere.
Let's be clear, because now it's not in official reserve, so it's we call it right now like testing portfolio.
That's interesting in itself. Yeah.
Yeah, it's quite a first step, and we need to take a second step, but we have to be politically very careful because of ECB and other potential obstacles. So I think it was politically motivated to do this first step.
I got to wrap you up there. We are going to the main stage. We've got Adam back, as well as our technical writer, editor, Shinobi, on the main stage now. Let's have a listen.
From the cypherpunk perspective, with Adam back from Blockstream and Shinobi from Bitcoin Magazine. Let's give it up!
Well, hello everybody. I couldn't really think of a better person to sit here and discuss this topic than the man who created Hashcash to deal with the problem of spam in decentralized systems. I think over 20 years ago now?
18, I guess, 1997, right?
So this is a wealth of experience I get to draw from here, looking at how to design cypherpunk systems. And I think just before I pass the mic over to Adam, I think focusing on the chief goal of doing so is creating a system that can survive in adversarial conditions, where the environment that it's operating in is inherently antagonistic or hostile towards it. And that is pretty much the core design philosophy behind the cypherpunks in the first place. So I guess to kind of start, Adam, do you want to tell us a little bit about your experience kind of interacting with and building those types of systems back in the early file sharing days?
Yeah, so I've actually implemented 2 or 3 different peer-to-peer systems and operated more. So operated an exit node. And so if you think about a peer-to-peer system that is providing some form of self-sovereignty, if that is anonymity, privacy, and of course Bitcoin itself, which is about, censorship-resistant electronic money, then the things you're doing or you're trying to build are typically not popular with the establishment. So the establishment, whether that's law enforcement, government agencies, would like you to stop, and they will sometimes apply pressure to the people operating it. And so that was the case with anonymous remailers, which is a way to get privacy for email so that the recipient can't tell who sent it, and it gets relayed through multiple nodes, and the nodes are operated by volunteers. So I think it's the thing people are losing track of with Bitcoin is that Bitcoin is a peer-to-peer system, and peer-to-peer systems don't exist unless volunteers run them. And being a volunteer running a system that's providing self-sovereignty has risk. And you can see that from the anonymous remailers. So I operated Mixmaster anonymous remailer for some years. And there were other people who did that who had to get EFF funding to help defend them. Now, in my case, I was a bit tactical, so I did run an exit node. So the exit node is where you have the risk. If you operate a middle node, you will never send data directly to a user. You'll always go through an exit node. So I figured, well, if you're going to try and contribute to the availability of this service, you're providing better value if you operate an exit node. Though, of course, that's where the risk is. And so I took some defenses. I ran the remailer in another country, in Switzerland, and I rented a shell account from a cypherpunk who had a small ISP. And, I let it run until there was a problem. And, after some years, the Swiss Federal Police turned up at the guy's workplace and asked him about, I presume, something that was sent through it, which they didn't like. And so, I shut it down after that. But in the intervening 3 years, I provided service, and there were no logs. He could look at that because it was his ISP. He could look inside the shell account. Of course, there are no logs. So presumably they decided it's not worth taking further and try to get, to take it international to try and reach the owner of the shell account. So, and many peer-to-peer file systems are like that. So actually operating that remailer was how I came to develop Hashcash, because people would spam through the remailer, and remailer was an access point to another distributed system, which is Usenet discussion forums. So there are thousands and thousands of nodes that hold all of the discussions, and the messages are flood-filled through it. So it has some, if you combine the remailers with the Usenet, you have an anonymous way to have a discussion. And of course, it's a freewheeling Wild West, right? So people are going to say all kinds of things. They would post actually ripped movies in chunks in those. So it's used for all kinds of things. I'm sure some of them were not particularly legal. And I think it's the same for Tor, which is obviously well known and still around today, that running a Tor exit node. So with all of these things, and the same for peer-to-peer file sharing. So at the time, BitTorrent, Kazaa, eDonkey, there were many peer-to-peer file systems. And the establishment and the content distribution companies and lobby groups didn't like the fact that people were ripping content. And so they would try to work to prosecute random peer-to-peer file sharing users and try to make an example of them to scare other people off from doing it. So even running a peer-to-peer file sharing was risky. And who knows, nobody's looking particularly to see everything that's on this node, right? So I think, in that context, what you're looking to do is to provide a system that does something that the establishment doesn't want. Obviously, it involves some degree of risk and volunteers operating nodes. In a Bitcoin case, it's been around for a lot of years. It has, many companies. It has a degree of regulatory support and some bigger companies involved now. But of course, there are also countries which outlawed Bitcoin from time to time, and presumably some which currently outlaw Bitcoin or various parts of Bitcoin.
Yeah, and it's just like to look at the Tor example, that is a really existential risk. Like, it is widely depended on by human rights activists, protesters, people just generally, despised or viewed poorly by their government. And it is purely altruistic. Like, at least with a system like Bitcoin, in many different components of the system, there is an economic benefit or gain that you can realize through participating in the system in different ways. Like, Tor is literally pure altruism. And I think, I want to say it was 5 or 6 years ago, or maybe a little longer, there was actually a big push in the United States for public libraries to spin up and run Tor exit nodes, just under the thesis of that this is a public institution, they're providing just an information-based free service. Like, it's going to be a lot harder to go after somebody like your local library versus a random person that you can, paint in a certain way or craft a bad perception of. And that entire project essentially fell apart just because of the preemptive fear-mongering and the let's look at the risks or the problems this could cause. But like, Tor is still this massive, privacy network that millions of people depend on, whether on a constant basis, whether situationally. And that system needs to exist in the context of I am the government, I would do everything I can to stomp this out of existence. If I could snap my finger like that and make it go away, I would. And like, that's just an inherent part of that system. Like, there is no world in which governments are all just going to roll over and go, you know what, we don't mind anymore that you all have this huge degree of privacy and can say whatever you want and leave us no way to find out that you said it or who you said that to or who you are. Like, that's not going to happen. So if we care about these systems existing and providing these services, like, those of us who choose to actually participate in them and offer those services, like, you need to accept those risks. Like, that's how this works.
Yeah, I mean, I think the effect that makes it work is that while the governments and the establishment don't like self-sovereignty, they didn't like the internet itself because it enabled people to publish, to have blogs, to make video, to put out true but unpopular to the establishment information, like independent journalism. I think the thing that made that hard, makes it practically hard to stop peer-to-peer file sharing systems is the sheer number of people using them, and the fact that people can use them somewhat anonymously, and that society evolves, and if the average person thinks it's their right, that they want to use it, they don't see that they're doing anything wrong. And if you have enough people with that mindset, it starts to become challenging to make an example of something because you get political backlash, basically. And if you think about it, going back, for hundreds of years, the way that regulations evolve is not through enlightened government, but through test cases where unenlightened government or courts or establishment interacts with the will of millions of people and loses. So unfortunately, that means it makes a very messy situation for the people that end up being the test cases. But it does mean that many of the kind of legal precedents that protects the individual in file sharing systems, in peer-to-peer systems, in internet use, for example, precedents that protect you from being held responsible for the contents of browser caches or things that can get illegal data pushed into them without your intent, or your mailbox, because people can spam you. You don't look at all the messages. You don't look in the spam mailbox. So there's a lot of common sense legal precedents in many countries that have been, achieved through the hard efforts of, EFF and other, individual rights organizations funding and helping to protect rights online. And so, I think that for Bitcoin, there isn't really much to worry about because, at least on the spam side of things, because it's not, unlike a browser or an email client, it has no concept of file formats, of being a file transfer network, of image formats. It doesn't know about any of that. It has no hooks. And it doesn't even have separate files, right? It has large proprietary or custom database file formats. So it's actually basically takes a programmer and a third-party indexing service to even find and know what data to use to put into some custom programming to even extract the data. So I think, Sasha Hodder posted a video comment recently to sort of highlight all these things, and she's a Bitcoin lawyer, a lawyer in this space, to say that it's, there's not really any risk associated with that practically. So I think, of course, everybody dislikes spam, with the exception, of course, of the spammers and the people that are speculating on NFTs. But really the question is, with spam on Bitcoin, what could we do to protect against it? Now, I think, interestingly, Bitcoin is better protected than any other protocol against spam generally because it has a limited block size. There's no limit on your inbox of how much email you can receive. So limited block size, proof of work to create cost, and market fees. So if there's a lot of demand for block space from transactors, the fees will go up. And bear in mind that the average image size that has been spammed into the Bitcoin chain over the last 2.5 years is about 10 kilobytes, and that is sort of 40 to 50 times bigger than a typical transaction. So clearly transactions are going to win in any kind of bidding war, because the periods of spam being sent in the Bitcoin chain, which has been going on for a decade or more, they fade out. All of the people that speculate and I'm going to lose the money, the phase dies out, and then you get some kind of lower fee environment, which is kind of what we're seeing now.
Yeah, and that I think that whole dynamic and like the ultimate root of it, like the block size limit, was something like Satoshi just added that one day. But the reason that we chose as users and people operating the network to keep it was as that kind of self-adjusting system like this. Like, yes, people will spam, like they'll put data somewhere they can put it if they keep it cheap, or if the cost of it stays cheap. But that block size restriction forces that competition. And whenever demand picks up for putting any data there, the price rises enormously. And that's just inherently in the architecture, like something that reaches an equilibrium where this problem solves itself whenever it really manifests at scale. And that's a core, design philosophy behind Bitcoin. Like, yes, this problem might come at it every once in a while, but over time, that equilibrium will be reached and it will peter out. Like the system will just continue functioning without the vital services like liveness, confirmation, availability ever actually being compromised, just through that design choice and how that inherently plays out with users interacting with it.
I think the other thing that people will do when they're thinking about spam is they will use the email spam phenomena for inspiration or for analogies, which is to say that email clients and sometimes like web-hosted mail like Gmail and Hotmail have a spam folder, and they have some heuristic that tries to recognize spam. And now where Bitcoin is not as easily able to deal with this is, well, firstly, Bitcoin is not aware of the content, right? Because it's not in the business of it's in the business of transacting, not in relaying or making available files. It's not a file sharing network. So it simply doesn't have the tooling to look for or look at these things. But despite that, the other trade-off is that Bitcoin is a flood fill network because it's trying to be censorship resistant by design. Bitcoin is designed so that it's very hard for the establishment or even for a large group of users or a subset of miners to censor the transactions of an unpopular minority. It's supposed to be neutral, allow anybody to transact without interfering, without having the risk of their money being seized or frozen. And so the peer-to-peer file network is part of that story. And basically it's because there are tens or hundreds of thousands of nodes, and a listening node has 125 connections. And so if you were to put a filter, install some custom software on your node and filter something you consider spam so that you don't relay it, it won't really have much effect on an unpopular transaction. Now, unfortunately, the network doesn't understand the difference between spam being unpopular and a transaction being unpopular because of who's sending it. And so you get, the spammers get the benefit of the censorship resistance, and it's hard to separate those two things. So effectively, it means that you get this phenomena where the tolerant minority tends to win, which is, if even 10% of the nodes are allowing a transaction that 90% disapprove of, it will still make it to the miners without any other changes. And then you have to bear in mind also the miners are trying to find as many high fee paying transactions as they can, so they tend to try and look very carefully all around the network and grab any transactions they can to make the most profitable block. So I think the the architecture is sort of necessarily designed to make it hard to filter, to make filtering, difficult to make it take effect. And then another topic that has arisen is Bitcoin has a kind of domain-specific programming language, Bitcoin script, which is the way that you can use Bitcoin. So every time you spend a Bitcoin, you're using a very small program to evaluate whether you have the authority to spend the coin or not. But this same programming language is what enables multi-sig, it enables Lightning, it enables Arc, it enables Fedimint, it enables all kinds of layer 2 things, and potentially more ambitious things like BitVM, which can do some quite surprising things with Bitcoin script. Now, one of the intuitions people have had, this is a bit more on the technical side, for how to fight back against spam, is they look at where is the spam encoded. Now, unfortunately, the spam is actually encoded in the spending script, mostly, because it's a little bit cheaper than doing it in other parts of the blockchain. And so it's using a particular construct. It's got an if statement, it's got a 0, it's got push data, and so their intuition is, well, let's change the language so they can't do that. But I think that's misguided, because if statements are, in basically every programming language typically has some kind of conditional if statement. The if statement has been there since January 2009. It was kind of one of the original programming things, and it's actually generated by a lot of different software in the Bitcoin system, like Miniscript, which is a way to write kind of more complicated spending conditions in a higher level language and have them be compiled into Bitcoin script. So particularly kind of time lock, multi-sig, inheritance, pre-signed transactions, those kinds of things will tend to produce if statements. So we really can't encourage, I think it's quite unrealistic to say, let's delete the if statement from the Bitcoin language. It won't stop the spam, and it will unnecessarily complicate lots of different use cases.
Yeah, I mean, it's kind of hit the point where, like, they've, like, people making these arguments are ignoring the self-regulating fee dynamic, like that competitive advantage that non-spam transactions have against spam, and are essentially pushing in the direction of crippling Bitcoin's functionality itself as a path or a way to stop the spam, so to say. But in reality, it's like Adam said, it will not do that. And all it will do is make Bitcoin less and less functional, less and less useful in the process of trying to do this thing. And at the end of the day, like, as absurd as it would be, you could rip out pretty much every part of Bitcoin except the pieces of this language that just check a cryptographic signature or allow you to include a public key. And that alone is still enough to include arbitrary data on chain. Like, there is no test in Bitcoin script to see if this public key is something that anyone can sign for. It's just a blank data field that you can put in whatever you want. Like, it just has to fit the size constraints.
Yeah, I mean, I think the Bitcoin system, in terms of the changes that have been made over time, like the introduction of Taproot, the introduction of SegWit, introduction of some other opcodes over the years, like other mission-critical systems, like flight control systems in medical equipment that could, if it misfired, could deliver a lethal dose or something. These kinds of equipment, they are, mission critical. People will die or people will lose a lot of money if something goes wrong. And when there's a change proposed to them, the people that are working on the engineering and the products for them will be extremely cautious about how to do that. And that is the case for Bitcoin. Bitcoin is one of the most mission critical, highest assurance pieces of software, even probably above flight control systems at this point. And so, it's to have a change, people want a specification for the change, and a problem statement, like what does this change supposed to achieve, and how is it specified, and what do you expect it to do? And unfortunately, all of the ideas so far put forward to add friction to spam just clearly fail immediately. And by that I mean, for example, so Shinobi said, if you delete the if statement, or even if you delete everything, I mean, that's a pretty extreme case, but it shows you that for each thing you might delete, if you delete the if statement, is that going to prevent or even slow down spam? And the answer is, if anybody's familiar with general programming languages, would be, well, no, I could do it without an if statement. I could just do this. And they say, well, we'll ban that. And so the turnaround time from somebody proposing a workaround to demonstrating that it doesn't work is seconds. A programmer can immediately answer, that won't work because I could do this. And you can go backwards and forwards like this. And where you end up with is deleting the script system. And as Shinobi just pointed out, even if you delete the script system, there are still ways they can spam, which have been used in the past. Before Taproot, before SegWit, before 2017, there was spam in the blockchain for basically since inception.
All right, well, we are at the 20-second mark, so I want to say thank you for sitting down and talking, Adam. And I guess the way you deal with spam isn't try to stop it from existing. You create a cost for it that they're not going to be able to afford. But thank you, everybody.
I mean, I think in summary that, everybody dislikes spam, but to do something about it, Bitcoin already has dynamic fees, so it's better protected than most other internet protocols. And anything that we do has to be measured to see if it works. Unfortunately, it doesn't look like there's anything easy to do. So people are kind of criticizing the approach, but the people doing the spamming and the people buying the speculative assets are being very quiet and not taking the criticism where they are actually the cause of the problem.
Thank you, everybody.
The euro is being debased. The ECB has expanded its balance sheet from $1 trillion in 2007 to over $8 trillion at its peak. Cash reserves are evaporating in real time. While US companies led Bitcoin Treasury adoption, Europe is being left behind, unsure how to leverage or evaluate Bitcoin Treasury strategies. We've built a tool to help you navigate the chaos. 21 days, 21 modules, from Bitcoin custody and compliance to the principles of Bitcoin and its use cases. Your complete guide to corporate Bitcoin education in Europe is coming soon. Sign up today and we will send you the guide the day it releases. The euro is being debased. The ECB has expanded its balance sheet from $1 trillion in 2007 to over $8 trillion at its peak. Cash reserves are evaporating in real time. While US companies led Bitcoin Treasury adoption, Europe is being left behind, unsure how to leverage or evaluate Bitcoin Treasury strategies. We've built a tool to help you navigate the chaos. 21 days, 21 modules, from Bitcoin custody and compliance to the principles of Bitcoin and its use cases. Your complete guide to corporate Bitcoin education in Europe is coming soon. Sign up today and we will send you the guide the day it releases.
Welcome back to the Bitcoin Magazine news desk here at Bitcoin Amsterdam 2025, presented by Treasury. All right, we are here with Lucas Kovanda, Chief Economist at Trinity Bank. He is a prominent economist in Czech Republic. And well, we were having a conversation earlier about how the Czech Republic has bought $1 million worth of Bitcoin. It's a small amount for a central bank, but it seems that they are, experimenting with innovation while treading a fine line of this political atmosphere where Christine Lagarde, the president of the European Central Bank, has said that Bitcoin is worth nothing and that central banks within the Eurozone should not be buying Bitcoin. And so you were saying that they didn't put this in their reserves, but they're actually putting this in a testing portfolio, which is interesting, because I think this creates an opportunity for them to create metrics on seeing how much this Bitcoin will be worth in a couple of years, and perhaps create a case for why a central bank should be buying Bitcoin. So I want to first start off with why the Czech Republic? Why do you think that they are the first to step into this innovation and experiment in this way?
That's a good question, because Czech Republic, has a good history of innovation in Bitcoin, because, we were first country with pool mining, and then our companies in Czech Republic also introduced as a first globally hardware wallets for Bitcoin. So our Trezor wallet is well known globally, and we are quite a small country, but and we are so and we are a small country, so there is also great environment for innovations in it. And
we have some technical difficulties here. All right. Well, I was going to say that, yes, it is interesting that the Czech Republic is the one innovating here, especially in an environment where it gives the central bank to explore if they are going to be using Bitcoin, create those metrics, and say that there's an opportunity cost here if central banks do not invest in Bitcoin. Maybe, do you agree? What are your thoughts on that line of thinking? If everything works on the technical side here.
Do you hear me?
Yes.
Yeah. I think opportunity cost of not having any Bitcoin in your portfolio, and it doesn't matter if you are a central bank or government or company or fund or a household or individual investor, are large, because the biggest risk of today investing is not to have any Bitcoin in your portfolio, because in the last 10 years Bitcoin has returned 30,000%, and it's very difficult to find another asset that would be so strong.
All right. We got to wrap it up there, but thank you so much, Lucas. We're going to head over to Jack Mahler's on the main stage right now, being interviewed by none other than Bitcoin Magazine's Frank Korva. All right, let's check it out.
You guys are too...
Yeah, now we're talking. Let's go. Who was here last year for this guy? We had a bunch of people, I think. I would imagine we have some repeat offenders. Very, very cool. Jack, honored to be up here with you. Thank you for coming back to Amsterdam to do this with us.
I love Europe. I do. You guys have better food, better culture, nicer people. America's overrated. Yeah. I'm not lying. Better saunas I took this morning. So I'm honored to be here. You guys are too kind to me, man. The kid from the empty closet with the hoodie. You guys are way too nice to me. So I appreciate it.
We love it. So let's start from last year. Let's rewind back to last year. Strike, your team, very well known for shipping. What have you shipped from the time you were here last year, doing this with Dylan LeClaire, to this year?
Well, we launched our products in Europe last year, which is a huge milestone for us. I mean, we think Bitcoin is global money. It's better money. And we have a very unique opportunity as a company to serve financial products to hopefully billions of people someday. Europe is included in that. And so we were able to get the necessary licenses to launch our product, which at the time was primarily our brokerage product. So we have no-fee DCA, target orders. I mean, you guys are all familiar with the product, hopefully, at this point. Cheapest way to hopefully buy Bitcoin, free withdrawals to cold storage. And so that's what we did last year. But it was really important that we had a footprint in the region. In many ways, as a company, Strike is a Bitcoin distribution platform. We have licenses, regulation, technology, all the sorts of tools needed to give Bitcoiners what they want and what they need all over the world. This year, we launched lending. Lending, I've been working on Bitcoin for 13 years, since I was 18 years old. Lending is the most popular product I've ever launched in my career, specifically around Bitcoin utility. I spent a lot of my life trying to get governments and people to adopt the Lightning Network, and not that that didn't work, but lending has been the most successful product we've ever launched in allowing people to better their lives with the Bitcoin they've already acquired. So it doesn't just sit under your mattress. You can actually use it to start a business, put a down payment on a home, finance a medical emergency, put your kids through university. And so we brought that to Europe very recently and the UK. And we're just going to keep going. There's a lot that we're going to ship soon. And, you know, we want to be the financial institution for the Bitcoiner all over the world. And that's the mission. That's the goal.
Appreciate that. When people think of Europe, often sometimes in the Bitcoin community, and I'm saying this maybe as an American, we see sometimes a relatively unfriendly regulatory environment. Sometimes Christine Lagarde comes to mind, not a big Bitcoin fan, right? I'm sure you're seeing different data in terms of uptake in Europe. Are there a lot of Bitcoiners in Europe? Is there, is Bitcoin not really properly represented when it comes to the politicians and the regulatory bodies in Europe? Is there something below the surface that we're not seeing?
Of course. I mean, there's tons of Bitcoiners in Europe. The interesting part about operating Strike is where we see adoption. It makes sense in hindsight, but Bitcoin is a giant wealth transfer. And so therefore, some of the biggest forms of adoption we see is from where the wealth already exists. And so there is not a wealthy person or people that are net producers to society that produce enough value for those around them that they have excess income that they need to save. There's no one I've ever met that needs to save time and energy for their future that is not interested in a better way to do it right now. And so yes, there are plenty of net producers to society in Europe that are rational and principled and moral and ethical. And many of them are our customers. So I don't know, I will say, as much of the US, we don't do things better than you guys as far as cuisine and culture and just like being nice to everyone else. Our regulatory environment is getting a lot more clear, and Europe is not. And so my apologies for how long it has taken us to build some of these products. But one thing that we want to do is do it the right way. A lot of our success has been born on the back of the FTX blow up, the BlockFi blow up. And our customers trust us and trust me to do the right thing. And in part to do that is to make sure that there's regulated compliant services that you guys can rely on and use for the rest of your life. And unfortunately, that comes with licensing and stuff. So it's a grind. I wish Europe had more clear rules. And I mean, we have customers that get debanked for trying to send money to our app still. But with time.
Appreciate that. Something else, we've obviously seen a 180 in terms of the Trump administration versus the Biden administration in the United States. Far more friendly, at very least, to the Bitcoin industry, right? Broader crypto Bitcoin industry. It's made it easier for you to operate in the United States. Do you think that this might be contagious globally? Do you think regulators globally, maybe not even beyond Europe, I know you serve people all over the world, are we moving in just generally a better direction? Is there more education happening with regulators? Is it getting easier for you to get the licenses you need to provide the services that you provide?
I'll give you a split answer. On one side, politicians are politicians, okay? I've been very vocal about this. I'm not left, I'm not right. I'm not red, I'm not blue. I'm not up, I'm not down. All this dumbass shit. I'm orange, I'm a Bitcoiner. I think
You could do that, we could clap for that.
Yeah, I feel very strongly that the best way for all of us, but I'll speak for myself and not for you guys, to affect change that I believe in is through open source software, is through free markets and I think building a profitable business is the financial expression of making the world a better place, because you are producing more value for the world than you're consuming from the world. And so politicians are politicians no matter how you dress them up, no matter how much makeup, how many fake tans. What we've seen so far, it's been a year since the election. Elon Musk was going to Doge my country and treat it like a startup and properly account for it. That didn't work. Everyone was going to pay for all of the mistakes that my country has made in the past via tariffs. China and Russia said absolutely fucking not. That didn't work. And then we were going to basically commingle with the Federal Reserve and manipulate the cost of money in order to debase it and finance our way out of it. And that's been a lot more difficult. And so here we are, exemptions on tariffs, Doge didn't work, and they're printing money to hand out stimulus checks. That, no offense, that sounds a lot like the Biden administration. So, right? I got a laugh out of that guy.
We got an enjoyer in the front row.
It's not that dissimilar unless you sit online all day and you compare what color ties they're wearing. So politicians are politicians. Now, I greatly prefer this administration than the prior one because they're trying, and they're not debanking me, and they're trying to provide a clarity. So that is great, and I'm not talking crap. I'm just being honest, which I don't think you guys want another politician. You don't want me to be a politician. You don't want me to be another old white guy in a blue suit that's telling you a bunch of bullshit. And so I'm just being honest. Now, on the other side of that is that one of Bitcoin's greatest strengths is that you're better off on its team than standing in its way. That's the design of the threat of the 51% attack. Even if you were to get that much hash power, you're better off just mining a ton of Bitcoin than double spending someone's pizza transaction, right? And it's the same thing with governments. I think, Donald Trump is way better off friends with a new wealth class that's a multi-trillion-dollar asset that's competing with gold for potentially the new reserve system and how we all capitalize. He's way better off being our friend than being our enemy. And I think governments are learning that, institutions are learning that, and that is the beautiful part about Bitcoin. So, anyone needs Bitcoin more than Bitcoin needs them. And it's the moment that you realize that.
Claps are all right. Please feel free.
It's the moment you realize that you become a Bitcoiner. Is that I think as a human, we all naturally want two things. We want to be a part of something bigger than ourselves, and we want to be a part of something that will last longer than we will. The most natural expression of that is family, right? You by having children, you are creating something in your bloodline that will last longer than you will, hopefully. And just the nature of family is it's something bigger than you. There's sacrifice, and you have a partner and you have children. Now, I think Bitcoin is a beautiful way to express that best form of humanity as well. Bitcoin will be around far longer than we will, and it's far bigger than any of us. And it's understanding that level of interconnectivity with the human story that makes us all Bitcoiners. And slowly but surely, people are realizing that. Bitcoin doesn't need Donald Trump. Donald Trump needed Bitcoin to win that election.
Big time.
And Wall Street, Bitcoin doesn't need Wall Street. Wall Street is producing the most popular ETF of all time. These banks on Wall Street are having their best years of all time because of Bitcoin. So it's this really gradual process that you're better off on its team and realizing that you are a small part that could benefit from it, and you're not the main character. And that'll take time because these people have really big egos, but we'll get there.
Surely important. Appreciate that, yeah. You make people clap a lot You're really good with words.
You're so nice to me, man. America, they throw tomatoes at me.
Nah, that's not how it works in America either. He's very, very good at this, and it's something that I'm very curious about as someone who works in media. And I asked him beforehand, we were just sitting over there before this, and I said, like, how much time do you put into these keynotes, and you're doing you're creating software that makes Bitcoin easier to use, but you also find it so important to do this messaging, whether it's a keynote, whether it's taking the time to do a fireside or doing your podcast every week. And it isn't just like Jack's musings. It's like, well, here's this article, and this connects to this, and this connects to this. Why so much time? Why is it so important for you in particular to do this sort of messaging?
Well, I mean, education, the difference between the world we live in today and a world I think we all want to see, which is one that adopts Bitcoin and understands it and uses it to its potential, is education. So it is the most simple form of progress we can do, but it's necessary. But I think my particular style is to be very, very authentic. I think we've drifted as society, we've drifted so far away from what's real. We don't use real money anymore. We use printed pieces of paper. In America, we don't eat real food anymore. You look on the back of your groceries, there's 77 ingredients. Metabolic disease is through the roof. Cancer rates have never been higher, and half the country's fat. And, you know, part of what I want to represent is being real. I think the further we get away from...
Claps are good. We allow claps, please, feel free.
Like the further we get away from, I think humans are a natural byproduct of Mother Nature. The human story is really like commercializing energy from the sun at the end of the day. And so I think being connected to nature, eating real foods, operating around a moral ground of truth, not lying to yourself, not lying to those around you. And so not only do I try and spend my time educating, because that is the difference between someone whose life savings is evaporating to a point that's making them depressed, suicidal, living a life that they don't enjoy, versus the savings that are appreciating, that's empowering them to have more family, enjoy more housing, invest more in the future that they want to see. The difference between the two is education. Everyone has access to Bitcoin. There's no privileged group that gets access to what we all understand versus other. It's just, can you go out and educate it? And I try and do it in a way that's authentic. And it's not everyone's style. Sometimes people prefer the suits on CNBC but
you found a nice middle ground between hoodies and suits. I feel like this is
I hope you guys recognize me. I've incorporated like an all-black costume into my wardrobe. Shout out to my chief of staff. I didn't pick this out, but I've heard good things. I heard it looks better than some of my hoodies. Nonetheless, that's part of the brand with Strike. What we're bringing to Wall Street with 21 is authentic, truth, Bitcoin, real. I think we've been starved of real.
Yeah, appreciate that. Claps are good. Like I said, go for it. Don't hesitate. Don't hold back. I think we all believe we're on an arc to hyper-Bitcoinization. So I'm kind of curious as to what you think hyper-Bitcoinization looks like, and then what are sort of the major hurdles? Like we could talk a little bit about maybe human psychology. Do people not understand this well enough? Is it a regulatory thing? What was that? I can't hear it, but anyway, we'll keep going. Yeah, if someone can relay the message, I will. Please feel free to send it along. But anyway, what does this arc look like? What does hyper-Bitcoinization look like in your mind, and how do we get there?
To me, Bitcoin is money, which sounds like, oh no, duh, but all these other cryptos aren't money. Money is the market good that you acquire to save and later exchange for the things that you need. These boots are not money. I acquired them to consume them, to put them on my foot. I didn't acquire them to save and later get groceries, okay? So it's a very simple concept. We all get up, we work, we provide value for those around us, hopefully, and in exchange for that, we need a market good to represent our time and energy, human effort, because I can't go to the grocery store and say, hey, I just chatted with Frank, I'll take 2 steaks. They're going to be like, I don't give a fuck about your conversation with Frank. And so we have this thing called money. And Bitcoin is trying to solve that problem, right? It's trying to be the thing that you can exchange your human effort for, the value you create for others, and save. And then when the time is right, whether you need food, you need housing, you need family, you can exchange for the things that you do want to consume. Now, us humans, we own about $900 trillion worth of stuff, a little more at this point. And that's a combination of fiat currencies, debt, sovereign debt, like nation state debt, also real estate, also equities, so stocks in a company, also precious metals. So it's all the things we own, art, whatever. Half of it we've monetized. So about half the world's wealth, half the 900 trillion, 400 to 500 trillion, we've monetized the real estate. Half the world's real estate, people, the owners of the real estate aren't sleeping in it. They aren't eating dinner with their families in it. You can't own 10 houses and sleep in all of them. Half the real estate in the world they've used as a savings account. Half the equities, half of the stuff, half the art. No one's buying a $10 million painting to put on their wall so their kid can throw spaghetti at it. Right. The $10 million painting is sitting in a vault. They're not consuming the art. They don't wake up and have a coffee and look at the art. It's a savings, right? So to me, Bitcoin is solving a $400 to $500 trillion problem where the things around us we need to consume. You should only have the houses that you actually use. You should only have the art that's actually on your wall. Don't deprive the world of beautiful art in a fucking vault. And so hyper-Bitcoinization to me is the world continually adopting it as money, which so far we're 2 trillion of the 400. Yep. And that's in purchasing power terms, right? Like obviously these numbers inflate as currencies inflate. So that is what I view. I think we are well on our way. Sometimes people say, what's taking Bitcoin so long? It's like, well, it's been 15 years roundabout, and we've made incredible progress. So to me, that's what it is. That's why it's starkly different than other cryptos. Ethereum's not money. Solana's not money. These are technologies that do, backflips on the blockchain or whatever. But the important part is they're not competing for that 400 trillion. So that's what it looks like to me. And seeing Wall Street and nation states and corporations and individuals continue to use it as money.
Appreciate you talking about Bitcoin as money. It often gets talked about as an asset, something we can use. We're seeing a lot the rise of Bitcoin treasury companies. And I think personally all this stuff is fine. It's great. And you yourself, you're involved with 21, right? So you on some level see it as an asset as well. I think it's both, right? It is both. But I think also there seems to have been some pressure applied. I don't know. There is sometimes some pressure applied to some people to kind of like, well, don't talk about it as money, right? Because that would mean it's maybe a competitor to the dollar or something like that. And not a lot of people necessarily like that. So I'm curious about that. Why do you remain so adamant about kind of making sure that Bitcoin fulfills its ultimate purpose as money?
Well, because people have convoluted the concept of money to benefit them. It's like, oh, no, Bitcoin's not money. You're talking about an asset. The dollar's money. No, how about fuck you? First of all, don't tell me what to think or how to say what I want to say.
That's fair.
Money is what I want to save, then I later exchange for the things I want in my life. Now, if I walk into the pizza parlor and they say, well, we technically only accept dollars at that moment, then I just convert my Bitcoin to dollars and I hand to get the pizza. But what I used as money was Bitcoin, because I exchanged the work I'm doing for those around me for Bitcoin and then later exchange it for the things I want. So this convoluted concept that there's like all these different forms of like, fuck you. I just don't buy it. And sorry, because it really does bother me if like, there are powerful people in this industry that you guys all probably follow online and I'm not saying they're bad people, but they've tapped me on the shoulder and say, hey, don't say that on CNBC, or I don't like the way you talk about the dollar. Sorry, good thing I'm me and you're you, and you say whatever you want. And then in regards to the Treasury.
That's right, yeah, it's important. And that's this particular, so can I add a little context there if you don't mind? This particular port is really important. For the last, I've been the White House correspondent for Bitcoin Magazine. There are certain pressures that get put on people when they're in certain roles. So for the sake, I think it really deserves a round of applause you just gave him, because that tap on the shoulder does happen to people, and they get told to think about things a certain way and message a certain way, and his messaging has remained consistent throughout. And this is really important. It's why you're up here, because I think what you do with that messaging is you speak to the hearts of everybody in this room who's taken the time, who's used their money to come here, spend time at a Bitcoin conference, to be around other like-minded people who see Bitcoin as money. So I think this point is really, really important. The amount of pressure, it really can't be underestimated by people who might not be in these environments. But I'm curious, is it just your sense of integrity? It has to be hard at points. I have to imagine there are points where the pressure kind of feels like so much like, maybe it would be easier to just toe this line that people want me to toe.
Again, it's like I just am very passionate and feel very strongly about being real. Like, as a human being, I was born to love others, to contribute to something bigger than myself. Like, this is bigger than me. And it's bigger than anyone else's self-interest as well. And so, you know, I don't think any of us were born inherently bad or wrong. So why I wouldn't want to stand for the truth and be honest. So, you know, what's my preference? To be honest, stand for what I believe in. And by the way, not in an arrogant fashion. I'll be the first to raise my hand, which I've done throughout my career all the time, when I'm wrong. You know, I've said, I got to squeeze this in here just for this. My team's going to kill me. But I've said, hey, it seems like Jamie Dimon banked Jeffrey Epstein.
Big words, big words.
No, listen, I've said that pretty publicly because it seems like it's true, and JP Morgan threw me out of the bank, hilariously. And if he ever called me up and said, listen, man, you can't say stuff like that because here's the evidence that I didn't, he's never done that. He's never once provided. So I'm happy to raise my hand, the point is, and say, I was wrong, the dollar's money, Bitcoin's an asset. But it's not for those reasons that people tap me on the shoulder. They tap me on the shoulders like, well, you're saying things that, you know, would make other people upset. If the truth makes you upset, that says a lot about you, not me.
Yeah. Appreciate that. We're getting close to wrapping up, but something that came to mind, it was a question that was kind of repeating itself in my mind as you were responding to that last question. Does Bitcoin, in a way, make us inherently better, right? Does basically saving our money, not having to be on a treadmill all the time, and have that sort of desperation, that adrenaline in our body that's constantly keeping us on this treadmill that never ends because of fiat debasement, does it inherently make us better, or do we have work to do as Bitcoiners to be purveyors of this technology, or people who represent this technology? We're proud to use it. We want to sort of see it proliferate. Do we have work to do, or maybe a mix of both? What do you think?
There's probably truth to both. It absolutely makes us better people. Again, I think money in its most pure form is just our effort, our labor, our time, our energy, abstracted into a market good that we can freely trade. And so I've considered things like government debt and the ability for governments to print currency to be the closest thing that we've ever seen to time travel and abuse on a population. You know, being able to borrow money is literally pulling time and energy from the future and pulling it forward to expend it today. So the United States being in $38 trillion of debt, they've already expended $38 trillion worth of human effort from my kids when I become a father, from their kids. That is as close to time travel as possible. They've traveled into the future and expended time, energy, and effort that we haven't even had an ability to experience. And then on top of that, they are debasing our time and energy. So if money's your time and energy in an abstracted form, and they're able to debase it and devalue it, by proxy, they're devaluing you.
It's really important to note, yeah, please.
And so, like, I will just say, like, it's one of the more abusive things government has ever done to the population is have a vector to debase humans. Because again, it's like, well, it's debasing the currency, but they are, like, your money is a reflection of the things you've done for those around you. It's supposed to represent the value you get up and create every day. And so by proxy, you are destroying, you're increasing the time and energy required to live a sustainable life.
Just to get by, right?
Yes. So now instead of humans getting married at 20, owning a house at 25, having kids and creating businesses, the average age people get married is in their 30s. The average age they own a home is in their 50s. You're increasing the time and energy required to be productive and be the best form of ourselves. It's bullshit. And so inability to say, listen, there's a $38 trillion hole, and there's right now a fight of who's going to realize that loss. Is it going to be Russia, China, the US, the American taxpayer, the banking system? What Bitcoin allows us to do is say, I don't know the answer to that. You guys will probably point guns at each other to figure that out. It's not going to be me. because I'm going to take my time and energy and I'm going to protect it with math very peacefully. And so it absolutely, I think Bitcoiners have more family, lower time preference, and they're able to do things like start business. Like Bitcoin enabled me to start 2 companies that, I hope and work hard to have a positive influence on the world. And I wouldn't have been able to do that without Bitcoin.
I think we're going to leave it there. I have one last request. The applause is not enough. I need you to stand up and give this man a round of applause. So please join me. Jack, thank you. We appreciate what you've done, brother.
All right, what did we think of that last one, everyone? Amazing. Before we wrap up into our last session, I want to remind you all that if you had a good time here, you'll have an even better time next year. Bitcoin 2026 in Amsterdam is happening. Just visit our website, bitcoin.amsterdam, to get your tickets at the cheapest price they will be right now. Now, let's move into our last session. I think we can all agree this is last, but certainly not least, for the guy who has literally set the standard. I want you to take a minute, I want you to get prepared, and then I want you to cheer like we can make the price pump as far as we can. So 3, 2, 1. Please help me welcome Saifedean Ammous.
Hello, everybody. Thank you so much for joining. Thank you. Thank you. Thank you. Thank you. Thank you so much for joining. Thank you to the organizers for inviting me. It's a pleasure and an honor to be here. It's my first time in Amsterdam, and I've enjoyed it a lot. I'm going today to be talking about the topic of my new book, and a lot of it has to do with war, which is a very timely, unfortunately, and topical question to discuss. The relationship between fiat and war in particular. And if we want to understand why fiat does cause a lot of war and why I would say war causes a lot of fiat, we need to go back to Genesis, to the origins of fiat. And the origin of fiat, the Genesis block of fiat, if you want, was World War I. That's when the world really downloaded and installed this malware called fiat money. It happened in World War I. And it's a very important story which a lot of people don't know, which most people don't know, because we only found out the details of how this happened very recently, more than a century after it happened. Everything was hidden. And only recently have we found out about it. And it has not really been incorporated into the historiography of World War I and how World War I happened. But we're going to look at it today. So the key idea here we'll see is that fiat is born in war and it thrives in war. And it was thanks to fiat money that we had the bloodiest century ever in the 20th century. In fact, if you look historically before the 20th century, you see that human civilization was advancing, and generally wars were becoming a little bit less bloody. Even though technology was advancing, wars were less and less bloody and less total. If you look in the 17th, 18th, and 19th centuries, you see that increasingly wars were being fought between professional armies in battlefields rather than being total wars of populations against each other and including the mass murder of populations. But that reversed in the 20th century, and war went back to being total, and the normal civilized norms of war that had been developing over centuries were forgotten. In fact, we can also see it from this graph. We see the 20th century a massive outlier in terms of the number of people killed in conflict. And that's expensive. You know, killing people is expensive. If you try and do it at scale, I don't recommend you do it, but if you do try to do it at scale, it is pretty expensive. It's not easy. If you don't have a money printer at home to fund it, you're going to have a bad time. It's not easy to kill a lot of people. Highly recommend you go, if you're going to try it, highly recommend having a fiat money printer. That's why the only people that manage to succeed with this have a fiat money printer. So this is really because of fiat, and it's really, we could say that fiat has created generations of people who think that war is inevitable, it's just something that is always happening, it's always going to happen, and it's only a question of who's fighting who at this point, or who are we fighting at this point, but we have to be at war. That's just what humans do. And you know, you see this when people say that we're just animals. Animals are always fighting each other, and humans are going to be like that too. But I disagree. In fact, historically, we see that war used to be a lot bigger of a deal than now. Countries didn't just go to war with each other. And wars were between armies in battlefields. And while battlefields raged with conflict, cities continued to function normally. And in fact, cities of warring countries might trade with one another while their militaries were fighting. Because under the gold standard, before fiat money, soldiers were expensive. War was expensive. If you wanted to launch a war, you needed to organize an army, train it, and you needed to feed it, and you needed to provide it with weapons, and that's just not cheap. And so if you were careless about sending your soldiers into war, you were careless about money, and you ran out of money very quickly, and if you ran out of money, you lost your wars, and you got overrun and conquered by others. So that made war expensive, and it made leaders and kings and presidents think a lot before sending soldiers into war. In that kind of world, defensive war would be popular. If somebody invades your country, people in your country would get together and they would want to defend. They would want to contribute money, weapons, or their own selves to conscription in order to try and defend the country. But if you're launching an offensive war, trying to conquer land abroad, it's very difficult to convince people to go and die for the king to have more and more land. So this tended to make conflict a little bit more expensive over time, and it made governments more responsible. And over time, the more responsible ones succeeded more, and the less responsible ones lost and got taken over and went bankrupt and got destroyed. So this was all going very well, but it all changed in 1914. Now, before 1914, we did have times in which governments went off the gold standard to fight a war. It happened often, and it was devastating and it was destructive. But eventually, it had to end previously, because one country being off the gold standard was unsustainable. All the other countries were on the gold standard. And so the country that goes off the gold standard individually during a war ends up suffering economically. And so they have to reverse this decision. But that changed in 1914 with World War I, because all the major economies went off the gold standard. And so they could all inflate at the same time. And they managed to finance the war effort for a very long time. And that really made war permanent. It made the First World War last for a very long time. But beyond that, even after that, after the war ended, the natural state of a government was that it was now running a money printer and capable of fighting wars for a very long time. The distinction here is simple. When you have a money printer, you go to war and you can keep printing money until the value of all the money held by everybody in the country is destroyed. When you didn't have a money printer, when money was gold, you could only fight for as long as you had gold in your own treasury. So the government could only fight for as long as it had gold. Once it ran out of gold, it could no longer fight. Now, with a money printer, it's not about how much gold the government has. It's about how much wealth the entire country has. And so the government takes the wealth away from people just by simply devaluing their money. And therefore, it can keep fighting a war for a much, much longer time. And it can keep financing the war for a longer time. And it can keep conscripting people and forcing them to go to the front for a much longer time. And that's why World War I lasted so long. And that's why since then, war has become a lot easier. It's easier to just take people to war. You no longer need the consent of the people to be sent, because you have their money. You control their wealth, you can take their wealth, and then you force them to go. You make them poor if they don't go. And even taxation is no longer needed for war. It used to be that you had to tax people, which is unpopular. If you wanted to ask them for money, you'd go and you tell them, give me money, I want to send you to war. They hide the money, and then it's complicated to go after them and try and find where their money is. But if their money is fiat and you can print their money, doesn't matter if they hide it, doesn't matter how well they hide it. Their money is being devalued because you're printing more of it. So you're taking their purchasing power, whether they know it or not. So you can pay for the soldiers to go to the war, whether the people want to pay for it or not. So what people think and what people say and how people vote become increasingly irrelevant in this world. Democracy becomes irrelevant. People's will and consent become irrelevant. You just print money and you tell them what's going to happen, and they have to deal with it. And if they don't like it, they are going to be impoverished to enforce it. Their wealth is going to go to make it happen, whether they like it or not. And the end result is that it's just now considered normal for many governments that, for many people, that their governments are just constantly at war. We see this all over the world. So how did this exactly happen in World War I? Why was World War I the point at which the monetary system really shifted from being on gold to being on fiat? Well, you know, the common myth is that most of those governments wanted to fight wars. Every government says it was a matter of life and death. We had to do it. And if we didn't do it, we would all get destroyed by the evil enemies. But they all did it at the same time. And they all went off the gold standard. They all increased the money supply massively. And in fact, there was a lot less public support for this war than most history books would like to tell you. And in fact, the most interesting story for me is the story of Britain, how Britain joined the war, because Britain at that time had the Bank of England, which was the world's central bank. It was really the world's first central bank at that time, because the whole world used to deal with the Bank of England. And it was the world's reserve currency. It was like the dollar today. So why did Britain get into war? Why did Britain sacrifice its position as the world leader, militarily and economically and in its empire, in order to go fight a war on the European mainland against its very, very powerful enemies and allies? Why would it get involved in this? It's a very interesting question. And if you look at it, you'll see that it was actually very different from the story that is usually told. So usually, you know, historians like to say, well, Britain's hand was forced because of the invasion of Belgium and they had guaranteed Belgian neutrality. None of that is true. In reality, Britain wanted to fight the war. In reality, the King of Britain wanted to fight the war, and he spent years getting into a secret alliance with France and Russia in order to convince them to attack Germany so that Britain would enter Germany. And in fact, they deliberately lied repeatedly in order to make this happen. They denied that there was a secret alliance in order to make it happen, and in order to make it so that Germany would not think that Britain would enter the war, thus Germany would enter the war. So they lied about the causes of war, and then most importantly, they lied about the financing of the war. In fact, to get just how incredibly unlikely the war was, when the Crown Prince of Austria was assassinated in Serbia in 1914, on the same day in which he was assassinated, the British and German navies were partying together in Kiel, in the north of Germany, where there was a week celebration where the Kaiser of Germany attended and the British Navy attended, and the two navy and the two soldiers of both navies were partying together over that night when the news of the assassination came, and then the celebrations ended. And when they left, the King of Britain, King George at that time, left a message to the people of Germany saying, "Friends today, friends in future, friends forever." This was June 28, 1914. Within 5 weeks, those two navies were at war with each other. How did this happen? It's an incredible story. In fact, for 4 weeks after the assassination was not even discussed in the British Parliament. It was considered a completely inconsequential matter of Europeans fighting with one another, had nothing to do with the British. And then within 1 week, Britain was in war. The British Prime Minister did not expect that he could ever be dragged into war. But that's exactly what happened. And in fact, when more recently we've seen some of the documents come out, it's very clear that the British were setting it up as a trap. In fact, the King of Britain was trying everything to make that war happen without the British people finding out. But how could he pull it off? How could he manage to do that without a vote in Parliament, without the people agreeing with it? Well, it's because he had the money printer. And this is what actually happened. In 1914, there was a bank run on the Bank of England, and the Bank of England only had 31% of the gold it needed to back its currency. People started asking for their money. The bank didn't have enough money. So what did they do? Run the money printer. 300 million pounds were printed in August of 1914. And then, as the money supply increased, they suspended the redemption of gold. They told people they can't get their gold. So basically they went off the gold standard, of course, because now they can't give them gold. And then they tried to borrow. And so they ran a bond auction. And they tried to raise 350 million pounds for that bond auction, which was 55% of the public debt. So imagine the public debt going up 55% over a war. It was a huge bond sale, and with an attractive interest rate. And they thought, of course, the British people are going to buy it. But to their eternal credit, the people of Britain actually did not buy it. In fact, less than a third of the bonds were sold, and fewer than 100,000 investors in all of Britain, out of a population of 46 million, fewer than 100,000 people invested in those bonds to fund World War I. But the army was already at war. So what do? People don't want to pay for the war, but you've already sent the army to war. You hate when that happens, right? It really sucks. I know, happens to the best of us. But don't worry, there's a way to fix this. And what is it? Fiat, of course. Fiat fixes this. If you ever find yourself in a war with no money, don't worry. Fiat fixes this. Just run the money printer. And in fact, what they did back then was truly astounding, because the Bank of England just extended a credit line to 2 of its employees who went and bought the bonds with their own bank accounts. They went and bought roughly 2/3 of the bond issue to fund British entry into World War I was bought by 2 guys. 2 guys got Britain into World War I. Of course, they worked at the Bank of England, so they got the credit line from the Bank of England. So the Bank of England printed a ton of hundreds of millions of pounds to them, more than the public debt of all Britain, and they used it to buy the bonds that made the war possible in 1914. And the next day, the Financial Times, the original shitcoin promotional telegram group of its time, published same thing, same shit they do today, promoting all of the central bank propaganda and all of the central bank shitcoins and scams. They said it was oversubscribed, 250 million pounds more than what the government wanted to raise. People have bought these bonds with so much enthusiasm. We're going to war. Everything is great. That's what the Financial Times published. And then, of course, this only was found out in 2017. 103 years later, some people were digging around in the attic of the Bank of England, and they found a detailed study that is confidential, that was prepared in the 1920s, detailing everything that the Bank of England did during 1914, and it became clear that, in fact, the bond was not oversubscribed. And the Financial Times ran a correction 103 years later. They ran a retraction. You can see it in 2017. So what did they do then? They printed all that money, and they bought all these bonds. So of course they had to stop people from using gold, because if people continued to use gold, the paper money would collapse in value. So they stopped people from using gold. They took the gold from people, they confiscated the gold, and they gave people paper, and more and more and more and more paper. And they collected the gold and they sent it to the US for credit, and that's how the British entered the war. And by getting the US involved in the lending for the war, they made it so that the US now had a vested interest in the war, and in particular in Britain winning the war. So that's how part of the reason why the US would later join the war, because they were lending Britain, and if Britain had lost, the loans would be gone. So it's just one lie after another, and it's just a series of terrible consequences snowballing one after the other. And that's how we end up with hundreds of millions of people dead in violent conflict over the last century. This one lie continuing to propagate, really. And it completely upends our understanding of the war. It changes the way that we think of the war. And it's basically completely ignored by modern historians. Modern historians don't discuss this. It's actually remarkable. It's been out, this news has been out for 7-8 years. You'd think all of the historians that write about it would be interested in it. But, modern historians, they don't like to talk bad things about governments and government financing and central banks, because central banks pay their bills. You generally don't talk bad things about people who pay your bills. And that's why historians and economists don't talk about this. So Britain entering the war is a big deal, because this is likely why the war happened. If Britain had stayed out, France and Russia would likely not have intervened in Serbia. In fact, the assassination itself would likely not have happened. I think this is pretty controversial. There's no evidence that the Russians instigated the assassination of Franz Ferdinand, but there's no solid evidence, but there's a lot to hint at it. And because Britain was entering, but it was secretly entering, it hadn't announced that it was entering, and because they were telling the Germans we're friends forever a few weeks earlier, that's why Germany went into the war. If they knew that Britain would enter, they probably wouldn't have entered. So this lie has been an enormously devastating lie that has shaped our history over the last century and caused so much suffering. It has been a disaster for Britain. It's a disaster for the world. Britain went bankrupt effectively and has been constantly failing as a state since then. It used to be the world's dominant force. Today, it's constantly regressing and becoming more and more broke and bankrupt and inflationary. Prices rose after World War I. There was a huge recession, and the problems of the 1920s followed, which led to the inflation of the 20s, which led to the Great Depression, which eventually led to World War II. All of that snowballing from that terrible inflation. And this was essentially how fiat money functions. This is how fiat money gets installed as a protocol. Governments spend too much, and then they default by confiscating and restricting the movement of gold. They suspend the redemption of gold, they increase the supply of paper notes, and then if they can, they try to get other countries to hold their reserve currencies. So because of this, because everybody's got this, everybody's got the money printer, and everybody's restricting the movement of gold, everybody now has the ability to fight a lot more. War. And that's why people think of war as normal. That's why people think of war as even a good thing. Some people even think that fighting war is good. You know, Americans think they're fighting wars for oil, as if, you know, their military needs to go die in the Middle East in order for them to have oil, which, you know, it will be news for people who live in places like Switzerland or Ecuador or Kenya, who don't have to go and invade the Middle East in order to get oil, and still they get oil. Miracle, right? Turns out it's not actually for oil, but it does work. So, now, interestingly enough, one of the people who was involved in that cover-up by the Bank of England of buying the bonds is a certain guy called John Maynard Keynes. You may have heard of him. They teach about him in school, and they tell you that he's a good guy and he's a smart guy. Well, he wasn't. He was an evil pedophile who raped children for entertainment, among many other horrible things that he did. Yes. And one of the things that he said, you know, he was so impressed with this, he called it a masterly manipulation. He was so fond of this. We're going to finance war without people even finding out. He was really excited about it. And he said one thing, he wrote a letter about it that was a confidential, that was also discovered just a few years ago. And in it he said, the capacity of the Bank of England to continue to lend depends on how much money people are leaving at the bank. If people leave a lot of gold at the bank, then the bank can continue to lend to the government and keep the war going. But if people take out their gold from the bank, then the printing is likely to cause a lot more inflation, and people are going to likely ask for their gold back, and that's going to devalue the money. So in order for this scam to work, people have to leave their money and their gold at the bank. Well, that then forces us to ask a very, very interesting question. Well, what would have happened if people had actually took their money out of the bank? What would have happened if people had an alternative mechanism for trading internationally? If they could move their gold to trade with one another and to trade across borders without having to go through banks and central banks. If they had that in 1914 and 1915, then likely the governments wouldn't have been able to continue with the inflation that would have kept the war going. If the gold could move without governments in 1914, humanity could have rugged the central banks and ended the war. Now, we know something that can move money around very quickly. Bitcoin, right? But unfortunately, 100 years ago, it was difficult to create a Bitcoin. But the premise of imagining something like Bitcoin in 1915 during World War I can help us think about what the world would have looked like. And that basically is the premise of my new book, The Gold Standard. What would have happened if something like the Bitcoin basically existed in 1914-15 and allowed individuals to take their money out of the hands of central banks, and thus made it hard for central banks to inflate the money supply, causing this collapse of money supply, the collapse of fiat money. That's essentially what happens in this book in 1915. History takes a fork where instead of the war continuing for another 4 years of death, destruction, and devastation, we get this wonderful, beautiful machine. This is the Bitcoin of 1915, basically. Imagine in 1915 if the pioneers of aviation tried to, instead of suing each other, which is what they were doing at that time, if they decided, all right, let's find a commercial application of aviation. Instead of trying to keep making money out of each other, let's find a commercial use. Let's do what Henry Ford did for cars. And in this case, you know, with airplanes at that time, it was very expensive to move people around, so it wasn't a likely viable business model to transport people. And even with goods, it was likely not a very viable model to move goods around, because goods are pretty heavy. If you're going to move something around economically at that stage, it would have to be something that's very, very, very valuable per unit of weight, which obviously makes it obvious that there's only one thing that is the most valuable: gold. So if you set up a business for clearing gold with airplanes in 1911, then that allows people to have essentially a decentralized monetary system where they can move their money around without having to trust in their local banks and central banks. If we had built that in 1911, 1912, then by 1914, 15, when the war started and the central banks started inflating, people would have had a choice. People would have taken their gold out. The fiat currencies would have collapsed. And that's the premise of the story that I have. In this book, central banks all collapse in 1915. The war First World War ends, and then empire and war are no longer affordable. Neutral countries like Switzerland and Holland, who, to your credit, everybody here, well done for staying out of World War I. Read this, seriously tap yourself on the back. And in this book, Holland and Switzerland, they don't go into the World War I, and then all the neutral countries, they essentially become the superpowers of the world because they didn't get bankrupt, they didn't lose all their gold, and they had all the gold from the other countries come to them. So based on this, we get a new world order around the gold standard. So now, 1916, basically, the world is back on a gold standard, but it's a lot better gold standard than the previous one because it's a lot more decentralized. There are no central banks. There's no inflation. So then, what would have happened? How would the century have looked like? Well, we would have had free trade. We would have had monetary freedom. People would have had freedom to use money that was not inflationary. There would be no inflation. There would be a lot less war, a lot less conflict, a lot less ability for governments to murder people, and a lot more freedom, a lot more abundance, a lot more capital accumulation. Think about all of the capital that was wasted on war and death and destruction over the last century. Imagine if governments couldn't steal that from us and instead we could spend it and invest it on the things that we want. How different, how much more prosperous the world would have been. So I've spent the last year and a half basically trying to answer this question and come up with this story, which I hope you will enjoy. But before anybody gets angry and says, you know, Saif is now becoming a gold bug and he's going to start acting like Peter Schiff and telling us to buy gold, don't worry, this is still a Bitcoin book. Orange slides, back to orange from yellow. This is still a Bitcoin book because ultimately, for the purposes of this thought experiment, we made it so that gold moved around. But really, let's face it, it's very difficult to move gold around. It's a lot easier to move Bitcoin around. In the real world, Bitcoin still wins this war between gold and Bitcoin. Bitcoin remains our only chance of breaking out of this. Central banks captured gold before it could escape, and now they can always capture it, they can always neuter it, they can always stop it from being free money. But they don't have the ability to control Bitcoin, and they cannot capture Bitcoin. If we move to gold, they will rug us again, just like they've rugged us before, and they keep their wars going. If we move to gold, they will rug us again and keep the wars going. But if we go to Bitcoin, it's over. They cannot rug us. We will rug them. It's over. No more wars. Game over. So thank you very much. Thank you. Thank you. Thank you. Thank you. My books are available outside at the hall. There's still a whole bunch left. If you guys want to come pick your copy up now, and I'm signing them. Thank you so much. Cheers.
Something bold is coming. Introducing the Bitcoin Whiskey Collection, made in collaboration with Bitcoin Magazine. A collection of 2 premium whiskeys made for those who never sell short. the luxurious Bitcoin Reserve with a custom-minted Bitcoin coin, and the ultra-rare Satoshi Reserve, with only 999 ever being produced. Get yours before they're gone. Now accepting Bitcoin payments at goldbarwhiskey.com.
Welcome back to the Bitcoin Magazine News Desk. We're here closing out Bitcoin Amsterdam 2025, presented by Treasury. It has been an epic event. We just heard from Saifedean Ammous, author of the Bitcoin Standard, who also just published a new book, The Gold Standard, a fictional piece on what this last century would have looked like without fiat. How lovely that sounds. My name is Frank Corva, Bitcoin journalist, joined here by master/boss of the universe, Tracy Hoyos Lopez, Brandon Green, general manager of BTC Inc., as well as Christine Lee, crypto journalist extraordinaire. Brandon, I'm going to start with you. These conferences, they come together quite easily, right? No drama, no hurdles, nothing like that, right?
We go to sleep for 4 months and wake up and there's a conference.
Magic conferences. That's how 100%. Things work here, right?
No, I mean, the reality is we have the best team in the whole industry, frankly. I mean, we have a 40-plus person team now that focuses on our events every quarter at this point. And they're the best in the business. They really are. And so, there's so much work that goes into every single light that is put around this venue, every single keynote, everything. And really, it's that love and that passion that makes it feel as great as it does here.
Amazing. Brandon, can you give us a preview into Bitcoin MENA, which is happening next month, Middle East, North Africa in Abu Dhabi?
Yeah, absolutely. December 8th and 9th, it's going to be an amazing event. Obviously, Michael Saylor is headlining it. It'll be his first time speaking in the region as a Bitcoin CEO, and we're excited. We're going to have an amazing lineup. I actually don't want to announce the speaker that I think we're about to announce, but some big speakers in the wings about to confirm, and it's going to be an amazing event.
Yeah. Tracy, I want to say it's a special moment having you here. This is Tracy and I first got to know each other here at this live desk 1 year ago at Bitcoin Amsterdam, so it's lovely to have you back. Please tell us what's going on in the world of Tracy. So Tracy actually is, I think, the head of legal counsel at Kraken. No, not that. I'm wrong.
Chief
I don't even know why I'm here. Chief of staff at Kraken. My apologies. I always get this wrong. So please tell us a little bit about...
the woman who orange-pilled Donald Trump.
Let's go.
Yeah, the best thing I've ever done in my life is not practice law anymore.
That's
it's great.
I hear you on that. Yes.
She's an ex-lawyer as well.
Yes.
Christine's an ex-lawyer.
So you get it.
Yeah.
Let's
go. Ex-lawyer power, also well-dressed ex-lawyer power here at the live desk.
No,
I'm
having the time. First, happy friendiversary.
Happy friendiversary.
I'm having the time of my life. I'm the chief of staff of strategic initiatives to the CEOs of Kraken, so Arjun Sethi and Dave Ripley. I have to say, we have the most handsome CEOs in the exchange industry. Sorry, not sorry.
That's right.
But no, there's a ton of stuff happening at Kraken. We've got Crack. We've got Ninja Trader. There's some great stuff happening, some great stuff coming. And I'm super excited. I love the company I work for. We are the OG exchange. We're the Bitcoin exchange. We're the original cyberpunks. If there's any cyberpunk left in this industry, it's Kraken.
Yep.
It's nobody else.
That's it.
It's us.
That's it.
So come and join us at Kraken.
Let's go.
Since you've been so involved in the policy and getting Trump, into Bitcoin, I wonder where that stands and what trajectory we have. I just saw that Eric Trump has come out to say that more money will come out of gold and flow into Bitcoin. I know he's not part of the administration, but I guess since you're in touch with what U.S. policy and where it's headed, tell us a bit about, with Bitcoin down, where you see next year going?
Well, next year, we're very excited about getting market structure passed at the beginning of the year, which is really what's very important to the industry right now. And that's really where the entire industry's focus at the moment is. It's getting market structure passed.
It's extremely important also to protect. There's some really good language in there to help protect the developers. We saw some lawfare against the developers of Samurai and Tornado Cash. We want to see that come to an end. But we're going to head back to commercial for just a moment, but do not go anywhere, ladies and gentlemen. We're coming back to this live desk right after this to bring it home here at Bitcoin Amsterdam 2025. back to the Bitcoin Magazine News Desk. We are here closing out Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Corva, Bitcoin journalist, joined to my left by Tracy Hoyos Lopez, as I mentioned, the manager/boss of the universe, Brandon Green, general manager at BTC Inc., and Nick Hoffman, head of news at Bitcoin Magazine. Nick, you were a busy man this entire conference, making sure that the people, the plebs worldwide, knew what was happening here at Bitcoin Amsterdam 2025. Please tell us about some highlights, some things you caught, and some things that you broadcasted out to the plebs out there.
Yeah, absolutely. I had an amazing time at the event. I was working really hard with our European social media managers as well as our American social media managers, getting everything across X, Facebook, YouTube, etc., Instagram. And I had an amazing time. I loved the conference, walking around here. This place was packed, from the very beginning, from like 9 a.m. right in the morning on day one. And, Bitcoin price has been dumping today, but I feel like we're at an all-time high.
This is a bullish live desk, Nick. Come on now.
The price is low, the vibes are high.
Price is low, vibes are high.
Absolutely.
He was
Buy the dip, buy the dip.
That's right. Yeah, so yes, but vibes have been high, right? And you guys have been making sure to keep the plebs focused and, buying the dip via social media and all other outlets. So we appreciate that.
Absolutely. Tons of people sharing clips from the live stream, getting hundreds of thousands to millions of impressions per post online. And it's just been great to see. Everyone's enjoying it, whether they're here or at home.
Yeah, love that. Tracy, I want to come back to you. We were just talking about the work you've done with the White House. I have to thank you. Some of the work and the groundwork you did led to my doing some reporting from the White House this year, which has been legendary to have a Bitcoiner in the White House doing this. So I want to thank you on air. And maybe just speak a little bit, like you said, we have market structure coming up and everything else. But also I think it's really important to reiterate to people what was really at stake in this previous election. Did we keep the Bitcoin industry alive, maybe even globally, definitely in the United States, but what sort of effects have you seen play out since Trump came into office?
I mean, it's funny. We were talking right before. Last year I was at the live desk with Aaron, and Aaron was arguing with me. He's like, I don't believe it. I don't believe Trump is going to do anything. He's not going to free Roth. He's not going to do any of these things.
This is Aaron von Weerdem, former editor of Bitcoin Magazine, for the record, yes.
He said he's not going to do any of the things he's promised. And I was like, all right, Aaron, I'm sure.
Do you want to go against this lady? Does anyone want to go against this lady?
It's one of the few times where I'm just like, I'm just going to ignore this nonsense and just like, whatever.
Yeah.
But he then published an article saying, he ate his words, which I'm super happy about. About him eating his words, but also because Trump really came through for us. So what was at stake? The entire industry in the United States was at stake for us, right? Like the Democrats wanted to add an additional tax on Bitcoin mining. Everything was being criminalized because they were doing, everything was
debanking.
Well, it was debanking, and it was the regulation by enforcement.
Yep.
So it was, nobody knew where they stood, right? You breathed in one direction, you were getting a lawsuit. You breathed in another direction, you were getting subpoenaed.
Yep.
So everyone was just kind of freaking out, like, what is the future of this industry if it continues down this path? And now we've seen the future of this industry is unfolding. Innovation is starting again. People are feeling more comfortable. Hopefully we'll have market structure. I'm very hopeful and very bullish on market structure at the beginning of the year.
Yep.
Everyone in the industry is feeling very confident about it. You've been a part of that.
I've been there for all the hearings and the Senate banking hearings, and I've been speaking with advocates from, all across the crypto spectrum. And I've voiced this. I voiced it from the orange stage. I said this is not really, we're Bitcoiners at heart, sure, but really peer-to-peer rights are at stake here. We want to make sure developers are protected, that the industry is protected, and market structure will do that. So it's really, really essential that we see that get across the line. And I will say, some people, Bitcoiners tend to be a bit antagonistic, a bit, we don't, fuck the man, blah, blah, blah. But it's, this is really a point where there are some true advocates and some true Bitcoin believers in the U.S. government, and it's the time to work with them right now to protect people. There are some genuine Bitcoiners and advocates in the government.
They're amazing. I mean, the U.S. has done such a phenomenal job at putting all of these known Bitcoiners, but people that actually understand the industry and the mechanics and the software, how everything works. And there are regulators now, right? So we're having some very meaningful conversations with regulators. They're being very understandful and at the same time doing their job, which is, protecting the public.
100%.
And what I hope that, the impact that I hope that this conference has done in Amsterdam this year is kind of open the regulators here in Europe on this side of the world to all of this. Just take the time to hear, understand this really well. Of course, the responsibilities bared by you and what happens in the markets. But it is such a wonderful community of people with a phenomenal technology. And the future is it's going to be digital. It's going to be Bitcoin.
No question. Yeah, we appreciate that. Brandon, I want to go over to you. I got two questions for you, but I'm going to start with this one. You started BTC Inc., Bitcoin Magazine, as an intern, if I'm not mistaken.
I did.
Did you imagine here, after all these conferences, and as Tracy was just saying, we now have influence in the U.S. government, and that message is ideally spreading worldwide, and it's largely in part of the work that this institution has done. Did you ever imagine that when you came on as an intern?
No, when I started, I was organizing the supply closet.
That's it. And important work, too. Also important work.
We had a bunch of old Bitcoin magazines. None of them were labeled correctly,
Nice.
and the closet was a mess. So I organized that. I started mailing out magazines to people who purchased them online.
Yeah.
Made best friends with the post office.
That's it.
And, I've done every job at this company. And so it's been really cool to both kind of grow alongside BTC, grow alongside Bitcoin, frankly.
Yep.
And to be in the position that we're in right now where, we are able to affect global policy, the U.S. policy, changing the course of Bitcoin in a lot of ways. Like
course of human history, if you will, as a result of changing the course of Bitcoin.
I mean, the course of life in the universe.
The universe, the trajectory of the universe, if
I don't want to understate it.
But we don't want to be too modest at the desk.
Exactly. But no, it's a very special moment in time. It's a very special place to be. It's been such a fun ride already, and we're just getting started.
Love that. On this note of just getting started, are we coming back here next year? Is this? Are we still just warming things up in Amsterdam? Are we doing this again in Bitcoin 2026? Is Treasury doing this again? What's the word?
Absolutely. And in fact, I think on the screen right now, there are tickets on sale. There's the print magazine ad. But in a second, you'll see it pan through. We are selling tickets for next year already. We'd love to see you back here in Amsterdam. I mean, dude, if we have this crowd and we grow too much, we're going to need to get a bigger venue.
We're going to need to get a bigger venue, yeah. Sugar factories and former electric facilities are just not going to hold us anymore. We're going to need something bigger.
Oh, yeah.
Appreciate that. Nick, same question over to you. You've been documenting what's happening in Bitcoin news for 5 years, right? What's happening globally, but again, it's been a very special year in America watching all of this unfold. Did you ever imagine it, and what have been some highlights for you in covering the news this last year?
I could have never imagined Bitcoin got to be where it is today, and going into the last election, I was really worried that things would have gone south if we hadn't won
Nick is on the Trump administration. He's part of the Trump administration. Just a little FYI.
Nick runs the Trump administration.
Correct. Well, alongside Tracy, right? Yeah.
Yeah, but no, it was definitely a little bit worried there. But I'm really happy to see things go the way of our industry, and now things can really explode from here with any innovation. Man, in the last year, so much has happened. I got to say, freeing Roth was probably my favorite highlight of the last year. Seeing him get free and post that picture that one night of him walking out in the prison uniform holding the little plant, that really warmed my heart.
Yeah, appreciate that. We could thank some of the work that Tracy did for that. Brandon, David Bailey, a lot of people behind the scenes working hard to have that happen.
Can I say something on
Please.
this too? Because here we are in Amsterdam, and I'll look straight at the camera, right?
Let's go.
In the middle here. This desk of people right here and the people in this venue, we're the ones that made some of this stuff happen in the United States. It's not like there were some higher powers that we just tossed it up to and those people did it. Bitcoin is at the point where we can make a difference. And we're here in Europe. There's all sorts of better regulations. There's freedoms that need to get introduced. There's so much work to be done here. And if you're on the sidelines or you're just kind of watching what's being done elsewhere and you're feeling like, oh, it's not up to me to kind of do it over here, that's wrong. It is up to you. It's up to every single one of us to join forces. We are part of this movement. We run this movement. And we should create the change we want to see in the world for Bitcoin. We want to see Bitcoin succeed, and we should be fighting every day to make Bitcoin succeed. And I want everyone to feel like they have not only that ability, but that responsibility.
Ladies and gentlemen, you just saw Brandon Green channel Mahatma Gandhi, and I think we really can't go any higher than that. So I'm going to leave it here, and we're going to wrap it up. It has been a complete honor broadcasting to all of you out there over these last 2 days. Some absolute legends at the desk, including the three people next to me. Complete privilege. Again, I'll say one more time, we have Bitcoin MENA coming up next week in Abu Dhabi. So if you didn't get enough of this, obviously be sure to tune into that live stream, but also get your tickets and get over to Abu Dhabi. Just want to send a thank you to everyone out there. And if you were watching this, you were like me. years ago, I used to watch this live desk and think, wow, it's super, super cool. That's going on in Amsterdam. This is going on over here in Miami. I'll get to one of those conferences one day. Here I am behind the desk, and that speaks to what Brandon said. I decided to get involved one day, and I think it's really important that everybody out there doesn't just sort of think about all this as an inspiring message and then forget about it. Get out there, do your work as one of the Bitcoin plebs, if you will. And yes, we thank you for all your support. Thank you for watching, and this is us signing off from Bitcoin Amsterdam 2025. Thank you again, everybody. Take it easy.